would get better than stable, more or less. And it didn't. Didn't go down. It didn't go up either.
There's some bad news that's already in the stock, the way that the chart looks. So we'll see what happens this morning. Throughout the trading session in a weak market.
Yeah, you don't usually.
It's not an AI stock.
And you don't usually see huge variation in the trades of Home Depot in any given day. You're not going to see it go up or down 10%. That's a pretty rare event. However, it's also a pretty rare event that they've missed earnings for 3 quarters in a row. We have data back as far as 1995, and it hasn't happened since at least then, if ever.
They're not really talking about tariffs and.
So 50% of their portfolio is from the U.S., is from sort of this North America region, not subject to tariffs. They obviously, like many others, diversifying their supply chain. And so initially, as I mentioned, they said we don't generally intend to raise prices because of tariffs. In August, when the tariffs were a little higher than their original statement, they said, okay, look, we may have to take price, is the phrase, on some categories. And so I asked McPhail, did you do that? And do you think that was at all some of the weakness? And he said, we did do it, but he called the price increases modest. He does not subscribe to the theory that was the reason for pressure on the quarter.
Take price? What is it?
Take price. They say we will take price, which means we're raising prices.
Because consumers are choiceful?
That's right. They
what's
sure are.
What's the story with why do retailers feel like they got to use different words in the normal English language?
Makes it feel less bad.
I think it's like a McKinsey thing, like shrinkage.
Yeah, they're trying to.
Well, it's like finance people use all sorts of completely ridiculous terms.
I was efforting something yesterday, and I didn't mean it. I just said it for you, because you don't like it either.
Well, efforting's less finance. That's more journalists.
Right.
We're going to effort to move on from here. Is that all right?
Thank you.
You're going to be around, right?
See ya.
Yeah. All right. See ya. Meantime, the U.S. Department of Labor's website appears to have been updated overnight, revealing jobless claims data that has been delayed by the government shutdown. It says initial jobless claims totaled 232,000 in the week ended October 18th. Continuing claims came in at 1.96 million, up slightly from 1.95 million in the prior week, Joe.
It's been a while. We used to talk about it all the time, Khashoggi. Yep. This is where we are now. Full circle. President Trump's going to meet with Saudi Arabia's Crown Prince, Mohammed bin Salman, today in Washington, D.C. Leaders are expected to talk about strengthening defense, trade and technology ties, as well as AI and nuclear energy. Ahead of the meeting, the president said he planned to approve the sale of Lockheed Martin's F-35 fighter jets to Saudi Arabia, and that could potentially alter the military balance in the Middle East. The U.S.-Saudi Investment Forum is scheduled for tomorrow. Punchbowl's Jake Sherman says a dinner that President Trump is holding for the Crown Prince is expected to include Tiger Woods and Elon Musk, among other guests. A couple of, I don't know what the relationship is there. One's a gazillionaire and a genius. The other one is one of the greatest golfers of all time. Yep. But who I believe is dating one of President Trump's son's ex-wives. So it's all very strange, and they're all friends, and they have dinner. And I don't. This is I don't know if I don't know if I'm current on that, but that was happening. This has bin Salman's first visit to the U.S. since 2018, when Saudi agents killed Jamal Khashoggi, the journalist, in a Saudi consulate in Turkey. And, you see stuff, people get up in arms on Twitter, obviously. There's still some hangover from all the way back to September 11th. So many of the hijackers we have a long, complex history with Saudi Arabia.
We've long talked about so since 2018, what is the penalty? Do you think about it in the context of a penalty box?
Kind of, don't you?
Well, and is there a duration to that penalty box? We're going to talk about Larry Summers in just a moment. Are you canceled forever? What is the appropriate thing? And are there different measures for different people, for different offenses?
Because there are economic concerns. We've actually, in the past when we've talked about this, I've said that things are gray. You are more black and white about a lot of things. And there are countries that do things that there's no way we understand or would ever tolerate things like that. And a lot, not just in the Middle East, China, Russia.
By the way, I don't think...
But if you're the king of a country, there was a time when kings could do whatever the hell they want. I think when they killed this guy, they didn't even think that they were, look at what Putin does in terms of his enemies. I mean, there are things that happen. We can't be naive.
And we don't do
can't
business
be
with them.
Not for a while. And apparently we do, because here they are.
I'm saying we don't do business with Russia.
No, but, well, we would. We would if economic things, and if Ukraine...
This is the great complication.
It is, but you're right about the penalty box. If you misgender someone, I think you can be in a penalty box forever. There's no coming back from that. But these other things, murdering someone is much less.
Well, let me ask you about this then.
All right.
So, former Treasury Secretary and Harvard President Larry Summers saying he's going to, quote, step back from public commitments. This follows the release of emails that showed that he kept up a friendly relationship with the late sex offender Jeffrey Epstein after Epstein pleaded guilty to soliciting prostitution from an underage girl in 2008. It also follows President Trump's ordering the Justice Department to investigate Summers and other prominent Democrats' ties to Epstein. In a statement obtained by CNBC, Summers said, "I am deeply ashamed of my actions and recognize the pain they have caused. I take full responsibility for my misguided decision to continue communicating with Mr. Epstein." Summers says he will continue to teach. He's also, we should mention, a board member at OpenAI. We don't know whether that designation is going to change or not. And here we are. We talk about, moral lapses, moral, maybe worse than that, depending on how you think about it. We haven't really talked about President Trump in regard to the Epstein files. Or, by the way, it's interesting to me, though, that here we have Larry Summers voluntarily stepping back from public life effectively on his own.
Well, his stuff was way after 2005 when Trump threw him out of Mar-a-Lago and alerted the FBI, apparently, to things that were happening.
I understand that.
I mean, there were a lot of, and people,
I'm not here to defend Larry Summers.
No, but some of the names that we're talking about, this was like after 2008 even. There were parties with Stefano. I mean, the names that were at parties well after people should have known what was going on. That's why, it's easy to cherry pick and select things. I don't know, with Trump, you want to go there, but I don't know. I think
I'm
he's
just saying that what's so...
I don't know. You know what? Neither one of us.
No, but here's the look. The question is, in this environment, I would say, prior to President Trump, really, I mean, thinking about the Carroll lawsuit and everything else, right? There was a lawsuit against this current president that involved allegations of rape. That's what that case was. And he is now the president of the United States.
He wasn't found guilty of rape, obviously.
I said those were the allegations. And,
right.
And you heard what the court effectively said about all of that ultimately.
Well, that was the judge.
The judge, a judge,
right.
yes.
You know what my feelings are.
I know you have different feelings than what the judge's feelings are. What I'm saying is, it feels like the window around what people think about morality, either care about morality, don't care about morality. Is it selective to certain people? We're willing to...
The left is making it selective to certain people. They're making it almost solely to Trump. When you're probably hearing more from people, Virginia... I don't think it's... But there's no allegations of any wrongdoing yet. Maybe there's something in these files that haven't come out. But there's no allegations, and you're making that leap to it long before you're really able to. And
my only point is, and we have no idea what Larry Summers' full engagement is with Jeffrey Epstein, but there's not an allegation. There's emails that are more than unattractive. It seems. I don't know enough about it.
I don't either. What year are we talking about? We're talking about way after 2000.
All I'm suggesting is that sort of
okay, let's say you're back in the. Let's say you're back in. You got pictures of Trump back in the '90s with Epstein. Mm-hmm. Is that problematic for you?
I think it's not great.
Well, it's not great for anyone. It's not great for anyone. But then, as I say, you got your other friends like Clinton. How many jet rides well after the '90s down to the island?
Well, we'll see, and that's what we don't know. And this, and then the question
Just
is,
don't look at it.
and then the question is,
left looks at it selectively.
and you don't think that the right looks at?
Well, we'll see what's in there now that if it does come out. And we are in no position to know anything about any of this.
But I will say
And to
this.
cast
You know, I
stones
remember but I mean, there was the grab 'em by the you know what line. There was obviously this allegation of rape case.
Now you're getting
I'm just saying.
to.
No, you can't.
So this is going to be so going back to this is what you're going to be to go after Trump at this point. This is your cudgel.
It's not a cudgel. What I'm
It's
suggesting
totally
to
a
you is that
cudgel.
there is for whatever reason, and I'm trying to understand it. You talk about selective sort of context around different individuals, and what I'm saying is there is clearly a shift around selective thinking around questions about morality about certain people for certain reasons.
I mean, no one's saying any of our leaders are morally perfect. And once again, you can go back, you know, take your pick of who you're talking about there. But I mean, how long did we pander in the Russia hoax? I mean, anything to try and get this guy from the left. It's almost. You know, so now this is the latest little.
The Russia hoax thing. By the way, Marco Rubio ran an investigation himself, who's now the Secretary of State. Marco Rubio into the if you go back, and read the quote-unquote Russia hoax that you're talking about, and Marco Rubio was the person who led.
Okay, fine. I don't know what that has to do with it.
Well, but I'm just saying that when you know that somehow a political argument, it was at the time. It was being led by the guy who's now the Secretary of State.
The hate for the hate.
It doesn't matter.
Why does it matter who he was? Not there was nothing there, Andrew. And the left, you would have thought there was Pulitzer Prizes were handed out for that. There was nothing. He was not a Russian agent from Putin. That was all conjured up by the prior administration and by Hillary Clinton.
And I'm saying that a lot of those stories were written based on information. I mean, now that we're relitigating the past. Based on
you've gone over now.
That involved Rubio.
You've gone on the pink hats. You have thrown in E. Jean Carroll.
We're having a conversation about.
You know, it's all been litigated, and 77 million people voted for him. Not you, but 77 million people did.
No, and that's the point.
So we got a horrible country that has no morality.
No. The question is, so here we are now debating the morality effectively of Khashoggi this morning, right? Who's visiting at the White House. And we're having
Khashoggi's dead. You mean?
Sorry, MBS. And we're having a debate or a conversation about whether somebody like Larry Summers should be stepping back from public life or not. That is the question. And I'm saying, given this sort of context, what do you think about that now?
You think Trump should step back from public life because Larry Summers is setting some type of example?
I'm just suggesting to you that there is a wide aperture here that people are using in terms of how they want to think about different people for different reasons.
Each of those individuals know exactly what went on, and I don't.
I don't either.
So I wouldn't deign to know. If Summers feels like he's in a position where you step back, you got to step back. He's deeply ashamed. So I don't know what's in there. I don't know what happened either. I don't know if he's at the island. I don't know. I don't know anything. Coming up, much more on the markets. Squawk will be right back. Joining us now, Marta Norton, Chief Investment Strategist at Empower. Good morning. Are we going to talk fundamentals, technicals, both? What are you using to gauge what investors should do here?
Well, I mean, what I find so interesting about the current environment is that the fundamentals haven't really changed, right? And we're in the midst of a very strong earnings season where we're seeing revenue growth deliver, not just earnings growth deliver. But of course, the sentiment has shifted so much. And the very CapEx that investors were rewarding just a month ago is now the CapEx that investors are calling into question. So in my mind, of course, you want to focus on the fundamentals, but it's not necessarily the fundamentals that is shifting market behavior. It's the sentiment that we're watching right now.
There are some great, we haven't talked about this, Sorkin, but there's some great quotes from this article on the front page of the journal, Blue Out Capital, saying, you know, once you get to a couple of $1 trillion of what you're talking about, we're not really, you know, the numbers don't even matter, but we are talking trillions that we don't even know where the money is coming from. So is it surprising that maybe people are taking a step back and looking at some of the, to try to separate the hype from the actual reality of investing in AI?
I think it's unquestionably a good thing that we're having a second check of these numbers. I mean, really what we've seen since the Liberation Day recovery is a market that has only priced in the right side of the probability distribution. And now we're talking more a fuller range of outcomes here. And I think that makes the pricing a little bit more realistic. When we were looking at valuations, and this is true for tech and it's true for hyperscalers, so I'd also say it's true for the market overall, you're looking at these valuation rankings, they were in the 9th and 10th deciles of their own history. And that's when valuations really start to matter. So this is some vindication for folks who were saying, hey, you still should care about the price that you're paying for these things.
Well, we've talked about the S&P 493 a lot. And if the market, you know, the expression live by the sword, die by the sword, if the AI excitement is part of the reason that we bounced off those April lows like we did, I mean, what, 30% plus, even more maybe in the NASDAQ, should, even if the earnings season was great for most companies, should what's happening in AI take down the entire market now? It took the market up. We shouldn't be surprised if it takes the market down.
That's right. We've ridden it higher, and now you're looking at technology that accounts for, what, 36% of the S&P 500? So it feels like the U.S. equity market at this point in time is one big bet. And I think the caution I would offer investors is when you take a look at spending plans for 2026 and beyond, and the interplay between capacity and demand, 2026 looks like another capacity building year. We're not necessarily going to see broad-based deployment. They still have to build the capacity for that broad-based deployment. In other words, there's plenty more time for more questions to emerge around this spending.
Is it a bifurcated market? So would you look at, you know, normal companies that have nothing to do with it? Maybe the benefit from AI down the road. But what was the EPS gain for the most recent reporting season?
I mean, yeah.
Double digits.
Double digits, right. And you know what's interesting about this is there's been such a desire to see a broadening out, not just from price performance, but from earnings performance. But when we look into 2026, perhaps you could see some areas that are beginning to show strong earnings growth, but it still remains a tech story. And so I think the broadening out is still to come. I don't think we're really on the precipice of that. But one thing I think we can take encouragement from the dot-com era is that when you look at the long-term effects of what that tech cycle did for the economy, it really did accrue gains to the broader economy. And I think that's what ultimately...
How many years?
Eventually. I mean, years, right?
Yeah.
But ultimately, that's what we're looking for.
Is it similar, you think? Do we need a washout like we did or not in 99? Because it is different in certain ways.
It's different.
There are some fundamentals in earnings and actual results to a lot of these companies. They're not pets.com.
Right. There's a health degree that we see today that we didn't have back then. I guess I'm not at the point where I'm calling this a bubble. I'm looking at this as extreme valuations, but I still think that, to your point, these companies remain healthy. And when you look at their debt issuance, it certainly has crept up, But that's been a relatively recent phenomenon. That's really been in the past few months.
Here, Marta, would you tell clients?
Listen, I think that the valuations are high enough that we need to have them come down a bit more before we move in at a broad level, though there's probably idiosyncratic opportunities opening up.
Okay. Marta, thank you.
Thank you.
Okay. Anything on Epstein? You got anything? No?
Nothing for
Okay.
Coming up, Fed Governor Lisa Cook responding to allegations of mortgage fraud sparked by the Trump administration's housing regulator, Bill Pulte. We're going to bring you details when we come right back.
We're one of the last remaining manufacturers of men's tailored accessories in America, and we cut and sew tens of thousands of ties every year. We import fabric overseas from China, which is where most of the world's silk comes from, and from Italy. When we first heard about the tariffs, in some ways we were excited, A, because we didn't think we would be subject to the tariffs based on what President Trump had shared. Then we also were hoping that the contract manufacturing side of our business would grow. In other words, we thought other necktie companies, many of which import directly from China or from Italy, would ask us to start making their ties and bow ties. In fact, we've gotten no new business since these tariffs took effect. So really, there's no winners here. Consumers are paying more, and we're making less money. At a certain point, it may put us out of business. I've been trying to get a Senate bill that I wrote, introduced into Congress, which basically exempts American manufacturers from paying tariffs on raw goods that we import to make our products. Somewhere between 80 and 90% of all American manufacturers import their raw materials from overseas. So if they're really looking to protect American manufacturing, then they would remove the tariffs from us.
Welcome back to Squawk Box. Lawyers for the Federal Reserve Governor Lisa Cook disputing Trump administration allegations that she committed mortgage fraud. In a letter to the U.S. Attorney General, Cook's attorney said that the case against her rests mostly on a single reference in a 2021 mortgage document that is outweighed, they say, by other more specific disclosures that Cook gave about her homes. It's the first response to an August criminal referral by the Trump administration. Housing official Bill Pulte, who has accused several Democrats of misconduct. Meantime, Reuters reporting that 8 Democratic senators are asking a congressional watchdog to investigate whether Pulte overstepped his authority by making the criminal referrals against perceived enemies of the president.
Coming up, details on a Republican plan to help control health care costs. It's one of the key issues that led to the government shutdown as it flares up again. But first, as we head to break, here's a look at yesterday's S&P 500 winners and losers. Republican senators are floating a health care plan that has the backing of President Trump. Emily Wilkins joins us now with more. Good morning.
Good morning, Joe. Well, yeah, senators, right now they're racing to find a solution to keep healthcare costs low, given that coming expiration of those premium tax credits at the end of the year. The Republicans are warning that just a simple extension of those credits is not going to be able to pass both chambers. So now we've got Senator Bill Cassidy. He chairs the Senate committee overseeing health care, and he's pitching a new plan, basically to let these premium tax credits go ahead and expire at the end of the year, and then use the savings to provide prepaid health care savings account to those who sign up for the lowest tier of plans on the Affordable Care Act marketplace. Now, as you mentioned, Trump himself endorsed spending the funds directly, not rather on the tax credits, but giving that funding to Americans. But the idea has raised concerns among some health policy experts. The Kaiser Family Foundation's healthcare expert, Larry Levitt, tweeted that without the enhanced ACA premium tax credits, people would have a harder time buying plans with affordable deductibles. But he then went on to add that he does not believe that this plan from, and he tagged Senator Bill Cassidy, would cause a premium death spiral in the same way as other health account proposals that have been floated. Now, you remember Senate Majority Leader John Thune, he promised Democrats a vote on the bill of their choosing in mid-December, meaning that lawmakers are under the gun to find something that can pass both chambers. Otherwise, you're going to see those premium credits expire and have no alternative there. Guys?
The health savings account, we're hearing that from a lot of different sectors at this point. Emily, we had the other day a long discussion about that with on the set here. A lot of people have talked about that being something that that might make sense. It's been years. I don't know why we haven't tried it up to this point. Bertinelli was on. Mark, is his name Bertolini?
Bertolini.
Yeah, Bertolini was on talking about that as an answer of Oscar Health. I don't know if you saw any of that interview that day, Emily.
Well, I know, at least from the discussions that I've heard up on Capitol Hill, yes, there's definitely an openness to the idea of these health savings accounts. I think at the same point, some of the other concerns that I've also heard is that if you are someone who has a high medical cost, if you're dealing with a really devastating illness and you are racking up those hospital bills, you know, a health savings account, it's great for the initial chunk, but eventually there is a giant bill that is coming. And I think for certain folks who want to see a higher premium than the bronze plan, you want to get something that maybe has more coverage. You wouldn't necessarily get the HSA. And I should note that Cassidy has asterisked this with, this is something he's still discussing with folks. You know, they have only a couple weeks to come up with a proposal. So he's still kind of trying to workshop it as he's putting it out. But it is just notable, of course, given that they are going to have to figure this out before a vote in just a few weeks.
Yeah. All right, Emily. Appreciate that. Thank you. Just looking at this, Andrew. Yeah, Summers' emails with Epstein were 2018 and 2019.
Yep.
Asking for advice on pursuing a romantic relationship. And that was 10 years after Epstein had pleaded guilty to all those charges in 2008. So I don't know if it's an apples to apples or not when the relationship that ended in 2005.
You're talking about Trump.
Talking about Trump, you know, comparing morality. I think Larry has a lot to answer for.
I'm not saying he doesn't have a lot to answer for.
Right.
And by the way, it's not coming from the Democrats. It's the Republicans who are.
Steve Bannon is not. Don't use Steve Bannon or Marjorie Taylor.
Tucker Carlson.
I can't believe that these people are on Democrats' lips now. Marjorie Taylor Greene, Steve Bannon.
Yeah, those are the people.
And Tucker Carlson.
The people who have supported this president. Been the most vocal supporters of the president.
Okay.
Right? That's where it's coming from. It's not.
I just would have never believed that MTG would be mentioned so frequently by the left. It's just, it's like come full circle.
I'm just suggesting that's where it's. That's you. It's the party that has supported this president who's calling for all of this.
Okay.
That's where it started. Okay, coming up, Goldman Sachs forecasting an oil price decline next year. We're going to speak with one of the bank's commodity experts after this break. Welcome back to Squawk Box. Goldman Sachs says that oil prices likely to fall through 2026 as rising production is creating a surplus. Joining us right now is Dan Struve. I've always mispronounced his name. Every time you come on, I apologize. It kills me. Goldman Sachs is co-head of Global Commodities Research. Good morning to you. We're looking at WTI crude right now at 59.96. And you think this is coming down by a lot?
We have WTI declining to a 52 average for next year.
Okay.
Brent mid-50s, TI low 50s. We think 2026 will sort of be the last year of this big supply wave the oil market is going through. And then we think in 27 the market will rebalance.
And rebalance to what?
So we eventually think that after years of low investment, with demand growing through 2040,
right,
and with U.S. shale maturing, that eventually by late 28 or so, you should go back to Brent 80
right,
and TI 76. But right now, the focus is very much on the big increases in stocks, in oil inventories we're seeing at a pretty big pace, 2 million barrels per day over the last 90 days. Right. But we think this is sort of the last big supply wave the oil market has to work through.
So if you're right, nobody should be buying oil right now.
We think that there will be an attractive opportunity down the road.
Down the road, but not now.
Right now, we actually recommend to investors to express or view that prices will decline further,
right,
with short positions.
So the question, though, so you're suggesting people actually short oil. At what point? I mean, timing is a very tricky business, whether it's equities or, frankly, the oil business. So maybe it's different in your business. Is it much easier to time commodities, you think?
So I think that commodities are more spot assets.
Right.
We typically find that oil prices sort of run perhaps 2 quarters ahead of inventories data, but equities, especially for instance the tech stocks, can easily look decades ahead. So that's why we're laser focused on the inventories data, which support our view that the market is now in a large surplus that we estimate at 2 million barrels per day for next year on average.
And if you think, therefore, that WTI and Brent's going to drop precipitously, but basically $10 or $8.
Yes.
That should have a real impact, a boost to the economy, the broader economy.
We think the net impact on U.S. growth would be modestly positive because the boost to consumer spending from higher real disposable incomes should outweigh the slowdown in U.S. shale capex and U.S. shale production, which eventually will help to rebalance the oil market.
Well, that's what I was going to say. So where is this supply going to come from long term?
In the long term, supply growth, we think, will mostly come in the long term from OPEC, which still has spare capacity and is investing in expanding its production potential, including natural gas liquids, and some modest growth from U.S. shale also in the early 2030s, but that would require Brent around 80 or so. And we think that's necessary if demand keeps growing through 2040, which is our base case. Okay,
we have MBS in town in Washington with the president. What's Saudi's play in all of this? And I ask partially because, they went down the whole road a couple years ago of, they're going to build NEOM, they're trying to diversify their entire economy away from fossil fuels. How quickly is that ever really going to happen? And do you think that whole idea has shifted?
Yeah, so we think that Saudi Arabia has raised production this year for several strategic reasons to increase the cohesion within the group, to make sure everybody is contributing to stabilizing the markets. And we also think that Saudi Arabia, by bringing back to the barrels to the market, has reduced this perception in the oil market that there is plenty of spare capacity, which had been weighing on oil prices. And finally, if the market goes lower from a price perspective in 25 and 26, this should also slow down non-OPEC capex and support demand. More broadly, we think that core OPEC leaders like Saudi Arabia and the UAE can deal with a period of lower oil prices, high reserves, borrowing capacity, and to your point, they can reprioritize capex into the tech sector, for instance, with big AI ambitions there.
Dan, I want to thank you for coming in this morning. Appreciate it.
Thanks a lot.
Thank you.
All right, coming up, a multi-billion-dollar deal between 2 leading paint companies. Details are next. As we head to break, here's AccuWeather's Bernie Rayno with your business travel forecast.
We're tracking 2 storms on our Tuesday. The AccuWeather exclusive forecast calling for some rain in Chicago, Detroit, thunderstorms in Nashville, even a couple of showers in Washington, D.C. We're dry in New York City. How about some showers around Los Angeles, San Diego, Phoenix, Las Vegas? That can cause some travel delays. And that rain can slow you down in Chicago this morning. Wind with some minor delays in Boston this afternoon. To help you make the best decisions and be more in the know, make sure to download the AccuWeather app today.
Paint producer Akzo Nobel planning to acquire fellow paint maker Axalta Coating Systems. And what the companies say is an all-stock merger of equals. The firms say that the combined company will have a $17 billion flow of revenue. Akzo Nobel shareholders will own 55% of the company. Axalta shareholders will own the rest. The new entity will have dual headquarters in Amsterdam and Philadelphia. And two Democratic senators are pressing the DOJ and Treasury Department to investigate World Liberty Financial, a crypto company closely tied to the Trump family. In a letter obtained exclusively by CNBC, Senators Elizabeth Warren and Jack Reed raising concerns that the company may have sold tokens to illicit actors in North Korea and in Russia. The senators are asking for a probe into the company's actions. And news just out from United Health, the company has named former FDA Commissioner Dr. Scott Gottlieb to its board of directors, effective immediately. Shares of United Health down about 45% over the past year. Coming up, Home Depot, an analyst, Brian Nagel, is going to join us to break down the morning's key earnings movers, especially since he follows Home Depot down about at almost 3% at this point. We'll be right back.
A lot of
As we reported earlier, Home Depot out with third quarter results. Joining us now to break it all down, Brian Nagel, Senior Equity Research Analyst at Oppenheimer. Good morning, Brian. How are you?
Good morning. How are you doing?
I'm doing okay. The stock's down not quite 3%, and it's been in a little bit of a decline for a while, down from the low 400s in this environment. Was there anything that really stood out to you that was far worse than what the market was expecting, Brian?
Well, look, Joe, I think that's a great question. And, as I read the release, okay, and so just to contextualize as well, Home Depot's releases are rather short. We'll obviously have the conference call here in, a couple hours or so. But, look, what I heard, as I read this release, I think the key message from Home Depot, you had some weather noise, right? The weather was basically better in the quarter. So, that may have been a negative because at this time of the year, you need some bad weather to start driving sales. But really, I think the key message from Home Depot is that behind the weather noise, the business hasn't gotten worse. But importantly, it's not getting better. And I think that's why you're seeing the stock, just like you said, down, pre-market this morning and having been on a rather significant slide lately because, as we've talked about in your show a lot, there's for a long time now, there have been these expectations that we'll get some type of recovery in home improvement. And what Home Depot said today, I think, at least so far, is that, look, that's not yet happening. So I think what's happening is, the market's basically recalibrating again its expectations for long-awaited improvement within the home improvement space.
How does it relate to what's going on in housing and on the big picture of what we're doing? The Fed's trying to deal with it. There's affordability issues. Everybody's talking about that. How does the intersection of the housing market, mortgage rates, and Home Depot, is it easy to describe? I mean, there's new sales, there's existing sales. There's sometimes when it's hard to buy or move, you have people refurbishing their homes, and that's good for Home Depot. How is it all playing out, interrelated, Brian?
Yeah, look, I mean, I think's happening right now is you have this, so to say, convergence of negative factors. Okay, so on the one hand, housing, and probably I think the simplest way to think about the housing market in the United States, it's stagnant. Houses are just not moving. So with housing stagnant, that takes away what typically is a key catalyst for home improvement related spend. People just are not leaving one home, going to another, buying their first home. That's stagnation. Now, the second piece, which I talk about, this convergence, I cover a number of names within the discretionary consumer space. I've been talking about this for a while now. I think, the consumer backdrop, the discretionary consumer backdrop in the United States is going from soft to softer. And I think that's happening quickly. So as you think about Home Depot, I mean, they're not getting any help from the housing market. And I think on top of that now, and I think we saw this today in results, is that discretionary spend is getting weaker. So that's why you're seeing these comp store sales, like I said a moment ago, really fail to get better. Or look at it a different way. I mean, the comp store sales have slowed, here in the third quarter from what it was in the prior quarters.
Right. Do you expect this to be will we see the same type of trends in Lowe's and in some of the other retailers at this point? Is there any comparisons that you can make or broad brush strokes based on Home Depot?
Yeah, so Lowe's will report tomorrow morning. I very much expect it to be very similar to what Home Depot is saying today. Okay, so there's the two companies in this environment are probably operating similarly. Okay, so I think the message from Lowe's will be similar to Home Depot. But as far as the consumer, and look, we're getting very, very close now to the all-important holiday selling season. I very much take what Home Depot is saying today is another indication of a weakening discretionary consumer, and I think that bodes poorly for spending as we head into the important holiday selling season.
All right, Brian, what do you expect the stock to do for the rest of the day? Are these the worst levels? You expect it to come back, or tough to say?
Well, look, one positive here. I mean, so I have not been recommending Home Depot for a while. Okay, my concern has been exactly what we're talking about here, potential for weaker sales. But I also think you've had a stock that's been rather expensive. So on the one side, as I'm watching my screens right now, I mean, Home Depot is getting. I mean, it's not there yet. Okay, but it's getting to what I would consider to be some valuation support levels.
Right.
So I think that's going to help the stock. But look, I think you probably today, I don't think there's a rebound, and I think you probably have incremental weakness through the day.
Okay. All right, Brian. Thanks for the quick turnaround on the results. All right. See you later. Thanks.
Thanks.
It is 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan. Becky is off today. Among our top stories, President Trump is going to be meeting with Saudi Arabia's Crown Prince Mohammed bin Salman today in Washington. The leaders expected to talk about defense, trade, and technology ties, as well as AI and nuclear energy. And the U.S. Department of Labor's website appears to have been updated overnight, revealing jobless claims data that had been delayed by the government shutdown. It says that initial jobless claims totaled 232,000 in the week ended October 18th. Continuing claims coming in at 1.96 million. That's up slightly from 1.95 million the week prior. And another big name on Wall Street warning about AI stocks now. JP Morgan's vice chairman, Daniel Pinto, saying there's probably a correction there. He made those comments at a Bloomberg conference in South Africa this morning. Pinto also saying a downturn will cause shockwaves across the markets. I want to get a rundown of today's market action. Checking the futures right now, you're looking at the Dow off about 281 points, NASDAQ off 146 points, the S&P 500 looking to open down about 30 points. I want to show you treasuries, the 10-year note and the 2-year, the 10 at 4.1, the 2 at 3.5, and then Bitcoin, which did drop, we believe, below 90,000 for a hot second there. We're now at about $91,428. We're going to get over to Frank Holland. He's got a look at this morning's pre-market movers. Frank.
Hey, good morning, Andrew and Joe. Take a look at crypto names this morning, including Robinhood, Coinbase, and Strategy. Take a look at these moves, continuing their slide. Those moves coming along Bitcoin's downward turn that you just mentioned, dropping into the 91,000 range and erasing all of its gains for the entire year. Even still, Michael Saylor's Strategy disclosed yesterday its biggest Bitcoin purchase since the summer. Back to the stocks. Coinbase pulling back about 1.5%, Robinhood about 1.75%. Strategy right now down nearly 1%. Let's move on to big tech. Google parent company Alphabet seeing kind of a slight bump this morning while most of the other Mag 7 names are negative. Take a look. Alphabet shares up just about 0.25%. Loop Capital upgrading Alphabet to a buy, also raising its price target to $320 from $260. Analysts are pointing to strong Google search revenue and growing momentum within Gemini and Google Cloud as the reasons for their bullishness. Again, shares of Alphabet up just about 0.25% right now. Also looking at shares of Deckers higher by just about, well, almost 1% this morning after Stifel upgraded the retailer to a buy from a hold. Analysts, they have a very positive outlook on growth despite some of the moves for the company this year. You see over the last year, pulling back more than 50%. They're really bullish on the Hoka and the UGG brands. They say Hoka is a category-defining brand for performance running, while Uggs can outpace overall casual footwear in general. Now, for more on that and other top analyst calls today, subscribers can head over to cnbc.com/pro for more of the detail and the context around those notable upgrades and downgrades. And Joe, over to you. Here's the question. Do Uggs go with Lululemon pants? Oh, Andrew,
Frank,
I'm sorry. Back over
I
here.
want to thank you.
No.
I don't. What did you say? Does Uggs go with?
I know Joe's a famous wearer of the Lulus. So do Uggs and Lulus go together? I can't even figure it out.
You know, you could be wearing the Uggs while you're doing your yoga.
There you
Possible.
go. It's all possible.
By the way, Uggs make some good men's stuff. They do.
Yeah.
Let's
Tom
just
Brady,
give them
didn't
some
Tom Brady
credit.
endorse it? There's a lot of pretty good looking stuff, actually.
Frank, thank you. Appreciate it. Coming up, the AI boom and valuation concerns. We just mentioned Daniel Pinto from JP Morgan making some comments about that. We're going to talk to tech investor Mitchell Green of Lead Edge Capital. He's going to tell us about the trends to watch on the AI playing field. And if the markets are not blowing your mind right now, Oz the Mentalist will. He's going to be with us to read our minds in just a few minutes. It is a remarkable thing to behold. Do not miss this morning. I beg you, I promise you, it'll be something. Back after this.
Concerns about valuations in the AI arena hitting the global markets ahead of NVIDIA's quarterly results. Joining us now with more on the AI boom and perhaps bubble, Mitchell Green, Leading Edge Capital's managing partner and founder. I found the quote I wanted to read earlier, Mitchell, and we're talking about some of these gentlemen at Blue Owl Capital and what they're, in terms of funding this build out. We're talking about numbers that are so large, even in the low case, said Blue Owl co-founder Mark Lipschultz. Does it even matter if you keep counting after you get to $1 trillion of capital expenditures in the next couple of years? Is any of it real?
Is OpenAI too big to fail yet? It's getting crazy. I mean, if you think about the first thing shut me on, if you start to read these numbers and how much money a company like OpenAI or some of these companies are going to burn in their quests is absolutely crazy. And now you're reading about, I think Microsoft, the CEO of Microsoft was out recently talking about how they can't even get they've got the chips, but they can't actually they got the data centers they're building, but they can't get power to the data centers.
Right. So there's
a little bit of la-la land.
It all seems to be. So you think it's a bubble? You're calling it la-la land. You're telling it.
I've been on here for the last 18 months, thinking that we're getting valuations are getting extended, but I don't think the valuations are actually being extended in the hyperscalers. Facebook is low 20s multiples given the growth rates. I think Alibaba, Amazon, Google. These things are going to win. They're building the infrastructure to build gigantic companies. I'm not sure why OpenAI should be worth $300 billion, $500 billion, $700 billion. I don't know what the right number is. These big hyperscalers have real earnings. Now, there's a question, as Michael Burry's been talking about. We've been talking about these depreciation curves for a while. We don't short stocks. I buy private companies for a living. You are going to, interesting things are going to happen. Is it possible, these giant hyperscalers are spending what, 50, 60, 70% of their free cash flow on CapEx? Maybe are the depreciation curves maybe too short? That they're saying yes. I don't know how it all ends though in that way. We do like to joke though that you're an NVIDIA miss away from a recession in the United States because so much of the market value has been driven, so much of the economy is driven by the market or people's consumer sentiment and things like that. You tell me if NVIDIA misses the whisper number.
What quarter are they going to miss?
If I knew that, I wouldn't be here. I have no clue.
You don't have any idea about tomorrow night?
No clue. I suspect it's still strong, now again, I don't know what the whisper number is, which is obviously, it's not even the whisper number that drives stocks now. It's the whisper number in a few years from now. Like take Ferrari, the numbers were good, but they said 2030 was going to be a little bit weak, was going to be less than people were expecting, so the stock was down. It's really what he says for forward numbers.
So are we seeing a canary in the coal mine moment already, or what would be that moment to look for?
It's a great question. It's probably not yet. The spend that these hyperscalers want to still spend, and the fact that these people want to build the data centers is so aggressively still, and people are still spending crazy amounts of money on it. Some of the VC dollars, I think, slowed down a little bit, and I know valuations are still very expensive in private venture land and AI. But you're starting to see, I think, a little bit more rationality there. The bubble pops when Meta, Google, Amazon, some of these other companies sit and say, we can't take any more of your chips right now because we can't build any more data centers, or we don't need any more data centers. We're probably still in the early innings of that.
What inning? Like
fourth, third? I don't know.
So if this is okay, so if this isn't going to the extent that when would you get nervous?
When you see spreads blowing out. Actually, you know what?
It's too late.
You know when you get nervous is when you start to see a bunch of these private AI companies go public, trade at crazy valuations, yet have negative gross margins and crazy burn rates.
In that case, then we
could still be it could be 97.
We could be dancing, as Chuck Prince used to say. While the music's playing, you got to dance, kind of thing.
100%.
Which I was, will go down as one of the best and worst comments ever made. But you could be doing this at least for a couple more years.
100%.
But does it have to end badly? Is it possible that everyone grows into these valuations? Is it possible that the math does start to add?
Long term, 100%. Not 1%, 100%. All, whether it was the telecom build out with fiber, whether it was the internet build out, whether heck it was railroads back in the day, people are hyped. Technology cycles always get overhyped. There will be giant businesses created as a result of this.
For sure. But the question is, how do you decipher who is the winner and who is the loser?
I would be investing in businesses today that generate real free cash flow, not GAAP earnings, but real free cash flow, and use it. That's why today's hyperscalers. I'm not sure the giant bubble is in Google, Meta.
What do you make? There's been obviously a lot of questions about the world of private credit and actually the connection between private credit and some of these hyperscalers that are now effectively leveraging them to go and build a lot of these data centers. Should we worry about that? Should we not worry about? Do you think that the data center, the private credit world is actually a pretty safe world? Do you think it's interconnected, not interconnected? What's your?
Well, not being an expert in credit, I do believe, but if you started to see the largest hyperscalers in the world start to invest significantly more than their free cash flow into this stuff, say that, making numbers up, say that Facebook had 80 billion of free cash flow and was spending 50 billion on CapEx for AI stuff, but started to go spend $200 billion on it. Yes, that's definitely started to worry me. I've for a while thought some of this private credit stuff was a bit crazy. Living in the state of New York, living in the state of California, you can be a wealthy individual. You can go buy, long-term durated municipal bonds at 4 to 5%. For high taxpayers, like 9% after-tax equivalent yield. It seems kind of crazy to me that, people are investing in this private credit at like 12%, 13% yields, given it's not that much of a risk and spread. But that's the right place to be looking, to look where these things start to blow out, or, when you see the end customers, the Procter & Gamble's, Nikes of the world, start to pull back in the data center stuff, yes, I think that will start to signify things, but we're not seeing it right now. The demand is strong. If you go talk to the Fortune 500 companies, they will. Every group in the company is trying to figure out how to leverage this stuff to grow. But we are still in the very early innings of it.
Okay.
All right. Mitchell Green, thank you.
Thanks.
Appreciate it. Check out the shares of Cloudflare. Speaking of which, the company says it's experiencing a global network issue that's disrupting service for multiple customers. Users have reported issues accessing X. I actually asked about what was going on. It's working again now. Twitter, obviously, as well as Canva, some multiplayer online games, and ChatGPT, although many of those sites appear to be back online now, which I can confirm, at least with Twitter.
Coming up, you got to get ready for this. Are you ready for what is about to happen on this set? Because guess who's here? Oz Perlman. He's going to join us using his mentalist skills to blow our minds. He's going to do it once again and give us some of his secrets to success. You do not want to miss this. We do it every year with him, and every year the tricks get bigger and better, and we all just drop our jaws. So wait for it. We're back after this. Okay, our next guest is a regular on Squawk here, and now the author of a new book. It is called Read Your Mind. He's done it to us a whole bunch of times, and boy, he's about to do it again. Mentalist Oz Perlman is here. Former Wall Streeter himself.
Former Wall Streeter.
How many years have you
Merrill Lynch?
How many years have you been coming on the show? Do you know?
I think we're going on a decade.
I think we're going on a decade.
We haven't aged a day, neither of you. I love it.
It's unbelievable. It's unbelievable.
Did you predict that?
I did. Looking good, Joe.
And you've got a new book out.
You and me both. Can we give a quick shout out to Viking? We both have stocking stuffers.
That's
folks.
true. There you go.
And you know what's interesting? Our books are kind of different, but kind of the same. Mine is all about practical advice, actionable takeaways to achieve success. I am not going to teach you to be a mentalist. But yours is kind of looking into the past.
Yes.
To avoid financial disaster.
Yes.
Which I didn't know, but October 24th, 1929, Black Thursday.
That is true.
What if you had known that date before it had happened? Right? This whole show is what if you
could
could
have
know
been like
the future?
Jesse Livermore and shorted the market and done spectacularly.
Right, but how do you see what's going to happen? I like to say we throw out a date. We go into the future, gentlemen, month, day, and year. That has no meaning in the next decade. Month, day, and year. What year? Give me the year. What do you got?
The one that.
Yes.
2027.
2027. You see it. Is there a reason you picked it or no? Month and a day.
I'm going July 6th.
July 6th, 2027. What do you think's going to happen on that day? I'm writing it down. 7:06.
The market will open and the market will close.
7:06. I agree with you. 7:06:27. Here's what I think. This is the wild part about this.
I wonder if there's, if it could be a weekend. Or
Could be a
Could be a
weekend. I didn't look it
weekend.
up yet. July 6, 27. You made it up. Here's where this gets interesting. What if you knew the future? Right? What if you could figure it out? Each of you grab a book. You get your own book.
Okay.
I get your book.
You get my book.
Okay.
Yep.
I'm giving it to you. I'll sign it later. You better sign that one for me.
Okay.
Flip through the pages.
Yep.
And I want you, because here's what I think. The way that a 1929 event happens is when everyone's brain is synced up. Everyone loses confidence in the market at the same time.
Yep.
Everyone sells, no one buys. As you're flipping through, hold it a little closer.
Sorry.
Because it doesn't matter to me, but I don't want you to see each other's.
Okay.
His book has more pages than mine.
Yes.
One page, I always say it's calling out your name. Go to yours in your book. Go to yours in your book. Find it and bring it close to your body. I like how Andrew just started reading his book. He goes, this is a great chapter right here.
Yeah, I really like that one.
Now, I always say the first and the last thing you do is what people remember. The first and the last. You'll go first on your page. Look at the first word right now, Joe. Look at the first word on the page. Bam, and then close the book tight. You did it? Look at the last word on your page.
Yep, I'm
Did
looking
it?
at
Close the book. Here's where it gets wild. Each of you see your word in front of you. You could have gone any word, any page, period. In your book, in my book, I want you to just grab out a letter. Just grab a letter out of your word right in the middle. Just grab the letter out. You got one? Letter and a letter?
In the middle of the word?
Middle.
Okay.
Because you did first and last, so now middle.
Okay.
Look at me, look at each other. This is where people's brains get aligned. I don't think you did a vowel, did you? I don't think you did a vowel either, did you?
No.
See, isn't that weird? Not that weird. On three, 1, 2, and when I say 3 and point at you, I want you to just say the letter, not the whole word. But when I go 1, 2, and 3, say the letter you picked. 1, 2, 3.
G.
No.
That was weird. That was weird, right? How does this happen 1929 when everyone starts thinking like, gentlemen, each of you grab a pad of paper and a marker. There is no collusion. You could have picked any random page. You could have picked any random page.
Any
Anywhere,
random
grab
page.
it. There's no chance on this. Hold it close to your body, gentlemen. I'm going to close my eyes, close to your body. Turn it sideways, landscape.
Landscape.
And I do not want to see what words you're writing.
Okay.
And I want you each to write your word as big as you can, please, and hold it close to your body so you cannot see each other's, and definitely I can't either.
I'm writing the word?
Your word, yeah.
The one with the G in the middle.
Whatever you picked out of the whole book, yeah.
Okay.
Hold it close to each other.
Hold
Okay.
close to my body.
Yep.
Ready?
Yep.
Can we get 3 shots so we can get all of us in the same time? On 3. 1, 2, and when I say 3 and point at you, I want you to turn your words around. 1, 2, and think about this. You picked any page, you picked any page, you picked any word. Both of you did this. 3, turn around. Legal. Legal. Is that correct? Legal. Legal.
I can't do it anymore.
I know.
We've been doing
I'm
this
going back in time trying to think of how.
every
But
time.
Joe, don't go back in time. Go forward in time because 1929, your
Yes.
book turned the world upside down financially. Is that right?
Yeah.
You each gave me any day, any month, any year, just on the spot. I'm about to turn your world upside down because when you turn this upside down, the word that I'm seeing.
I don't know what to say anymore. I mean,
didn't want him to come in today.
I almost expect it now.
I know.
So it's
I do too.
But it's
Anything
it's-
short of thinking he might be Satan is. I mean, you're like.
I can't even. There's just no way.
There's a
to even-
logical explanation. Is there not? Either that or I'm not ever going near a Ouija
Pick it
board.
up right there.
No, I'm not doing anything else.
There it is. Pick it up. Buy
I'm
the
not
book.
doing anything else.
You said it yourself, Joe. Buy the book.
What do you want me to do?
Learn my secrets to success.
Buy the book. Buy the book.
I got the book. He's gonna sign. He's gonna sign it for me.
Wow.
Thank you, Squawk Box.
I can't really even.
Did you do the thing with the calculator? I mean,
Yeah, I'm just trying to think of what. I have no idea how you.
This is your book.
I
This
know.
is your book.
You should know that people ask me about the Lego thing
Yep.
with Joe constantly.
Constantly.
That is the singular one that I get asked about because it was
And
physical.
Sam Altman.
And Sam Altman.
Go-karting.
go-karting.
So he was asking me before the show began whether you go on our social media.
Yeah, whether you
pages.
have access
But
to
that
it.
wouldn't explain
I
this.
picked it out of all the
Things that
people.
Joe likes on his social media did not give me any advantage right here, unfortunately.
No, but when you said pick any,
He needs a lawyer. That's for
yeah,
sure.
exactly. Pick any picture. Well, then it came up legal. Pick any picture, and I picked Mark Twain. I don't even know why, but I did save it on my phone,
Yeah.
and there's no reason to think I would have picked Mark Twain, and you got Mark Twain. So I thought you were looking in my phone.
Can't look in your phone. How can we look? This is your book, my book, any page, any word.
Yeah, this had nothing to do with
There
that.
it is, guys.
Thank you, sir. Yeah. I thank you. Thank you. I mean,
for
it's,
having
it's
me.
stunned,
Isn't it
stunned
weird?
into silence, folks.
And there was no way, because the middle word, there were two on each side. It could have been an 8-letter word, which wouldn't have had a middle frickin' letter, would it?
Right. There's no way. I was Perlman, thank you.
Thanks, guys.
Squawk Box comes back. Contemplate this. Maybe somebody can send us an email and break how he did this. It happens every time. It happens every time. I was Perlman, Squawk Box, right after this.
Welcome back to Squawk Box. Don't you just suspend disbelief at this point? I'm ready for anything. But I can't explain it. Can you explain anything, Sorkin, for that? Can you explain anything? Or you just accept everything?
No, I can't. I have no good explanation for this situation whatsoever.
The previous ones were just as
mind-boggling.
I mean, I'm thinking, are we hypnotized?
No.
How does he get? How did
we both pick the same word?
So he had the 10 years and the next decade in cards.
But then he had this
only
listed.
one of them upside down is a word, and I could have picked any one.
I know.
2028, you can't. That's not a word upside down.
I need to think about it.
It's not going to help.
I need more time.
I'm staying away from all Ouija boards. That's what I'm doing because now I'm just scared. But I'm also hopeful that maybe there's an afterlife. I don't know. Anything's possible after seeing that. Futures, not good here. Down 308 points. Turn that over, and it's not a word either. The NASDAQ down 144. Look at Treasuries quickly. You can see 4.10 on the 10-year. Oil, we had an interview earlier talking about a possible break even from where it is right now at just under 60. Gold is back above, obviously 4,000, holding above there, even though it's down about a percentage point today. And Bitcoin held above 90,000, might have dipped under briefly. Still down this morning, but at 91.2 and change.
Okay, coming up, payments and fintech company Klarna reporting its first quarterly results as a public company. We're going to talk to the CEO about the numbers and his worries about spending on AI data centers. He's going to join us right after the break. Squawk Box, come right back. Klarna's third quarter results, they are out. The company reporting $95 million net loss during the quarter, revenue rising 26% to $903 million. That's a record high. U.S. sales jumping 43% from a year ago. Company saying its Klarna card added 4 million signups since July, and the platform added 27 million new users with 235,000 new merchants. Joining us right now is the company's CEO, Sebastian Siemiatkowski. I've always mispronounced it, and I apologize. Klarna's CEO and co-founder. It's great to see you. Let's talk about the quarter, and then I want to actually talk about some of your thoughts about what's going on in the AI space right now. Obviously, the business is doing pretty well. By the way, I should say the stock's off just marginally, but the stock's been, I mean, the whole market's been down. What do your earnings say about where we are as you see this in the context of the economic cycle we're in?
Yeah, so those are two very different questions. I mean, the business itself is doing fantastically well, in my opinion. Our revenue growth in the US has now picked up to 51% year on year. On global level is 28%. So that's fantastic. Over 3 million active card users. Over 1 million active card users versus virtually zero a quarter ago. I mean, that must be the most successful new card launch of a bank in US ever. Not that we're a bank in the US yet, but in Europe. So I think all of those looks fantastic. I mean, we also celebrate now, we've actually issued $500 billion over Klarna's 20 years history in 26 market at a record 70 bips or lower losses. So I think it just shows the sentiment of our underwriting technology, the strength of it, our ability to, and the fact that we do so short lending gives us a tremendous agility as you go through economical cycles to adjust as we can shift our underwriting policy and have more than half of our balance sheet underwritten by new standards in about 40, 50 days, right? So I think from a business perspective, I feel very, very excited to see the progress and all the hard work of our teams paying off.
So what does it say about the broader economy, globally, in the US, elsewhere?
I look at it a little bit differently. And it's difficult in a media landscape like we have to get out a kind of a balanced message. But what I believe to happen is that we have these two big industries, one called Fin, one called Tech, both of which have enjoyed almost virtual monopolies. Like they have really enjoyed the fact that search costs have been high, switching costs have been high, barriers of entries have been high. And AI is putting a dent to all of that. It's going to make it much easier to compare terms. It's going to make it easier. You eventually soon will be able to click and move from one bank to another with the support of AI. And it's just dropping the barriers of entry because it's easier to be regulated, compliant, and so forth. That just means that those businesses, as every other business, will have to wake up every morning and ask themselves, what do I do to make my customer happy? How am I customer obsessed? And how am I operational efficiency? You know, and the gourmet cafeterias, are currently called culture. They will soon be called overhead, right? So the point is that it's just going to be a different landscape. And I think that this is going to make these two half a trillion profit pools is in banking and $500 billion in tech. They are just going to be under heavy competition from people like Klarna and others who are going to try to come in and offer more value for the buck. Right. And that's going to make a difference, right?
In terms of the strength of the consumer, do you think that consumers right now are over leveraged?
No, when I look at our data, our realized losses are coming down. It looks quite healthy. I do, because I've been underwriting $500 billion for 20 years, I think what is interesting this time around, though, is we might be in the midterm looking at an inverse of what anyone underwriting credit has seen for decades. And the fact is that traditionally, when we saw a lower economy or more struggling economy, it would predominantly affect low-income households, blue-collar jobs. What we're seeing now due to AI may be the inverse, where it might be the high-income or higher-income households due to the white-collar jobs being affected. I reflect often on the fact that when I see big companies like Volvo Trucks a few months ago announced that, due to the economical changes, they are making layoffs. Those layoffs, when I was a kid, they were in the factory, not in the headquarters. Now, nobody's touched in the factory. The layoffs are in the headquarters. So I think that may be the inverse of what underwriters are used to, because actually the higher FICO scores may struggle more financially, while the low-wage jobs are actually going to do.
So that's an interesting question. How do you get ahead of that situation? Which is to say, when you're underwriting a loan of any sort and thinking about the kind of job that somebody may have, what their income looks like, that income stream, how do you think about those risks today?
So that's where the benefit of Klarna's business model comes into play, because we're not in mortgages and we don't do like credit cards. We don't try people to rack up as much debt as possible. The average outstanding debt on a credit card in the US is $5,500. It takes some time to pay that down, and the interest rate is very high. Our average outstanding balance is about $100, and we circle it for only like an average lifespan is 40 to 60 days. So as we kind of see if there is an economical downturn and we see that people of any income level struggle, we can quickly adjust our underwriting and we can refresh our balance sheet in 1 or 2 months. And this has always been the strength of Klarna, not very well understood, but one of the ones that I obviously have seen as a big strength of ours. And it's harder for a big bank when they change their underwriting policy. It may take them 2 or 3 years to cycle through a balance sheet that has been underwritten by previous standards. So for Klarna, I feel very confident that we can deal with that. But I think for the economy at large, I'm looking at those unemployment numbers and I'm trying to decipher from that what is low income, blue collar versus white collar and higher income. And could there potentially be that the unemployment is rising in the higher income, and would there be implications there? And what will be the implications for your underwriting strategy going forward due to that?
Sebastian, I want to thank you. Appreciate it. Nice to see you. Hope you get to see you in person.
Cloudflare thing is a problem again, and you try and get on Twitter and it says browser working check mark, host working x.com check mark, Cloudflare in Newark X not working. Cloudflare, there's an error or something. So that's what we reported, right? It's a Cloudflare. It's because Twitter's down again. I was looking at all the O's comments, hoping that someone would say this is how it happened, but nobody. A lot of people are watching. You know who wants to know what went on? Johnny Bench.
Really?
Yeah.
Hi, Johnny. How you doing?
It's so random, isn't it? Coming up, Saudi Crown Prince Mohammed bin Salman visiting the White House today. We'll get into U.S.-Saudi relations and other geopolitical hotspots with retired four-star General David Petraeus. That's at 8:10 a.m. Eastern Time. Squawk Box coming right back. Topgolf Callaway is selling a 60% stake in its Topgolf business to Leonard Green and partners. The transaction values Topgolf at approximately $1.1 billion. Callaway and Topgolf agreed to merge back in October of 2020. As part of this new transaction, Callaway will change its name to Callaway Golf, really back to it, and change its ticker to CALY or retain a 40% stake in Topgolf. Coming up, Alibaba denying claims that it's working with the Chinese military against the U.S. House Chairman of the China Select Committee, John Molinar, is going to join us with more on the security concerns and relations with Beijing. Plus, we're going to read the charts on Bitcoin and the markets for key support and resistance level after that brief dip below 90,000. Squawk Box returns in just a moment. Alibaba is denying White House claims that it's providing tech support for Chinese military operations against U.S. targets. In a statement, this is what the company said, the claims purportedly based on U.S. intelligence that was leaked by your source are complete nonsense. This is plainly an attempt to manipulate public opinion and malign Alibaba. Joining us now, Congressman John Molinar. He's the chairman of the China Select Committee. Where's and it's good morning, Mr. Chairman. Where's the truth? Somewhere in the middle. Who do you believe in?
Well, let me just say first, Alibaba is a Chinese company. We know that Chinese companies are required by law to comply whatever the CCP requires them to do. So if the Chinese Communist Party required Alibaba to provide data, information, cyber vulnerability information that would advance their military objectives, they would certainly have to do that or they would face serious consequences. We've seen already when Jack Ma spoke out against the Chinese government, he disappeared for months. So this should come as no surprise. The Pentagon has labeled Alibaba as a Chinese military company. So this is very consistent with how the CCP influences businesses in China.
And what kind of information do you think would be so useful? What is the White House memo alleging that China is finding out about what's military targets here in the United States?
I think when you think of China's vast hacking, working with hackers to, exploit vulnerabilities in American infrastructure, telecommunications, data on customers, all of this is something that they would benefit from having that information. So it's very consistent what we've seen with Volt Typhoon, Salt Typhoon, where they've exploited information on different America communications and infrastructure. And in a time of conflict, or when they want to leverage that, they will exploit those vulnerabilities. And in some cases, they have that just laying in wait in order to take action.
I mean, you think that it's not done in anticipation of some type of actual conflict. It would be done through hacking or sort of surreptitiously through some of these activities on electronically, not necessarily that we're anticipating some type of actual conflagration at some point.
Well, I think if you look at, they've threatened to take Taiwan by force if necessary by 2027, and Xi Jinping has told his military to be prepared for that. If that were to happen, they would certainly want to interrupt communications, infrastructure, and try and interfere with any type of response to that. And so this is very consistent with their strategy. And it's one of the reasons why it was very important that Secretary Noem responded to our letter and Alibaba is not going to be the cloud provider for the 2028 Olympics. It will be Google, because there was some talk that they would be the cloud provider for that Olympic Games.
Chairman, I wanted to ask you about this report. The president now saying that he plans to sell F-35s to Saudis, despite the Pentagon's concerns about this, and in particular, the Saudis' concerns that some of these planes could end up in the hands of the Chinese.
Well, I think this is an area where I'm not going to get ahead of the president. He's going to negotiate whatever deal, whatever agreement he believes is in the best interest of the American people. I will say that anytime we have our best technologies and capabilities, we want to make sure we're working with trusted allies and people we know that are not going to allow that into adversary hands. And so when it comes to chips, when it comes to defense equipment, we want to make sure there are guardrails, and I trust that if the president makes that decision, there will be adequate guardrails in place.
Well, let me ask you this, though. The Defense Intelligence Agency wrote a report suggesting this was the potential outcome. And so I'm trying to understand the way you think about it. You either have to say to yourself, I believe more in the president and his ability to prevent this from happening, or you believe the Defense Intelligence Agency. It's hard to believe both.
Well, I would say this. The president has taken a leadership role in bringing peace to the Middle East and ending these conflicts. And Saudi Arabia can play a key role in that. We want to make sure we're working with our partners, Israel. When you look at the Abraham Accords, we have an opportunity to really grow the coalition that moves away from terrorism and brings peace to the region. And this could be one part of that puzzle. But we'll see how that emerges this week when the president meets with the Crown Prince.
But just so we're on the same page, Riyadh and Beijing do have a security partnership.
I'm sorry, I missed your question.
I was just saying a fact, which is Riyadh and Beijing, Saudi and China, they have a security partnership. And that's why this is a concern, given that we're having a conversation about China.
Well, I think again, I think the safeguards need to be there if that were to happen, and we'd certainly expect that, and it's the same with the chips with the UAE. They have different partnerships with China, but there needs to be clarity and choosing who they want a partnership going forward. And I believe that the president is bringing different countries into the coalition that would be more aligned with Western values and with respect for national security. And to me, I trust his team and the work they're doing to move this forward.
Considering that we're, on the cusp of maybe, some major trade deals with China that entail certain promises that China makes on things that they'll do. I guess we reciprocal promises from us as well. But does this look like a country, China, that is acting the way we would hope that they would act when they're entering a trade deal? Should we trust anything that they tell us in terms of that they're going to comply with whatever comes out of this trade deal? It just doesn't seem like very good behavior in good faith.
Well, President Reagan used to say trust but verify, and we know that in the past China has not kept agreements that they've committed to, and so we have to factor all of that in. When they cut off critical minerals and rare earths supply to the United States and other countries, that was basically firing a loaded economic gun against the free world. And so when they have these strategic chokeholds, they leverage that for their advantage. And we don't want to be in a position where we're dependent upon them, and we don't want to simply trust that they will carry through with their agreements, because in the past they have not. I still think there's value in having these meetings and trying to come to an agreement, but there needs to be a enforceability that goes along with that.
I guess that's always the case, Mr. Chairman. We appreciate your time this morning. Thank you.
Thank you.
It is just about 8 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Joe Kernan. Becky is off today. Among our top stories, Saudi Arabia's Crown Prince set to meet with President Trump today in Washington, where they're expected to talk defense, trade, and tech. We're going to have more on all of this with retired four-star General David Petraeus in just a couple of minutes. Meantime, the U.S. Labor Department's website was updated overnight, releasing jobless claims data that had been delayed by the government shutdown. Initial claims totaling 232,000 for the week ending October 18th, while continuing claims rising slightly to 1.96 million from 1.95 million. And ADP expected to release its weekly jobless data in just a couple of minutes, and we'll bring you those numbers. Meantime, a Fed governor, Christopher Waller, now calling for another quarter-point interest rate cut at the central bank's December meeting. In prepared remarks, Waller said he's grown concerned over the labor market and a sharp slowdown in hiring, but is not worried about inflation climbing. Want to get a quick check on the futures. We are in the red this morning after a down day. You're looking at the Dow off about 355 points. NASDAQ looking to open down about 158 points. The S&P 500 looking to open off about 35 points. Treasuries right now, if you look at the 10-year note, you're sitting just at about 4.0, call it flat there, and the 2-year at 3.5. I want to get over to Frank Holland. He's got a look at this morning's pre-market movers. Frank.
Hey, good morning again, Andrew. Let's start off with the Dow component, Home Depot. Take a look. Shares lower by more than 3.5% this morning after it missed Wall Street's earnings expectations for the third straight quarter and also cut its full-year profit forecast. Its CFO, Richard McPhail, said the weaker outlook came in part because shoppers across income groups, they're reluctant to take on high-dollar projects. He also said a slower housing market and the higher cost of borrowing is contributing to that trend. You can see shares of Home Depot pulling back about 3.5%. Amazon and Microsoft, both of them lower this morning. Take a look. You can see Amazon's down more than 2%, Microsoft down more than 1.5% on news that the European Commission has launched 3 market investigations into these companies under the Digital Markets Act. That's according to Reuters. That probe will in part assess whether Amazon and Microsoft should be designated as gatekeepers for their cloud services. Again, shares of both companies moving lower. Amazon down more than 2, Microsoft down more than 1.5. Also looking at shares of Honeywell right now, dropping just about 2% on a double downgrade from B of A to underperform from buy. The analyst sees little upside for opportunity for shares heading into the company's planned split into separate aerospace and automation companies. The analyst also says earnings growth will continue to lag peers in both 26 and in 27. Honeywell shares, again, pulling back more than 2%. Back over to you.
No Becky today?
All right, thanks, Frank, for Katie. For a technical look at the markets, let's bring in Katie Stockton, Fairlead Strategies founder and a CNBC contributor. There are times when I think a dog is wagging a tail and the tail is wagging the dog, but Bitcoin's been weak for a while, from 125,000, broke under 90,000. It does seem correlated with AI stocks and sort of the risk-on trade to some extent, but it almost seemed non-correlated for a while. But was it, in your view, was it ahead? Was it a canary in the coal mine for this trade we're seeing now?
Yeah, it could have been a leading indication
of what's going on in stocks?
In sentiment, really.
Sentiment.
It's more market sentiment. And we saw it in some of the sort of higher beta segments of the equity market as well. And the pullback is meaningful. Bitcoin down 28%, Ether down 40%. So, it is notable, and it's not surprising to see it ultimately carry over to other asset classes.
So you have seen drawdowns in Bitcoin, really large drawdowns historically over the last 6-7 years. 20 down to 3,000, I think, and it was 65,000 down to, I think, 17,000 at one point. Are there indications that the size of this drawdown in percentage terms could be the same?
I would say there
or
are
is it less volatile?
Unfortunately, the pullback is deep enough to affect our monthly gauges. So if at the end of the month we don't see a rebound, we will have our first monthly MACD sell signal in some time. And that would be a setback for sure. There is support on the chart that defines the long-term uptrend in line just about. There's sort of in the low 90,000 area. We talked about it last time.
But then you had in the 70s after that last time.
Well, right. So the secondary level now to where we are currently is about 78 to 80,000. And that's the bottom boundary of where essentially that cyclical bull trend for Bitcoin is broken.
Would you put money on the notion that if Bitcoin went to 78, that this AI sell-off would indicate that there's more to go with that as well, or could it could they not be sinkers?
You don't think they're correlated?
I would say they're correlated, but I wouldn't say it's causal in that way. And we know that these cryptocurrencies are very capable of one-day moves of that magnitude, right? So I wouldn't necessarily relate the two that closely. But certainly sentiment is there on the downside. And
what's the upside?
For Bitcoin?
Yeah.
Well, it's still in the long-term uptrend technically, right?
Okay.
On the upside, there's really not very much resistance, and it does have a propensity to stair-step higher. So we are in this corrective phase. They can be prolonged. We have oversold conditions already, and yet those oversold conditions have yet to give way to a decisive buy signal. We moved in our research from a short-term bearish bias to a neutral bias on Monday with the expectation for stabilization, but then our intermediate-term gauges still point lower.
Is the AI trade correlated to the S&P trade?
I think it's very important to it. So I think without that AI sort of fervor, the market is more challenged.
How about the Dow?
The Dow is very narrow. Yeah, so we don't focus on it quite as much. But NVIDIA, we have to talk about, right? Because that's going to set the tone in a way for the major indices, for the AI trade as well.
And you can do that totally agnostically, not without saying anything about the actual earnings tomorrow?
We can do that for sure.
And what do you think?
It's hard to have an edge ahead of earnings for anyone. But we feel that with the pullback of about 12% from the highs for NVIDIA, we now have a nearly short-term oversold condition as of today coming into the report. So that is, to me, a better scenario, of course, than coming in very overbought hot. The support that I'm watching is quite thin, though, so that's the catch. It's just about $180 for NVIDIA. Below that, I think it has problems. It actually already has problems behind the scenes. The technical indicators have rolled over on the weekly chart to suggest that even if we get a bounce off that short-term oversold, it might be sold.
You said like one positive thing, I think, and I'm going to grasp on that. So you said it is entering in somewhat oversold territory, which could mean that it could be a positive move tomorrow. But then you're
Right.
you're saying that doesn't. You're not out of the woods even if
It would
that
be,
does happen.
yeah, it would be Thursday, Friday. Well, the other positive, which is probably the most important, is that it's still a long-term uptrend. And in fact, the monthly chart has no issues. It's more of a sort of an intermediate-term takeaway that for maybe 2, even 3 months, the indicators point to more corrective action. And listen, it's healthy. It's something that we tend to see after such steep up moves.
And you're saying such a crazy thing. And so if that is positive for NVIDIA, that could be positive for the AI trade, which could be positive
for the Bitcoin trade.
For the S&P trade, which could be positive.
Well, eventually, right? It tells us right now
So
we
it may
still
not
have
be,
some risk.
it could somewhat dampen the bubble talk if NVIDIA.
I think it's already been dampened, especially with
Are
some
we
of
ready
these
for-
treasury companies. It feels already like sentiment has shifted enough that we're kind of out of that mode.
Really?
I think so. And when you look at any AI proxy, and I think it was the Goldman Sachs non-profitable tech basket, that's already broken down. It's already broken short-term support. So I feel like the shift is already there. And we're not quite there yet in terms of the intermediate-term metrics looking promising. But to me, the long-term trends are still fine.
Okay, Katie. Thank you, I think. Okay, there's a couple of things. You got anything half full on that, Sorkin? I think.
I mean, she told us that the half full is that the chart suggests we're still in an upward trend.
Yes, it did. And thank you.
Of course.
Now we got this. President Trump just posting on Truth Social. The only health care that I will support or approve is sending the money directly back to the people, with nothing going to the big, fat, rich insurance companies who have made trillions and ripped off America long enough that people will be allowed to negotiate and buy their own much better insurance. Power to the people. Congress, do not waste your time and energy on anything else. This is the only way to have great health care in America. Get it done now. President DJT, and checking some health insurer stocks based perhaps on that post. Nothing too significant yet, but the market's down 355 points. Interesting rhetoric from a Republican about companies. We've seen the same kind of rhetoric about pharmaceutical companies as well. So it's, I don't know, fair is foul, foul is fair. You can't really, I don't know, it's a uniparty, I guess. That could be Elizabeth Warren talking, not Donald Trump.
Coming up, folks, President Trump set to meet with Saudi Arabia's Crown Prince. A preview of that meeting with retired four-star General David Petraeus next. And then Noah Blackstein on the market's recent pullback as we head to a break. Take a look at the S&P 500 winners and losers this morning. Squawk Box returns after this. No, you're right. Welcome back to Squawk Box. Saudi Crown Prince Mohammed bin Salman is scheduled to visit the White House today, his first since the 2018 killing of journalist and Saudi critic Jamal Khashoggi. For a look at what's at stake, I want to bring in retired four-star Army General David Petraeus, chairman of the KKR Global Institute and the KKR Middle East Global Institute. He was, of course, the CIA director during the Obama administration. Good morning to you.
Good to see you.
When this whole meeting is over, General, what do you think we're going to ultimately hear? What kind of deals do you think can ultimately be struck?
Well, first of all, President Trump is really approaching this as a state visit of a head of state, even though the Crown Prince Mohammed bin Salman is the prime minister, a head of government. But that's a significant distinction. There will be an elaborate military arrival ceremony, Oval Office meeting, and then a black tie dinner for 125 or so people this evening. And this evening, I think they'll be celebrating an announcement of a U.S. sale of up to 48 F-35 stealth fighter bombers, which proved to be so effective, of course, in the hands of the Israelis and U.S. forces in the 12-day war against Iran. There will likely be the signing of a mutual defense pact, something like what President Trump did for Qatar after the Israeli strike on the Hamas leaders there. Discussion of the Saudis joining the Abraham Accords, although I think that's still premature because the Crown Prince will explain that there will have to be an ironclad path to Palestinian two-state solution. There will also be undoubtedly a reaffirmation, if you will, or details on the $600 billion that the Crown Prince announced would be spent in the U.S. by the Saudis in a variety of different endeavors, and likely a civil nuclear agreement of some type to help the Saudis. So it's a very significant visit. There are a lot of deliverables, and I think it will be, again, something that they will definitely celebrate this evening properly.
What is your take on the F-35 sales? You know, there's some concern, more than some concern, a report inside the Pentagon suggesting it could be a problem that these planes could ultimately either wind up in the hands of the Chinese, or given the partnership between the Chinese and Saudi, that it presents a problem and something that we should be concerned about.
Well, I think there's reason to be concerned about that, and I think there are also mitigating steps that can be taken to assure that that doesn't happen. This will, though, be the first sale of F-35s outside of Israel when it comes to the Middle East. You can then expect probably the Emiratis and others may seek similar sales in the future. And the key is, again, just making sure that there are safeguards, that there's no way that they can reverse engineer if it gets in their hands or something like that, which I don't expect to happen. I suspect we'll have a lot of advisors around this. There will probably be discussion as well of other modernization of the Saudi military, including maintenance and training agreements also.
I doubt it's going to come up in conversation, but, you know, here we are talking about MBS coming to the U.S. for a visit like this, the first since, and we keep saying since 2018, when he's alleged to have ordered the killing of Khashoggi. How should we think about that in this context?
Well, there's obviously something that has no half-life, if you will. It's always going to be there. But at the end of the day, the previous president and now this president decided that we need to move on. You face the reality, the world the way it is, not necessarily the way you'd like it to be. Again,
that is a half-life, General. And it does have a half-life.
Well, it obviously gets a bit more dim in the rearview mirror as time goes.
Right. I think you're arguing for. I see what you're saying, but you're kind of making the case for both. That in our mind, in the black and white world of what's right and what's wrong, it has no half-life. In the gray world of what we deal with, it obviously has a half-life.
Sure. Yep.
Right. I think I understood what you meant, but yeah.
General, when you think about the relationship between Saudi and the U.S., and actually now let's play this out into what you think is going on in Israel right now, do you think that there's going to be a broader deal that's going to come out of this?
There will probably be discussions about the way forward in Gaza. And of course, it's worth noting that the UN Security Council yesterday approved President Trump's plan for the way forward in Gaza. The challenge is the reality that there still has not been a mechanism described, designed, and so forth to disarm Hamas. That's the second phase of this agreement. President Trump deserves credit for the first phase, which got the exchange of the hostages from Hamas, live hostages, all to Israel. Gradually, the bodies of those who died in captivity are also making their way, and it's an exchange for thousands of Palestinian detainees in return. The question is, how do you move forward now? Unfortunately, Hamas is still the guys with the most guns in Gaza. They're still essentially the government, and there really is not a separation of the people from the extremists in this case, which is what you would have wanted to see in this campaign. Look, Israel was brilliant against Hezbollah, brilliant against Iran, set the conditions that enabled Ahmed al-Shara to topple the murderous Bashar al-Assad regime in Syria. But the situation in Gaza is still at a bit of an impasse because there has been a clear and leave approach rather than a clear hold build. And whether there can be a force found somewhere in the world that's willing to go in there and fight Hamas and its hundreds of miles of underground infrastructure and take them on and clear them out, disarm them forcefully if they will not disarm voluntarily, that is a big question right now. I'm sure they'll talk about reconstruction, but again, it's very hard to do reconstruction if you haven't actually separated, again, the people from the extremists in this case.
And, while we have you here, Putin, we've got sanctions, we've toughened up sanctions. Is there anything economically that will actually force him to make concessions or stand down? Or do you just think he's just dead set on I don't know, reconstituting Mother Russia or the Soviet Union or something? Is anything ever going to work? Does he care if the economy goes to zero? Does he care what happens to Russia in that case?
I think there is a way forward. I think that if the EU in its mid-December meeting can finally agree on how to essentially launder, how to take these frozen Russian reserves that are anywhere from $150 billion to $250 billion, that is equivalent, depending on who you talk to and which country they're in. If you can launder that through Euroclear bonds that you give to Ukraine, it would be an extraordinary shot in the arm for Ukraine. That's first to help Ukraine, and we should take other actions to help them defend better in the air against missiles and drones and so forth also. But then if you put further sanctions on the Russian economy, and now you're starting to see this, the 19th EU round was approved a few weeks ago. The U.S. has been sanctioning Rosneft and Lukoil, two of the big oil companies, and then a number of other companies in recent days. And then you go after those who enable the Russian economy. You go after those who are buying the gas and oil, do it in a thoughtful manner so you don't spike the oil market. That's doable. We did it back during the sanctions on Iran that led to the ultimate nuclear deal. And you go after, frankly, China, which is providing the vast quantity of chips and other components for the Russian military-industrial complex, noting that they are going to run out of the National Welfare Fund, the Russians are, next year, according to the Ukraine intelligence. So I think there is an opportunity to enable Ukraine to do better on the ground against the Russians in the air, and then above all, to crush the Russian war economy and those who enable it, those who buy and those who sell to Russia. And I think that could lead to a situation where Putin says, I actually can't continue this war. He's now taken somewhere around 1.15 million killed and wounded. And I think there could be a moment if you do all of this together, and I think the opportunity is there at this point in time.
General, I want to thank you for joining us this morning, helping us through this, and we look forward to talking to you again very, very soon.
Always good to talk to you, and great interview with David Remnick in the New Yorker in recent week.
Oh, thank you. Appreciate that. Thanks.
Up next, ADP's read on jobs, and then Noah Blackstein on why this recent sell-off lands at the feet of the Federal Reserve. Plus, Walter Isaacson out with a new book. He's going to join us to discuss what's called The Greatest Sentence Ever Written. We can come up with it. It makes sense. Think forefathers. Think the 250-year anniversary. Squawk Box will be right back. Check out the shares of Cloudflare. The company says it's experiencing a global network issue that is disrupting service for multiple customers. It said it has identified the issue and a fix is being implemented, but Twitter keeps going in and out, and it's even made it, Noah's here, it's even made it to the lead story on Drudge. So to break through the TDS that Drudge suffers from on a daily basis, it must be a really big deal for Cloud. And there's a word that says hack, question mark. So that issue is even being brought up. But this is a major deal right now, and it keeps, I think X is down again if you're trying to look at Twitter. Meanwhile, Stifel increasing NVIDIA's price target ahead of tomorrow's quarterly results, going from 212 to 250. The analysts are expecting a third quarter results to beat expectations. Is also optimistic for the fourth quarter. I'm not turning it into a noun. Expecting to report a third quarter beat. Don't you like that? Let's take the most complicated way to say something. Join us now, Noah Blackstein, Senior Portfolio Manager at Dynamic Funds. Did you leave the house to come down here? It's about time that we're seeing you from Canada. Are you not? Toronto Film Festival. Have you been?
We've gone over the years.
It's one of the good ones.
It's a very good one.
It's a great city. Sorry about the Blue Jays.
I can't talk about that.
You can't talk about
that.
But can you? Why you're laying the air coming out of the AI trade at the feet of the Fed?
No, I think first of all, the AI. We've gone up nearly 2,000 points from the Liberation Day lows. We've had the longest sustained run over the 50-day moving average for a long period of time. But the Fed really flipped hawkish. There was
again in a couple of weeks. You almost saw Powell do it, didn't you?
Well, you said, yeah. Like all of a sudden, it's not a given in December. The market had pretty high expectations of a December cut. It's pretty clear over the last 10 years, every time they get hawkish or restrictive, the market has gone down. It's been a trigger. AI trade is separate from that. I think there's a lot going on there. I mean, CoreWeave obviously spooked some people, but doesn't seem to be a demand issue. Their backlog was up over 85%. It just, you're building these massive data centers. They require power. Anyone who thinks you just draw a 45-degree angle for the growth rate, it seems silly. There's going to be fits and starts. It's going to be trying to get power on, build these data centers. The demand in the backlog, though, is there for their business. And so, I think some of the AI trade has come out. I think there's been concern in the credit market about all these hyperscalers that have hit it recently. But, for us, where we see the opportunity is, you have a deal this morning with Intuit and OpenAI, but we really think this next move after these LLMs have spent all these money and these data centers keep coming on, there's going to be more and more applications and more people embedding AI into their workflows, into agentic AI using agents and things like that. So, we're at the very beginning of this in terms of enterprise application.
Your thesis would explain Bitcoin because
liquidity.
But I try to look at what one does Bitcoin always do. So it loves Fed easing. It loves Fed easing. It doesn't like it at all when even a bad number, a good number or bad number comes in on any given Friday or whatever. You can see if it makes the Fed less likely to cut Bitcoin. They want the Fed printing and debasing. It's a debasement trade. That's what.
It's a great shorthand for looking at liquidity in the market.
Yeah.
And I think it's been signaling.
And then all of the chairman's men and women are now singing the same tune. Not all of them, but 5 or 6 of them also talking about it. They're in sync.
Though I'm not sure why. It's not like they have data. There has been no data.
Right.
So to be definitively take a position without data seems odd to me. I guess, the market is sort of in a pause here ahead of NVIDIA, but also ahead of the non-farm payrolls on Friday, just to get some perspective on what's going on. But
when you think about the tech trade and all these large language models,
do
you ultimately think they are the winners, or do you think there's a whole other set of winners? I mean, Chamath Palihapitiya recently made a comment, I think it was recent, where I saw him say something like, the folks who made refrigerators never did as well as Coca-Cola. Right. Which is to say, the large language models may be the refrigerators in the end, and then maybe there's all these other folks who are going to build something on top of it, or does it all accrue back to the large language models because they can do everything?
Well, where do these large language models sit? Do they sit between the operating system and the application layer, like today with Intuit and OpenAI, or Shopify and OpenAI, how do they monetize it into the application level, and how does that begin to work? But you saw Walmart's a pretty big retailer. I think you'd probably admit we can agree on that.
Yeah.
They just made a CEO shift, and the new CEO is really going to lead the AI change at Walmart. I think if you talk to these companies, whether it's JP Morgan or Walmart or UPS, using AI internally for cost savings, for inventory management. You know, I'm old enough to remember when AI was machine learning. But being able to use that, I think it benefits the economy as a whole. This is a platform with a real ROI. Like, I don't know what the ROI in the 90s of me running around trying to find a Dwayne Reed for AA batteries for my BlackBerry pager was. But there's a tangible ROI today for what these companies are seeing, replacing a call center worker at $50,000 a year for a piece of software at $5,000 a year.
Right.
There's a tangible ROI, and longer term, it's deflationary. So the fits and starts of CapEx are going to happen. It's not going to be smooth. But the application benefits the economy as a whole. It's an exciting era for productivity that's coming.
Yeah, so you've made the case that some of this may be because of some comments from the Fed. Are they doing the wrong thing, or is the Fed justified with what they said? Or do you not know because we don't have the data?
Well, I don't know because I don't have.
Do you think? Then you don't think they know?
I just think that if you don't know, just say you don't know. We don't have the data right now because of the government shutdown, and we're unsure. I think there's signs in the labor market. I mean, I don't think Home Depot. Look, where rates are have been really difficult. Residential housing is pretty much in a recession. I don't think the numbers were great for Home Depot. I realize some of that was lack of storms that they cited, but you know, they are still relatively tight, and small business and real estate are relatively tight. So we'll see where these numbers come out. I assume Friday will be something, but look, I think as you look towards a new Fed in 2026, and you look towards the one big beautiful bill stimulus in terms of accelerated depreciation and other incentives, we're probably heading into a better year on the fiscal side.
Yeah.
But the market right now, and as evident by the Bitcoin, is in a bit of a pause, and everything is sort of spooking it out.
You've got a little U.S. envy still. Let's see on our economic model down here versus Canada's. You don't hide it.
Capitalism is.
You don't hide it.
I'm a firm believer in capitalism.
And you think that's not what you're seeing up in your home country?
So you're talking about New York City now?
I'm talking about Toronto.
I think there's, you know, this is probably if you look at everything.
You've had flat GDP. You've had no increase in over how many administrations up there? You're lost.
It is a testament to the United States, though. If you think about it, running a global fund in 2010, the U.S. was less than half of the index. Today, it's almost 75%.
Can I ask you
why? Because of the profitability.
Just to get even more, off topic. Can you go down to Washington and tell them how you do healthcare up there? Can you fix our healthcare system down here with your model?
I got it. Personally, I have enough problems than going to Washington and fixing stuff.
How bad is what you deal with up there?
I think both systems, it's bad. System here is better, but not great either, right?
So it's even worse than because we think we have just a terrible system here.
Delivering healthcare is not easy.
Can you see a specialist in Canada?
After 3 or 4 years, probably. It's difficult.
You hear these things circling up? I mean, it is. I've heard of people waiting for a year or two to see it.
It's not working. Maybe we'll have.
And it's simple supply.
Maybe we'll have Optimus robots.
Mamdani could look at some of that stuff and see that if you increase the demand without increasing the supply, you're going to have a problem. Are you not?
It's very, very difficult. It's very, very difficult.
And just so I understand, though, you go to a private doctor?
No, there's no private doctors.
Not even for rich guys like you?
Insurance is
right, but I thought, I mean, we've talked about.
All doctors run like private businesses, but paid by one
We've talked
payer.
for a long time about sort of whether you ultimately get like a quasi public-private service, sort of like what happens in the UK. Is that not?
Europe has that as well. Canada does not. It's one payer, which is the government insurance company.
Yeah. And then
single payer versus.
Right. Great last game.
I was there. I don't want to talk about it.
Was that not a great last game?
It's heartbreaking.
Inches. Unbelievable. It's just amazing. Phenomenal. One of the greatest games ever, I think.
One of the best World Series of all time, for sure.
I agree.
Yeah.
There had to be a loser. Thanks. Sorry. Noah, thank you.
Thanks.
Really appreciate that.
Thank you for coming in.
Okay, I want to get over to Steve Leisman with some weekly jobs or jobless figures from ADP. Steve.
Yeah, minus 2,500. Remember what we're saying here. The ADP coming out with this new preliminary report. It gives us the change, the average change over the past 4 weeks. So minus 2,500. That would equate, you can multiply roughly by 4 and say for a month period of time, that would be minus 10,000. That we're looking at there, by the way, is the estimate for the Thursday release of the September jobs report, plus 50,000. You can see the two prior numbers here. Some talk about whether those are revised higher or lower, but clearly Thursday is the most important meeting or most important data point for 6 weeks that we've had. But these preliminary numbers we have from ADP suggesting that there has been weakness, minus 11,000, minus 2,500. Real quick, as you remember, we had jobless claims that somehow came out from the Department of Labor. We're not really sure, but 232 and then 1.957. That is along the lines of what we thought was happening, given the alternative data we were talking about, Andrew. So interesting times trying to cobble this together. What the heck is going on with this economy? But kind of negative numbers here when it comes to the jobs report from ADP.
Steve, when do you think we're going to get even more government numbers, and what are we supposed to think about government numbers at this point?
Well, I'm a little bit confused as to why we don't have more information from the BLS. And while I'm doing that, I'm refreshing the BLS website with the new schedule, and there is no information. You remember on Friday, Andrew, they came out with this data, with this schedule to come out with the jobs number on Thursday, but we have no additional information. There's a lot of hope right now that maybe, I think Hassett might have said this, that they could cobble together the establishment side of the employment report from October, somehow kind of pull that together without doing the unemployment rate or the household survey. And then there's also hope that maybe they come out with the November jobs report sometime before the December meeting of the Fed. I liked what Noah was saying. I do think a lot of Fed officials have taken a pretty firm stance without any firm data. And I find that a little bit curious, but data could come out and it could drastically change the way different Fed officials feel about the outlook for the economy.
Okay. Mr. Leisman, thank you, sir. When we come back, Walter Isaacson is going to be with us. He's out with a new book, and he's going to join us to discuss it. It's called The Greatest Sentence Ever Written. Take a look at the futures right now. We do have some red on the screen. Dow off about 383 points if we opened up right now. Back after this. Welcome back to Squawk Box. The two giants of online gaming, FanDuel and DraftKings, they are dropping the American Gaming Association. This is a national trade and advocacy group representing the gambling industry. This comes after the AGA came out against prediction markets offering sports-related contracts. This has been a big debate that's been going on here, and FanDuel recently announced it was launching a prediction market itself, a platform with the CME. DraftKings moved into the prediction market, too, when it bought Railbird. Our gambling reporter, Contessa Brewer, is all over this, and we're going to have a lot more throughout the day from her. When we come back, Walter Isaacson on his new book. It's called The Greatest Sentence Ever Written, and he's written some pretty great sentences about it. As we head to a break, we're watching Bitcoin this morning. Take a look right now. You're looking at Bitcoin sitting at 91,135 bucks. It had broken below 90 for a hot second there. We'll talk about that as well. Coming right back.
Know this drug, but it's called Winrevair. I'm talking about Merck. The stock is up 3% this morning. This is a lung disease treatment called Winrevair, and it did meet its primary endpoint in a mid-stage study. And with the Dow down, it's unusual to see one of the components trading higher, and it is up about 3% on this. I'll look into it a little bit more, see how it works, and as we're making a lot of progress with lung cancer. Walter knows all about that. You've done CRISPR-type stuff, haven't you?
You know, it's important to figure out how we can apply these things down to health.
Yeah.
I mean, be it gene editing, and that's one
What
of
was
the
the name of that book, the CRISPR book?
the code breaker.
The code breaker.
Jennifer Doudna broke the code.
I'm
won the
stealing
Nobel Prize.
Stealing Andrew's thunder. Go back to the beginning.
Back, Andrew.
Okay,
Walter
he's
Isaacson.
here. Walter Isaacson's here, and our next guest has a body of work focused on trailblazers. Elon Musk, Steve Jobs, Albert Einstein. So what could be considered really profiles in greatness? This time, though, his focus is on the greatest sentence ever written. And joining us right now is Walter Isaacson, Perla Weinberg advisory partner, Tulane professor, CNBC contributor. And there's his new book in all its glory. It is called The Greatest Sentence Ever. It is out today. And if I could, shall we read The Greatest Sentence Ever, or would you like to
hold these truths?
Would you like to tell the audience about what you think is the greatest sentence ever?
It's second sentence of the Declaration. We hold these truths to be self-evident, that all men are created equal, and they're endowed by their Creator with certain inalienable rights, among them life, liberty, and the pursuit of happiness. A great aspirational sentence, and we're entering our 250th birthday. We're not getting along. We should all go back to the values in that sentence and say, most of us can rally around it. Let's celebrate the 250th by bringing down some of the poison in that.
What's so interesting about this book is the creation of that sentence, the debate over certain words in that sentence, and then you go and take us on a journey about how people have used it and almost transformed that sentence in their own image over the years.
The Continental Congress created a committee to say, why are we having this revolution? And it may have been the last time they appointed a great committee in Congress. It was Thomas Jefferson, of course, Ben Franklin, and John Adams were on it. And they edited the sentence. There's 5 drafts of the Declaration. And even in the editing, you see them trying to reach our values and create an aspirational sentence. I mean, they say all men are created equal. Well, 7 years later, Lincoln has to dedicate a cemetery
Walter,
to them trying to get there.
I heard that was not since many were slave owners, that was not a commentary on what you're referring to. It was a commentary on kings. It was a commentary on all men are created equal, none are kings. Was why it was written.
But it was
that's
all
how they
about
could
social hierarchy.
Right, but that's how they could
knew it applied because in the Virginia Declaration,
then they should have. They didn't act on it.
70, the month before in Virginia, we talk about it, where they do a Declaration of Rights. They say all men are created equul when they enter into the bonds of a society.
Okay.
Meaning that's excluding
How
slaves.
could they look the other way?
Jefferson,
Oh, excluding slaves.
Yeah, that phrase was voted in to exclude slaves. Jefferson takes that phrase out and just says all men are created equal, knowing there's a contradiction, but that we're going to have to resolve it. And
so it wasn't necessarily just about no men are kings. It was foreshadowing what would happen in 100 years, you think?
Absolutely. It was other countries had been the divine right of kings, as you said, or the swords of conquerors. We had entered a social compact. That's why the sentence begins with we. That's why the Constitution begins with we.
And it took generations to change for the way that what they were, I guess, aspiring to took a long time.
They were aspiring, and it's a living sentence. That's why Jefferson takes John Locke's life, liberty, and the pursuit of property and makes it the pursuit of happiness. It can breathe. Each new generation can try to live up to it.
So the question is, are we living up to it now? Do you have hope that we can live up to it if we're not?
Oh, yeah, you look. We've had a run in American history in which we have expanded the concept of all men are created equal, life, liberty, and the pursuit of happiness. It forms a foundation for the 2 basic ideals of America, which is we share a common ground, and secondly, we share an American dream, where each generation gets to succeed better than the last. Where we are failing now, partly, is in that American dream, which is if you were born my decade, you had a more than 80% chance of doing better than your parents financially, inflation adjusted. If you're born in the past 30 years, you have less than a 50% chance. This is why you have a lot of, populist and other rebellions against the system. We got to get back to the American dream, and that's what the book's about.
How do you think we get back there? And do you think that the dream of before is still available in the same way today, given the geopolitical world that we live in, given the competition that we live in? I mean, it's sort of an interesting, there's a lot of different dynamics.
You talk about the geopolitical world we live in. I think one mistake, and I was part of making that mistake, we discussed it at this table, is believing we should have total globalization, all free trade, movement of capital, whatever. Well, that hollowed out. I mean, I'm from Louisiana, places like my aunt in Bogalusa, they no longer had places they could work. So we have to get back to having manufacturing back in America. We have to also reduce some of the political polarization that we've seen. And that's why I'm trying to push for our 250. Reduce that. Because if you reduce some of the political polarization, we can fix a lot of things. We could probably even fix healthcare.
How do we deal with the polarization issue? I mean, we blame social media, we blame all sorts of things.
You're right to blame social media, the algorithms of social media, and for that matter, all digital media, including talk radio, cable TV, whatever, tends to polarize us. The other thing that polarizes us is the fact that you just don't have the affordability that my generation or my father's generation had, that by age 30, half the people had a house, were married, were having kids. Nowadays, it's like 12% are doing that. We have to build more housing, we have to make things more affordable, and we also have to reduce the poison in our media.
You talk about the journey that this sentence has gone on, and people like Martin Luther King and others who've used it, as I said, in their own image, if you will. Is there one that you think is the most interesting recent version?
Of using the sentence?
Of using the sentence. And how would you use it today?
I think you'd use it today to say many of our debates, I listened to you all at this table doing it, are about how much should be totally in the realms of private property, as John Locke said. But John Locke, who was the inspiration for the sentence, also said, yes, you should have private property, but you have to have enough and as good left in the commons. That means fire protection, police, safe streets, good schools. And then we have to argue a little bit about how much of other things go in the commons. The debate over healthcare is simply how much should be in the commons. If you frame it that way, these are not life or death existential debates. It's just people slightly disagree on the balance. We're bad at doing balance. Franklin and Jefferson were scientists. They loved Newton. They knew how to balance forces, find equilibrium. Nowadays, compromises don't make great heroes, but as Franklin said, they make great democracies, and we have to figure out how to balance some of these contending forces.
How much, we got to run, how much did you, I mean, you've been thinking about this for a very long time.
A long time. Since I was writing Ben Franklin, I was working at CNN at the time, and looking at Jefferson's, we hold these truths to be sacred, and Franklin puts in self-evident, and then he says they're endowed with right, and John Adams was endowed by the Creator. I'm saying, wow, they're balancing the role of divine providence and the role of rationality in our country. I was working at CNN, and that day Roy Moore put the 10 Commandments on the steps of his courthouse. They were, federal marshals were trying to take it off. And everybody said, we have a great crossfire. And I'm thinking, that's weird. We in the media, the politicians, using the 10 Commandments to divide us. Let me get back to that greatest sentence ever written and explain how we can keep it in balance.
It's a great education. Greatest sentence ever written. Thank you. Appreciate it. Thank you very, very much. When we come back, the most important stories you need to know as we get you ready for the opening bell on Wall Street, including a major disruption for Cloudflare customers. We'll tell you about that after this. Breaking on Squawk Box this morning, Cloudflare, a tech infrastructure company, this is big, guys, has many big-name clients, including X and OpenAI, said this morning it is working to fix some internal issues that are impacting customers. If you tried to use some of those sites, you may have found yourself stuck at some point along the way. Meantime, Home Depot's Q3 earnings missing estimates for the third straight quarter. Home Depot also cutting its full-year profit outlook amid a weaker housing market and slower consumer spending. And health insurers are down after President Trump's social media post this morning saying he only supports health care that gives money back to the people with nothing going to the, quote, big, fat, rich insurance companies.
I just don't know where the people that get the money to buy the insurance plans are going to buy the insurance plans. It's going to be from the insurance companies. I have to think it through.
We got some red on the screen.
We do.
S&P 500 off about 30. Dow Jones off about 330. Yep. NASDAQ down about 145. Make sure you join us tomorrow, folks. Squawk on the Street begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures do suggest a fourth straight day of weakness as the S&P closes below the 50-day, first time since the spring. Bitcoin dips below 90K. VIX approaching 24. Our roadmap begins with the sentiment in the market as Alphabet CEO warns about some, quote, irrationality in this AI boom.
Plus, we are just a day away from NVIDIA's latest earnings. Of course, a lot will be riding on that. We will tell you about the massive options action as well ahead of those results. And speaking of results, Home Depot reported it did miss estimates. It also cut its outlook, what that may be signaling about the consumer.
Let's begin with the tech sector this morning, poised to extend yesterday's sell-off and on track to snap a 7-month win streak amid these investor jitters regarding AI and valuations. According to the latest B of A Global Fund Manager survey, more than 50% of investors continue to believe AI stocks are in a bubble. 53%. It was 54% last month. Interestingly, Jim, for the first time since 2005, most investors say companies are over-investing right now.
Right, and I think this is intriguing because the companies that are allegedly over-investing, well, one of the chief ones is Alphabet, Google, and apparently they admit that there's irrationality and Buffett's buying it and people are buying the stock. A second one that I think is down a lot, Meta actually has to spend because it's worried about OpenAI coming into it. Amazon hasn't spent nearly enough, but David, they just did the bond deal. But I would, and by the way, Apple hasn't done anything, and they're going to be the recipient of greatness. Someone yesterday said that, well, they missed AI. Missed AI. One of these companies got to pay them. So my take is that you've got the smartest people in the world, and I tend to think that as a group, they tend not to do the wrong thing, other than in 1929, where Andrew Ross Sorkin depicted that the smartest people in the world, including a professor at Yale, got it totally wrong. So we have to be in that kind of situation for me to believe, and I don't think we are.
You don't? Right?
No, I don't.
Yeah.
Maybe 1929. That's the
no. Although last week, to be fair, you were sort of done with the idea that OpenAI is going to dominate the world.
I think that they're the Achilles heel.
You were starting to wonder and question to a certain extent.
Yeah. Well, you know what? The deciding point was a very strange video where a man wanted to have his stock shorted, and when he wanted to send people an invitation to their funeral when they were shorting, and I don't think that invitation necessarily. Sometimes you don't get it.
It's interesting. If you do look at a chart of AI, say, momentum, that date where Altman said that to Brad Gerstner on November 3rd is kind of right where this market began to roll.
And that's when Oracle started going down and David started talking about the credit default swaps. When you see that kind of behavior, I'm putting that in the irrational, the irrational exuberance. Now, of course, Greenspan was wrong. But what struck me, David,
yes, talk to me,
was the nature of the vitriol linked with the best CFO I ever remember, a Titanic person. I was a Titan, but I switched to Titanic.
Yeah.
Sarah Fryer
asked
about, got the backstop, asked again, got backstop. It would have been better to walk it back right then than to walk it back there. Now, she doesn't want to hear that.
So you think we are still sort of dealing with the events of a week and a half or so ago, coupled with, obviously, the continued concern, let's say, broadly speaking, about the amount of money being spent, the debt that's now being raised, even though, of course, so many of the companies raising that debt still have net cash positions.
True, but David...
not Oracle, but...
I know exactly.
In the coal mine.
Is it?
Blue owl in the coal mine.
Blue owl in the coal
Blue
mine.
owl in the coal. Yeah, well, these people always say coal. I mean, it's such a. I mean, I remember when Blackstone was the coal mine for housing, which was, of course, the bottom in housing.
Yes,
you had
it
to do
was.
it. And
Yes,
Jonathan.
it was.
Well, okay, so the chart's not that great. I got 100 of them look like that.
Actually, the longer-term charts, if you go back, maybe give us a 2-year, 3-year, 5-year, you see a nice kind of classic head and shoulders on this one, Jim.
Well, it's great.
Listen,
my
they were
God.
incredibly
Just a second,
successful
David,
at raising enormous.
David, that's a concussion. That thing's in the blue tent, David. It's in the blue tent. Don't you dare look in there. $200,000 fine.
Brian Dable got, first,
Well,
he fined.
That
Then
was
he got
talking
fined.
about a canary in a coal mine.
They were incredibly strong at raising capital. I mean,
Yes.
my God, the amount of assets that company has accrued in a very short amount of time is nothing short of extraordinary.
They seem to have come from
That
nowhere, but
said,
not.
and I don't,
Actually,
by the way,
they're
they've been on,
disciplined.
Lipschitz been on, Ostrover, they will tell you our underwriting standards are as strong as anybody else's,
they
but
are.
market seems to disagree.
Well, the market does, but it's one fund, and you can say that fund was errant, and they switched
It's
it
one
to a
small billion-dollar fund, that's right, that was catering towards individuals, wealthy individuals, that they are conceivably going to merge into one because the other one trades at a 20% discount to NAV,
But it's better
would
yield.
be a 20% haircut.
better yield, and we don't really know what's in it. And we
Well,
can all
these are
decide.
separate funds run by Blue Owl. Now,
But how do you-
specifically,
you
this
can't
is a
write off company.
company.
Very good company.
By the way, with a now 6.5 something percent dividend yield.
I think it's actually
Maybe
better
even
than-
higher. I haven't looked
better
this
than
morning.
David.
Yeah.
David,
All right.
I think you've got it.
Are you getting on the Blue Owl bandwagon?
No, I'm just saying that to just denigrate a company, 6.5. Denigrate a company because of this reminds me a little bit too much of Blackstone. But I'll tell you this: if they come on the show like Blackstone did,
Yeah.
remember when Jonathan Gregg came on the show?
Of course I do. I brought him on.
Oh, I'm sorry. Yeah, that's right. I forgot to give you credit.
Yeah, thank you. Well, that was an important interview for them too.
Okay, so let's have Blue Owl come on. They've got a couple of people with this fellow Lamb. It's very bullish, right? Says to take on, and let them tell us what they own, top 5 holdings, and I will feel so much better. So I'm inviting Blue Owl on right now to be able to tell us what's in that, what happened, and then I'm going to be either reassured, like I did. Jonathan Gray, immediately as he came on, I listened and I said, it's time to buy Blackstone.
Well, not only that, but somebody else listened and came in as almost permanent capital for B-Read as well at the time, if you remember, who was watching when Jonathan credits us with, in part, helping that transaction occur as a result of that first interview.
Look at that head and shoulders. I credit him for that. Just kidding.
It hasn't been a great year for any of the alternative asset managers, by the way.
Is there any? I think Blackstone is a great company. It's going to come out terrific, and maybe Blue Owl can, but they have to come on.
Well, they come on all the time.
They do come
The
on all
question
the
is whether
time.
they're going to do it now.
Our show and what they own. They have not come on our show. This is their moment, and if they don't come on our show, then I have to think differently.
Well, then he's going to show up. I mean, Lipschitz will
will
come on. He'll definitely come on. You want him to come on this show? It's going to take a while to go through that whole portfolio, by the way.
Okay, look, I'm inviting him because I found that when we invited Jonathan Gray and he came on.
No. I invited Jonathan Gray. What are you taking that one away from me? I have so few victories.
You invited him.
Thank you.
Jim does mention this piece of sound from Sundar Pichai talking to the BBC about irrationality in the AI spend and whether or not any companies exposed will be immune. Take a listen.
Given the potential of this technology, the excitement is very rational. It's also true when we go through these investment cycles, there are moments we overshoot, right, collectively as an industry. We can look back at the internet right now. There was clearly a lot of excess investment, but none of us would question whether the internet was profound or did it drive a lot of impact. It's fundamentally changed how we work digitally as a society. I expect AI to be the same. So I think it's both rational and there are elements of irrationality through a moment like this.
Doesn't stop Loop from upgrading today.
No, look, I listen. I actually like that. I like the skepticism. The fact is, they're the winner. They've done a remarkable job. They could get a contract with Apple today. I think all of us, many people doubted that you could transition from the regular Google to Gemini, but it's worked. And it's worth any amount of spending for them, provided that they're able to reason. I tried to reason, by the way, with OpenAI, which I consider to be the Achilles heel But I think Alphabet Gemini is terrific, and that's
Well,
if they own search.
we're getting Gemini 3, and that in part may be one reason why the stock has been moving up, not just because of Berkshire showing it owned almost $5 billion worth of stock. And the question is, well, what will Gemini 3 have? Will it be, a lot more about image generation and/or coding? What threat will it pose
reasoning?
to ChatGPT? Well, of course, it's always going to be
Well,
about
no,
inference and
Jensen
reasoning.
Wong, who will speak tomorrow, will say, I think that the Vera Rubin is much better at reasoning.
Right. But that's the chip that would be used. But in this case, I make this point a lot, but I want to explain it. Google, for inference, uses their own design chips, and then they manufacture them at TSMC. They're called TPUs. It gives them a cost advantage over those who have to rely on the chips you just mentioned.
They're worth
because NVIDIA charges a lot more. And so if those TPUs are as effective as many believe for inference, it does give them a cost advantage per token over some of their competitors. Whether that will ultimately matter, I don't know.
Well, I think it keeps OpenAI out of aggressive search. I think that Meta is down most severely because they were the ones that said they're going to spend the most. But Meta does not want OpenAI coming into social. Microsoft is B2B, business to business, which I think is really good. And OpenAI is business to B2C, and I don't like business to C.
It's a lot more consumer, right? Anthropic is obviously more in the enterprise.
And
then the question with Meta, Jim, is just what are you spending all the money on given you don't have a cloud provider?
Well, I think that...
Is it all just to enhance your advertising?
I think so. I think that they're the number... Well, obviously, you can go to Google for advertising, you can go to Amazon for advertising, or you send them a check. By the way, Reddit is the cheapest. That's the best part.
Meta's down, what, 25% from the highs? Right?
No, look, you're being asked to have faith in a person, Zuckerberg.
Yeah.
And you know what? Got to tell you, Carl, I've had worse faith. This man, I think, is great at what he does. I think he owns big consumer advertising. He could own a lot of different kind of advertising. He has a lot of optionality. It's the one that I think that OpenAI could kamikaze. That's the problem. They can't kamikaze Microsoft.
What do you tell viewers who ask, hey, whatever happened to the metaverse?
Well, the metaverse may have been ill-advised. Hey,
money that was spent in Reality Labs, remember, before they became efficient and got the...
Well, okay. He is a risk taker, Zuckerberg.
No
I
doubt.
like that.
No doubt.
And by the way, the glasses are good. Now you can say, well, come on, that's niche.
People love the glasses.
But look, do I trust him? So far in my life, I have. I did not recommend his stock when it first came public because he did not have a strategy for this. But did he develop? It's my wife. But did he? I just want to be sure people know.
Yeah, of course.
Did he come up with something that dominates this? Yes. So I am taking a leap of faith, maybe. A leap of faith.
So right, and Amazon also, you're still on board there as well? Stock's actually given up all the gains after earnings, I believe.
Amazon Web Services, I'm going to see them. I think they did it. I think that their acceleration is good. Do I want to buy these stocks today? Let everybody. We had that great survey from Bank of America. Let everybody sell these. Let people get out of them. Then they're a buy. That's how the market works, according to how to make money anyway.
Yeah. Amazon and Microsoft both get downgraded today over at Rothschild Redburn to neutral. Jim, they take a look at the cost of the build-out relative to Cloud 1.0, and they argue that GPU deployments require 6 times the capital.
Look, you're trying to be part of the Industrial Revolution. I don't think that this is the railroads where Jay Gould wins because he was the dirtiest player. This is not that. What it is a couple of companies that want to dominate and keep others out of the vertical. I think that's, look, in 2000, who came out? Who came out? Amazon. Google wasn't public.
Google
that was
not
it.
Public.
So
Amazon,
they don't want to be. There was an outfit called Der Bingle. What was it? Bing Crosby. It's like Bob Hope Drive. Bing Crosby is a street.
Bing. Yes, Bing.
Yeah, in Imperial Valley. Whatever.
Yes.
That was the biggest company on earth, and they got the.
That was Microsoft.
Notice
and they got
I
beat.
did not curse this
That's
time.
True.
Unlike Dr. Borla, Pfizer looking up, I do think that you have to say you don't want to be the loser in this. That's the real crime. Would be if Meta didn't spend the money and we say, remember
and
Meta?
That's why everybody is not in any way changed their spending forecast or appetite. And now they're issuing debt at a blistering pace as well.
But we'll talk about that. But what do people? It's greeted with massive selling. It's greeted with a level of skepticism that says we're more of at a bottom than a top.
Gets to the other questions.
I think that what does Zuckerberg have? What choice does he have? I'm going to get kicked out of me by Sam.
But your point is that there will be losers. So some of the selling is actually a great idea.
Oh, I'm not against them selling. I've said 3 weeks ago, I gave warnings, and 2 weeks ago I said it's the end of the era
of magical
investing. So
did.
Listen, Joan Didion,
You did.
I'm right.
You did.
Joan Didion was something.
She
By the
really
way,
was.
Slouching
She
toward
really
Bethlehem,
was.
I think, was still the best. Play it as it lays. You ought to read that. You ought to check that out.
I've never read that.
Meantime, there's some important.
But he did get Jonathan Quayle, Jim.
Yes, that was huge.
Yes,
I didn't mean to
big.
interrupt.
It was many years ago, but I appreciate you guys
There's music in our ear,
recalling
which
that
means you
moment.
got to be quiet.
We'll get to some news in housing and consumer as well. As Home Depot's under pressure, they cut their guide. Meantime, shares of MP Materials, as you know, up more than 250% this year. Despite this little recent pullback, company's CEO is going to join us at Post 9. We'll talk some rare earths and critical minerals. Take a look at the pre-market here as we try to work our way out of this three-day selling hole. Stay with us. Home Depot is moving lower in the pre-market. The company posts a Q3 profit miss, cuts the guide. CEO Ted Decker says an expected increase in demand did not materialize, adding, quote, "We believe that consumer uncertainty and continued pressure in housing are disproportionately impacting home improvement demand." Jim, U.S. comps 1/10. We wanted 1.5.
Right now, this is, I've just issued a buy to club members. I've been holding off since March, fearing this. Not necessarily the bottom. It certainly leaves some room, but this is the premier company to buy when you get rate cuts. We had some interesting.
We've had 6 in a sense.
Well, but I just got to tell you, this economy. I know that the hiring seems a little weaker, and some people say prices are still too high. The president's actually doing something about it. But
Is he?
I've got,
Is there really something that's being done?
Beef, bananas, coffee.
Taking the tariffs off, potentially. Yeah,
I think
that'll be helpful.
Look, I think that, it'll be helpful. You put them on, take them off. But you don't sell, look, everyone's going to, I'm going to tell people they're not going to sell. Lowe's will be a little better tomorrow. I have to buy it because this is what the playbook says to do. When everyone throws it up, it's the premier company involved in this. You have to take the other side. Look, do I want to? It's what's more painful. What's more painful
There hasn't
than
been
buying
revenue
this?
growth for years at this company, though. Since COVID obviously had the huge upturn because so many people were doing their at-home projects.
We're at a 40-year low in housing,
and they're
supposed to do well.
It still trades at a pretty high multiple,
Well,
doesn't
it is. It's a great company. Look at what Gary Friedman's been saying.
You and I talked last week about their exposure to ICE detentions and raids and how they've been relatively silent on whether or not they know that these things happen in their parking lots. The other good name to watch, Jim, is Builders First Source, which has just had a miserable few weeks.
I know, and that's a pretty good company. But I guess what I'm saying is, look, we do not know when ICE is going to stop targeting them. We do not know when housing's going to turn around. But we do know, and I know, David, you're right that it's not been a great buy for a long time.
Well, I'm just saying it's a great company. Nobody doubts Home Depot
that's
is
it.
a great company, but its revenue growth has not been significant for a number of years now.
Well, they don't
since
put up
perhaps it got thrown out of whack as a result of the huge upturn during COVID.
Right. But they don't put
and
up a lot of stores.
And it does trade at a very high multiple.
They don't put up a lot of stores. They are the best company. No one would do, except for maybe Marvin Ellison at Lowe's, would disagree that they are the best company.
I don't think that is dismissed. What does it say about the consumer, though, when they talk about uncertainty and continued pressure in housing?
You have tariffs on a lot of companies. Look, they have white goods that have been hurt because of the tariffs. They have tools that have been hurt. Go talk to Stanley Works. Well, Stanley Black & Decker. But look, if I think the tariffs may be removed, and I think that the Fed will cut, I don't want to necessarily go buy Toll Brothers. As much as I like Toll Brothers, I'd buy Home Depot. So I'm taking the other side of this trade, knowing that it looks horrible. Because sometimes the bottom is when it looks horrible, not when it's at the top.
All right, I'm marking you down at 341. Just going to mark you down 341. You're a buy.
Listen to him, huh?
All right.
I didn't necessarily say it was the bottom.
What do you mean? You just said I'm taking the other side of the trade.
Record.
I don't.
You just said it.
I don't make one big statement buy. I haven't done that since 1981 when I had my head handed to me on a Delta buy.
So you're buying a little.
Yeah, exactly. Okay. And then I'll buy more. Okay. That's how I do it.
Okay.
No, you see, I'm an idiot. I like to be really big, come on the show, pound my tape. David, I have a product. It's
Jim's taking down a lot of Home Depot here, Carl. I don't know if you heard.
I'm
at 341.
taking down 25 shares. Right? 25
million shares.
No.
No?
Ooh.
Look at Kramer's Mad Dash.
You do a good owl.
He's doing a lot.
I had an owl for a long time in my barn.
Really?
Yeah, one of those white owls, like a cigar.
A barn owl.
Yeah.
Yeah.
We'll count down to the opening bell. Depot, of course, is going to weigh on the Dow, where futures are weak. Don't go away.
I did have an issue. Hello. My name is Washboardjim. I am the thinking strategy and the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Good morning, retail traders. Do you understand what side of the street I'm on, baby?
It's been a busy morning for shares of Cloudflare, close to session lows today as they experiencing some network issues. It's affecting platforms like X and ChatGPT. We'll talk more about what this means.
I'm a legend according to Grok.
Opening bell coming
Is that what you're saying?
Less than 5 minutes.
I did look that up the other day. I was on there. Chris, am I a legend? Say yes. Good morning, John. John's new to the room. Absolutely. Oh, you sent it to me? Where? Who are you talking to me? What'd you send me? Invitation to dinner? I better button up my shirt, make this a proper, showing off my chest hairs. Whoa! Okay. Well,
get to a mad dash, shall we? Or we have an opening bell. What do you got?
What does the market like? Well, it likes Merck on the Revere trial. Obviously, we know it likes Amgen near high. But it loves Medtronic, which reported today. Now, there's the Jeffrey Mark.
oh, it's only got well, we only got a minute left.
Waiting for the earnings.
That creeped up fast.
Got it today, and I think that, believe it or not, even up here, it's a buy. Because they've got a series like where they are with ablations, where they are with diabetes, which are spinning off. The cardiovascular really is second to none.
Nice spike on Apple.
About neuroscience, which I have worked with them to be able to say, look, guys, you have to make breakthroughs in the toughest area, neuroscience. And personally, I said I need this. And he committed, and he's delivered.
I'm committed to shut you down. We got a double bottom on the SPX, write it open. Folks, we have a double bottom on SPX, write it open. Along with that goes a burp. A small one. Today's the 18th. Oh gosh, the strikes are so expensive. The 6700s at $4.80. 460. Prepare ye in the name of the Lord. Well, I see a Head and Shoulders. Strike will be 6,700. And we're at $4. 390. Oh, it's not what I wanted. We're at support right here, so I'm going to jump in a contract. These are the 6700s at $4.20. Do you understand? God, look there. I'm sure I took that in here. $6.90. Okay, I'll see y'all later. Everybody asks, how in the hell does he do it? Well, it's not that hard. Double bottom was called, and I don't know what I was looking at. I might have been looking at the wrong chart. We're at $8.50. Oh my God. $9 already. Oh my God. I'm out. I'll take it. Oh. Woo! 880. Do, re, mi, fa, sol, la, ti, do. I should get a good grade for that one. Good job I missed. Very good. Bringing in the cheese, goodness how delicious, bringing in the sleaze. Bringing in the sleaze, bringing in the sleaze. Did I ever tell you I have a crush on Michelle Obama? Bringing in the cheese. Come. Good morning, Ricky. Good morning, DeLucas. Good morning, Bobby. Good morning, Bosch. Oh, your 9-year-old daughter's account? Now, if you have any children listening right now, I need to know so I can be in my best behavior. If you know what I mean. Because I turn this thing into PG just like that. Any high school children listening right now, let me know. Okay. Any babies listening right now, let me know, and I can do baby talk. And if your dogs are listening, I can do dog talk. And I'll show you an example. If you count to 3, you can trade with me. Riff, roar, tip, trick, riff with me. And I spoke that in English, dog. So we had the breakout, tweezer bottom. Jimmy jumps in the trade, and I mean, life don't get no better than that. It's a good way to start the day out. He understood what I was saying. That's funny. That's too funny. Some people's trading platforms are down. And this is the best mine's ever run. I don't know what's going on. So I'm going to look at the watch list. Mister's up $5. Kroger's up. Oh, I got a picture of how much chicken is up here at my grocery store. This is why I don't like shopping there for meat. Five chicken breasts for $25. That's $5 a chicken breast. £4.49. I can get the same shit at Walmart for $12 to $13. I can't believe it. This is the price cutter. I don't buy it there. I just don't. I quit buying my meat there, except when hamburgers on sale. $25.28. $5.63 a pound for chicken boobies. They got to have a heck of a markup. Okay, we're here to a double bottom. Oh, we're at the right shoulder for the second time. Oh, look at that. It came back right to that right shoulder line. Okay, we're at 590. Prepare ye in the name of the Lord for the second scalp. This is also a megaphone pattern. $5.20. Oh, I just farted. What's that mean, Jim, when you fart? Well, it's a sign that the trade might be getting ready. Is it a sign that you're a narcissist? Yes. We have an inverse head and shoulders here. We're looking at the $6,700 strike for a lotto at $5.20. $5.20. There we are again. We're at 520. We hit the 570 just a bit ago. Boom, 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 boom. La 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 la. $5.20. Take a little bit of risk. It could come down and do a double bottom and then I'll add two, just in case. bringing in the cheese. Goodness, how delicious, bringing in the cheese. Bringing in the cheese, bringing in the cheese. Delicious, bringing in the cheese. Bringing in the cheese, bringing in the cheese. Delicious, bringing in the cheese. We're now at $6.80. We have a problem here. I thought I had this changed to default. Damn. Bringing in the cheese. Bringing in the cheese. Dang. Okay, I'll have to add on. $4.20. They're up more in my yard. Come on. Oh, Home Depot. It's at my support on the Head and Shoulders. Boy, I'd almost be tempted to buy some long here. Let me look out 3 months, see what the price is. December 19th, January 16th for Home Depot. Yeah, they're a little too high. $350 strike is what? $13.80. Ugh. God, they're just too high. This just sucks. I ain't winning on this trade. I'm gonna have to get out of it so I won't lose my money that I made today. I didn't expect that pullback. I really didn't. What about NVIDIA today? NVIDIA has a double bottom. NVIDIA has a double bottom. Damn it. I'm at the bottom support on my watch list. I mean my alert this morning on SPY, 659.99. So we'll see if we hold this. If we hold it, we're good. And I should get 2 more contracts. That'll give me 4 at $600. I think I'll do that. Come on, baby. Hold. 285. $2.85. Now I have 4. $378 average. Do you understand? Jesus. Well, PLTR's back at support. And these things are 235. Jeez. It'll be one of them days. I'm still safe, but I don't know how much longer it's going to last. I'm down $400. Let's see if I had 275, 265, 275. Gives me 326. They were saying that door's been like that ever since January. No one told me that. Well, they're really bringing it down. AMD took in a big knife. Home Depot bounced up. Jimmy said it would probably. We got a lower low on NVIDIA at 180.13. I really want to swing this into earnings. Damn them. NVIDIA at 179.89. AMD straight down. Apple at a support level. Can go down a little bit more. 266.32, somewhere in there. Meta at 585. So Meta's down, what, $300 from the high? $796. I thought it was higher than that. $796. So it's down 200. It's nice enough to have a squeaky chair. Man, these things are the 6700s at 155 now. We're at the 200 on the AM Depot. U.S. factory orders month to month, August 1st, 1.4 versus 1.44 estimate. Housing market index for November's 38 versus estimate of 37. I have to go big on this. Bring us down. I don't like it, but that's the way it is. 1.60. I got $2.32. I got 12. We got 3 white soldiers, and we're squeezing. If we break the 21, we're free to get to the orb. This can easily drop back down too, the way this market's going. Come on. This is what I don't like, trade on hope. $12. If we break the 21, we're getting ready to find out here real shortly. I gotta sell them here and take the $360 loss. There we go. Come on. Break it. My average is $232. $232 a contract. God. I need some cleavage. Dow Jones down 525 points. NASDAQ down 354. The S&P 500, SPX down 69. Tesla under 400. This is a broad sell-off. We're at 205. Oh, God. Always clean as Jim. Always clean as Jim.
Hello.
Hello. going on, baby? We have an ascending triangle here. Oh boy. Well, I'm glad I got the first trade out of the way because I don't feel as bad, but shit. Netflix is up. AMD down almost 6%. HIM's down today. Applied's down to $22. Amazon down 3.62%. Tesla down $12, under 400. Meta's the one I really like. Intel's at 33. Baby shark producer pink frogs. Don't be fooled by Netflix's 90% drop. Why ETF investors are barely blinking. I'm back to 175 on my calls. I need this to break. This is well, it's kind of an ascending triangle, but There's $2. I just don't want to sell them for a loss, so I'm going to hold it. We're coming up to the 50 and the 63. 220. I got an average of 232. And we're coming up to another resistance. Nancy, shot of vodka? Give me some of that rum with 2 volumes. And the date rape drug. I always wondered why I get horny at night with Nancy around. It's because she's been putting that date rape drug in. Got it out of her last night. I said, man, every time I go to sleep, I want to cuddle up with you, baby. She says, you do? You know I'm retired now. Well, it was at 220 there for a second. I'm going to call this, it's hard to call it an ascending triangle because of this lower low here. It'd have been great if it stopped right there and moved on up and broke out. I'd be a lot more bullish with it, but I'm still bullish because it's still an ascending triangle, just not as strong as one. That's on the SPX. Do 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 do. $2.05. Now I'm at the 63, so I always hate this when I'm down and I'm at a resistance. Come on, ladies.
And Director of Derivatives Analysis at Schwab Center for Financial Research. Okay, so we're seeing stocks sliding for a fourth session today. It looks like AI continues to weigh on the minds of investors. We've had some Cautionary headlines, you could say, from the likes of Google CEO Pichai around irrationality, JP Morgan warning of AI valuations and perhaps a correction there. We've had these downgrades for Amazon and Microsoft. What do you make of all of it?
Yeah, good morning, Sam. Certainly, just go back 2 months. Remember, we were talking about meme stocks and, the speculative excess and how, all these deals were being announced with AMD and OpenAI and everything looked great. And then, fast forward, here we are today, and that sentiment around AI certainly has shifted.
Break it.
Of that, thanks to, some of the
I could sell it.
around, Oracle's business model, so to speak, in terms of having heavy leverage there. Michael Burry coming out.
Michael Burry.
A lot of the talk is about valuation. It does matter now that the stocks are not making new highs. But a lot of it has to do with over investment and too much leverage, too much debt. I can go back to earlier this year when Zuckerberg said that Meta would rather overspend than to miss out on this opportunity. Those kind of statements, historically, Wall Street does not like to see heavy investment. They were rewarding a lot of these companies back as early as September for these deal announcements, and now I think that kind of shifted, and we go back to Meta's quarter in late October there. They punished the stock for saying they're significantly going to increase CapEx into the new year. So here we are, and if you look at the technicals, that's what's really standing out to me. I think we could get some rotation. We've already seen that into healthcare, staples, financials over the past 2 or 3 weeks. To some extent, that is helping to support some of the index levels. But Sam, I think yesterday was a key technical event. So let's just talk about the S&P 500. Back on October 10th, we go down that 3% on the Trump-China tweet, and that kind of rocked markets. And we went down to the 50 SMA on the S&P 500. Then we go make a new all-time high. That's what you want to see in an uptrend. Then November 7th, we go down and we test the 50 SMA. Once again, we bounce, which is what you want to see, but we did not make a new high. And then last Friday, we go down to the 50 SMA. We bounce, but you do not want to see the frequency of these tests at a support level, a key support level like the 50-day simple moving average, increase as we have. It's like knocking on the door that eventually could kind of break, or I should say the floor, not the door. And then yesterday, for the first time since April, the S&P 500 closed below its 50-day SMA. The Dow Jones did as well. The NASDAQ Composite did as well. And the Russell 2000, which has been in a downtrend for about 5 weeks now, closed below its 100-day SMA for the first time since June. So we have some technical damage here, and we may need to kind of flush out some of the excess, not so much in exposure, but in sentiment that is still working its way through this AI secular growth story. Now, we've got NVIDIA tomorrow. We'll see what they have to say. But oftentimes when there's a lot of this scare that comes up, even if it's a DeepSeek type scare, we generally need to get some kind of a capitulation type flush.
Capitulation.
That will help to reset kind of expectations.
That's where I like to be in the market.
From there, perhaps, we can then begin to have some repair or get some healthy
capitulation
technical movement to the upside.
There's a lot of sort of ways on.
That's kind of where I think I feel where we are.
So what the jobs report tells us as to how the markets are thinking about that December.
That means we're not hit the bottom yet, but we're close.
You mentioned rotation, and it certainly hasn't been a full sell-off because we have very much seen this rotation into a sort of more value play, sort of a more defensive type of trade as well. I mean, healthcare is up just fractionally today. Real estate, consumer staples are up. Materials are a little bit higher. Do you think that would continue come some of the event risks we have on the horizon this week?
It's going to continue as long as the sentiment is sour around AI. That's the belief that I have. I mean, look at Medtronic. They reported, the earnings were pretty good. Guidance, slight raise, but the stock is gapping up to a 3-year high. That just speaks to looking for relative safety or relative risk reward. When you have technicals that break down like this, we know that they fall faster than they go up. And so therefore, from a risk-reward perspective, and yes, my lens
spies back to my support, low support.
I get very nuanced. I'm not talking about 2026. I'm talking about the next couple of weeks.
We hit the VWAP.
Year.
On the SPY, so we'd have to break the VWAP.
Signs of stabilization within technology, within AI, before the money begins to go look for that playbook that we've always gone to, which is growth and going back to mega cap tech, going back to where that EPS growth is, et cetera. So while we're working through some of this sludge within AI, I think, yes, that the typical playbook is when you've got a correction like we're getting within growth, the money rotates over to value. We're also looking at, the yields on the 10-year, and the Russell would be a good play if we were seeing yields fall substantially, but that hasn't been the case. So we've got that jobs data to work through. We've got some of the questions around the Fed to work through. But in the meantime, yes, start scanning. The market's basically saying, give me a sub-market multiple, even if the fundamentals aren't as good as somewhere within the technology space, because at least for right now, that's where the relative safety appears to be.
Really, really quickly, Nate, if I can pick your brains about NVIDIA, I mean, what has this company got to say or do? What metrics should we look at as to what is going to be the make or break here as to whether we see some further downside or NVIDIA manages to pull us out of the rut we're seeing?
Yeah, sure. So what I'm looking for tomorrow, last time Jensen Huang said, we're sold out of everything. When they were asked, had discussions about the H20 and whether that demand is waning is all because of their new product line, Blackwell, Rubin, etc. So number one, does his statement deviate at all or give any kind of hint that demand has come down from his last quarter statement that said, we're sold out of everything? AMD also kind of echoed those same that same kind of tone that demand is there. The other thing is with NVIDIA is margins. So their margins, they've enjoyed such a moat. And they've been, they were at 76% maybe a couple years ago.
Come on, baby.
I think they were around
225.
Slight degradation. That's not a big deal. That is to be expected. But if margin guidance
I get out
really come in
even
lower than what
but we're at that
is
third top of the
anticipating,
63.
then potentially
Damn
that
it.
competitive threat, which we know some of the hyperscalers are
Okay,
building their own
Jimmy.
chips. We know that AMD
Panic
is
attack.
attempting to catch up to NVIDIA. Those are really the two things.
That's the major resistance to
And then,
break.
of course, when we look at guidance, what is the degree of the beat? Everybody expects a beat and raise from NVIDIA. To what degree is their forward guidance above what analysts are expecting?
Okay. Demand, the moat, the margins. We'll be watching. Thank you as always. Nathan Peterson, Director of Derivatives Analysis.
Oh, my gosh.
Financial Research. Always appreciate it. Coming up, it's time for the Morning Trade. We'll take a closer look at Home Depot's
Tomorrow's
earnings
NVIDIA,
and
tomorrow night.
What it means for Lowe's, which is out tomorrow morning. Morning Trade Line. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles,
Just that little bitty
courses, and
candle,
more,
$60.
all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines,
Nicole,
earnings, and global movers. Just the
will you
trades
show
that
some
matter.
cleavage, please?
As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Line. Let's focus on retail earnings now, starting first with Home Depot. The stock is falling in after the big box retailer reported weaker than expected third quarter earnings. The CEO pointing to consumer uncertainty and continued housing market pressure having a negative impact on home improvement demand. So here's a look at the chart. Here's the price action for the major players in the sector today as well. We've got Lowe's and Costco. We'll have a look at those as well. And so Home Depot shares under pressure today to the tune of around 3.5%, as I mentioned, on some of that guidance that has been cut. People holding off on home improvement, weighing on shares today, and we're seeing it across the board here. Not as deep losses as we're seeing in Home Depot post-earnings, but Lowe's is down about 1%, Costco down around 0.4%, so we are seeing some pressure amongst all three of those names today. Lowe's is up next on the earnings front, as we mentioned, and that's the focus of the morning trade. So joining us now for a closer look at this name is Marley Caden. What are you going to be watching out in this report, given the prelude we've got from Home Depot, Marley?
It is very interesting timing. We are seeing Lowe's move down after Home Depot's report, not as considerably as we're seeing Home Depot, down about 1% right now. But Sam, as we've been talking about, we talked about yesterday on Market
Low.
These outlooks from Home Depot and Lowe's, Home Depot just coming first, give us some clues as to whether the consumer is still cautious and holding back on renovations and do-it-yourself spending. And that's what we're getting from Home Depot, whose customer
I'm not. I'm getting ready to build me a shed.
Financially stable. So whether or not it translates to Lowe's, we don't know, but it could be
Store my lawnmower in.
Sympathy move to the downside. For Lowe's reporting tomorrow, the third quarter, analysts looking for revenue to grow 3.3% year-on-year to about $20.81 billion. That would mark a reversal from the 1.5% decrease that reported in the same quarter last year. Earnings expected to come in at $2.97 a share. Analysts also forecasting that same-store sales will grow about 1%. Now, I think it is important to note that Home Depot only grew by 0.2% in terms of that same-store sales metric, while analysts were looking for 1.3% same-store sales growth. So they were looking for greater growth from Home Depot and didn't get even close. They missed by more than 1%. Lowe's has been on a downtrend since mid-September. Shares are below their key moving averages right now, down more than 8%, close to 9% just in the last month. Analysts covering the company, though, have reconfirmed their estimates over the past 30 days. They are going with what they're expecting.
There it is, 1, 2, 3, 1, 2, 3.
To those estimates
That
in the wake of Home
fills
Depot's
the
earnings.
third bottom.
Could change as the day goes on. Also want to note that Lowe's has missed revenue estimates 4 times in the last 2 years.
God.
But for Home Depot, they're missed
That ain't
actually
good.
on earnings, not on revenue. So will be interesting to see as this is sort of our barometer for the consumer and consumer discretionary spending and home improvement spending. And we got a lot of really negative commentary from management at Home Depot saying they didn't see the spending they expected, they didn't see the turnaround, and that this lack of storms really hurt them as well. So it will be interesting to see if it also affects Lowe's similarly.
A lack of storms, so interesting. But yes, people holding back on DIY, so we're going to be watching if that translates into Lowe's numbers as well. Thanks so much for that, Marley. I'll talk to you a little bit later on. Let's trade it now with Tim Bigham, options strategist, Pilot AI. How are you approaching your example trade for Home Depot, Tim? Oh, Lowe's, excuse me. Tim, have you got us there? All right, we've seemed to have got a little bit of technical difficulties with Tim's line there. We'll try to re-establish that in a little while, but we are seeing Lowe's pressures are under pressure today, down 1% in trade right now off the back of Home Depot's earnings and ahead of its own report card. Coming up, we'll take a closer look at the sectors on the move this morning and some earnings from China as Baidu, PDD and Trip.com have now reported. We'll watch the price action coming up after this.
Let's get a big beer rundown.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures
120.
technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden.
Come on, baby.
We track macro forces, market trends, and company news that shape investor decisions. All with
My
expert
reputation
analysis,
is on the line here,
context,
folks.
From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
After this trade, I'm going to make my salad.
All right, we're back on Morning Trade Live here, and we were checking out shares in Lowe's this morning ahead of its earnings report. We've managed to re-establish the line with Tim Bigham, options strategist at Pilot AI, to get his example trade. Very good morning to you, Tim. What are you doing as far as your approach to this one?
Yeah, taking a look at this stock, it has certainly been taken out to the woodshed in sympathy this morning along with Home Depot, fast approaching major support around that 215 level. So I'm actually cautiously bullish on this stock given the, ferocity of the recent sell-off. So I'm just going out buying next week's 230 calls, selling this week's 230 calls, only paying about 50 cents for that trade, so I like that term structure vol differential to about 50 cents.
Well, that's cheap.
Greater this week than next week. And I'm really just looking for the stock to kind of maybe find a floor here and head slightly higher. I'm not looking for a rip-roaring rally at all. Certainly, I think the market generally might be in for a period of consolidation at best over the next several weeks.
Okay, good look at lows there. Down about 1.3% in the session alongside the other as far as a broader theme there. What are your sort of takeaways from the market action today, broadly speaking, Tim?
Yeah, it's about time is kind of what I have to say. We're back below the kind of cryptic 6666 level on the S&P 500 again. We got NVIDIA after the close tomorrow, and then Walmart before the open on Thursday. I think kind of a barbell approach there. Those will probably kind of tell the story where the market heads here. But I think we're overdue for a big sell-off. How low it goes here, be
Let's go.
interesting to
I bought
see.
more of these
Will
suckers.
NVIDIA kind of save the day. So I think we'll bleed out sideways here. I think the highs we saw from a couple weeks ago probably will be the highs until the end of the year for sure. And I think we might find a floor somewhere around here, even though valuation's still stretched. Growth still out there, especially in these kind of AI-related stocks.
Okay, we're just seeing the S&P 500. It's fallen through 6.6 right now. It's down about 1.2% in the session. Thanks so much for that, Tim, and getting us a quick look at lows as well. Option strategist at Pilot AI. It's time now to take a look at the sectors that are moving markets this morning. So I'm joined for that by Alex Coffey over in Chicago today. What are you seeing out there? Because it seems like the market continues to respond with some rotation here. What are your takeaways?
We're at Head and Shoulders.
I like that description. It really is a little bit more of a rotation than just all-out selling. However, where you see the strength today are your traditionally defensive sectors of the market, notably consumer staples, as well as healthcare. When you look at the heat map, though, although there is quite a bit of red on the screen, the S&P 500 still has about 40% of its companies and components higher on the session. They just tend to be some of those smaller stocks that make up the index. That said, you do even within some of the tech-oriented trade have a name like Netflix that's still trading a little bit higher on the session. But, all things considered, Sam, certainly defensive rotation today.
I'm way out of the money. I don't know if it's a good idea.
Yeah, it certainly is. What do you make of the Mag 7, obviously, which you and I speak about most mornings here, where everything really
All of a sudden, I've
sharpens
got
on
way
these
out of the
names,
money.
as you say. I mean, we've seen this news out of NVIDIA, Microsoft, Anthropic today, but at the same time, you've had this Rothschild
Give it
downgrade
up.
for the likes of Amazon and Microsoft as well. It seems like there's a bit more of a cautious stance now on the hyperscalers as we've seen some of the air taken out of some of these key companies. What do you make of all of it?
Yeah, I mean, we do see Apple trying to go positive. It was positive just a moment ago. It's back red. But as it stands right now, 7 out of 7 are lower on the day, and with a 0.98 correlation to the S&P 500 over the last 3 months. I believe that the story starts and ends here, Sam. I mean, with these names down on an index 2.4% collectively, it's going to be really, really difficult for the broad markets to outperform.
Yeah, absolutely. Certainly doing the drag today. Thank you so much for that. Of course, ahead of NVIDIA's key earnings reports tomorrow. Alex Coffey, I'll speak to you a little bit later on. Let's widen our scope and take a look at global markets right now here and where things stand in Europe in the last hour of trading, and we have down arrows across the board. So we really are feeling this sort of global risk-off type energy at the moment, as we very much have some of these Tech and AI valuations weighing on the minds of investors, and we have seen somewhat of a tech wreck out in Asia and Europe overnight as well. So the FTSE 100 down 1.5%. The DAX doing a similar thing. The CAC is down over 2%. So we are very much seeing negative sentiment across most of Europe right now, and across Asia as well. As I mentioned, the Nikkei 225 really feeling the brunt of it overnight, down 3.2% in trade. The Hang Seng down in Hong Kong, almost 2% lower as well. So we have very much seen global equities getting slammed, as we have seen this follow through from Wall Street, as we have got this risk-off sentiment here in the markets ahead of a busy week. Let's take a look at how some of the currencies are faring as well, because we have, of course, seen the US dollar at a 9.5-month high against the yen. We've got the dollar index at 99 right now. Euro is just at 116 as we stand. British pound at 131. And as I mentioned, the Japanese yen has been weaker, and that is coming off the back of some of the traders' concerns around the fiscal spending and package plans that are coming from the new Prime Minister over there, Sanae Takaichi. And we've actually seen the 20-year JGB, that's the Japanese bond yield, hitting its highest since 1999. So that is something to watch very, very closely. Checking in on the price action of some of these Chinese ADRs post-earnings reports this morning. PDD, Pinduoduo, shares under pressure today, as you can see here, down 5.8% as we stand after a mixed third quarter. The owner of Temu adjusted earnings are rising 14%, which was better than expected, although revenues falling slightly short of expectations, growing 9%. Chinese e-commerce giants have been enticing people with aggressive discounts against the backdrop of weaker consumer confidence and a struggling housing market, and that's translated to higher sales, although not the kind of double-digit.
Well, we're in a place that needs to bounce. Still got higher lows.
Now that economic uncertainty also hitting Chinese internet giant Baidu. Its shares are lower this morning, and it's just actually picking up steam today. We're at 1.8% higher, and this coming off the back of reporting a 7% drop in quarterly revenue. That's the biggest on record, even though it actually was better than feared. And the drag coming from an 18% drop in revenue from its advertising business, which has been struggling because of softer demand and competition. Its cloud business, though, posting solid growth of up 21%, continuing to offer a bright spot there as the company pushes ahead with AI to try to offset some of the weakness in those online ads. The company also reporting a net loss from a profit a year earlier.
I just think I'm a little too far out of the money now, so I might have to just take the loss and write it off on my taxes if we don't get a bounce soon.
Let's take a look at how that name is performing today. Off the back of a strong report, it's going in the other direction. It's down about 0.6% right now. The travel platform reporting 16% increase in annual.
It's squeezing right now. We'll know something.
Adjusted earnings per share also coming in significantly higher than estimates. The company putting the quarter down to strong travel demand, particularly in APAC.
Any second, any minute. Yep, it's telling me no. I still hold up. God. Stop the teasing, do something. Do 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 do. Netflix is looking good this morning. Looks like they're starting to buy into it. ETFs don't. Why ETF investors are barely blinking on Netflix. I might start my lunch here.
Which basically showed me several things. The first one is that Target still shows is a very high signal brand. It's a still very strong brand. However, its sentiment is still leaning negative for several quarters now. And that is not because consumers dislike the brand Target, but I think because customers are really frustrated with the lack of operational promises and delivery.
Senior
that
tax
are
credit
related to
applications will be
operational issues that I
taken.
just mentioned.
What's that mean?
And so obviously we've seen Target that's sort of amidst this sort of turnaround strategy and plan right now. What has this company got to say to reassure some of those loyalists out there as to progress as far as their plan is concerned?
I would have to say that I think they're really heavily leaning into AI and technology, and they're trying to push that kind of like quiet AI story with multiple new features and applications that they've worked on. Several of them were like very much related to in-store experience and then store companion for their staff. Gift finders, among other personalized offers coming up, of course, with the holiday seasons. But again, in this very high inflation world, customers basically they want to see more progress, but more value.
I'm watching my trade here, and I'll be right back.
Describing basically Target as a label, which just doesn't have its basics right.
Yeah, and obviously Target has been a company that has, like all the others, been grappling with, this pullback in discretionary spending. Obviously, more sort of cost-conscious consumers are looking for value as well. But they've also been a victim of their own sort of challenges when it comes to inventory and how they're operating in stores. What are you seeing as far as what this company has got to say to kind of reassure investors about how they're trying to address some of those challenges right now?
So they have been very focused on key initiatives over the last quarter. And again, because I analyze consumers, I can tell you what is working from their key initiatives and what consumers have been saying, which is that what is really working well and is very reassuring for investors is that actually their labels, their private labels are still very strong, even in comparison to other retailers like Walmart. So the Target style still shows as a very good price for consumers. And again, consumers are still very much focused on that kind of inflation and tariff discussion. But the deal-worthy brand also comes up as a very strong one. And again, like coming into the holidays, the holiday deal buzz around specifically toys and their exclusives that they have still drive a lot of the social buzz. Maybe on the maybe side, I can say possibly positive could be the Circle 360 and their Shipped product or acquisition that they did several years ago, which still has a lot of potential to beat some of the competitors, including Amazon and Walmart. But at the moment, I still see that service issues are still holding them back.
Yeah, no, we've been obviously combing over a lot of these consumer sentiment surveys, basically in this whole sort of data vacuum that we've been in with no sort of official data. And, obviously this is telling us a lot about the K-shaped economy. I was having a fascinating chat with an economist yesterday who said this is really about inflation. It's not about jobs. So what are you hearing from the consumer as to what they're thinking about going into this very key, critical holiday season with this whole idea of tariffs in mind. You know, we did see a little pull forward over the summer, particularly with back to school, with this whole thinking that there was going to be price increases down the road. How are they thinking heading into this critical season?
So what I saw from the discussions on social media is that, again, in this very high inflation world, shoppers were very open in describing basically the trading down from national other brands and moving to Target. And Target's private labels, which I mentioned, seem to be very strong and performing very well for them in terms of value that the consumer sees. And it makes shoppers almost, in a way, makes them feel like they're not trading or sacrificing too much when it comes to that. Now, again, moving to the holiday and this upcoming season, there is a very heavy focus among consumers on the holiday deals, coupons, the toy catalogs, and again, in-store demos, where parents specifically, for example, were talking on social media online about starting Christmas shopping at Target. So they're specifically naming that brand and retailer. So exclusives that they have had over the last few months, I think will continue trading. And will continue spiking their traffic and social engagement that they've had with their consumers. But again, it's clear that Target is still leaning into that value.
She's not said a word about shoplifting
but
yet.
Still a bit, I think, a bit behind.
So, Dr. Lenska, thank you so much as always. Really nice to see you, consulting founder and CEO
Come on,
of
baby.
Global. Appreciate it. Let's trade it now with Tom White, host of Fast Market, an example trade for Target. Tom.
Yeah,
Marley's the only one showing cleavage so far today.
Report. Not surprising. The stock's near six-year lows on this one, and you take a look at what the option market's pricing, about a plus or minus $7.70 move either way. So I looked at a strategy. If you think this
AMD's kind of setting up.
The bar is really low. And stock's down over 30% so far this year. If you think it's going to rebound, this strategy takes advantage of it, and you only need a slight move to the upside. Looked at a bullish call diagonal here where I'm going to go out to the November 28th weekly cycle that expires in 10 days. We're going to buy that basically at the money 88 strike call. It's got the higher delta, it reacts more like the stock. And then against it, in the near-term options, which have really elevated volatility, we're going to sell the November 21st monthly options on the 95 strike call. So a bullish $7 wide call diagonal that sets up and aligns with that one standard deviation move. You're going to pay roughly about a $3.50 debit I've got on here. It's probably trading closer to $3 right now. Stock has pulled back. But the debit you pay is going to be your risk, $3 per spread on a $7 wide bullish call diagonal. So you're paying a lot less due to you're buying a really low implied volatility, selling really high implied volatility in the near-term options. You do need the stock to move higher. Anything above about the $90 level is going to be profitability on this trade, but you're taking advantage of IV levels between the different option series to lower that entry point or risk on this bullish call diagonal.
All right, and Target shares just on the line right now, so very much looking for some direction from that report card. Thanks for the example trade as always, Tom White. I'll check in with you a little bit later. Thanks so much for joining us here on Morning Trade Live. I'm Sam Vardas. You can download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. We've got Trading 360 coming up next with Marley Caden. I'll catch you a little bit later on a Market on Close at 3 p.m. Eastern. Have a great rest of your trading day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting
a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
It's not working yet.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Good morning. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up in today's show for you. In our 360 Spotlight, we're going to highlight the tech sector ahead of NVIDIA taking center stage tomorrow with its quarterly earnings report. Today's disruptor is Intuit after it announced a multi-year partnership with OpenAI to create what it calls the future of financial intelligence. And then in our 360 round, we'll take a look at Home Depot after earnings disappointed and it cut its profit outlook for the full year. Shares are under some pressure in reaction, down more than 4% right now. Before we get to all of that and some more top stories, let's take a look at how the markets are shaping up on this Tuesday morning. Right now, the S&P trading down close to 1.5% at 6577.38. The Nasdaq down close to 2%, 24,314.46. The Dow also trading down close to 1.5% at 45,932.
Yes, more of a pullback
so far today. The Russell 2000 down 0.6 at 2327.14. As for the 10-year down,
now I have a red day.
Right now, the dollar unchanged at 99.49. As for gold, we are looking at it down about 0.5%, but still above the 4,000 threshold, 4,053.60 a troy ounce right now. Crude oil barely unchanged, still under that $60 a barrel mark. And Bitcoin is now up 1% at 92,860 after dipping below the 90,000 level for the first time in months. I do want to go into our first story, though. Welcome in our first guest, Alex Coffey, co-host of Next Gen Investing, and our senior equities contributor here on Schwab Network, joining us to talk about Cloudflare after they had an outage this morning affecting a lot of major websites.
Yeah, stock down about 3.5–4%, and this is after coming back online largely. They did just release, Bloomberg just reported that it was not, in their mind, tied to a cyber attack, so we know that so far. But as you mentioned, a global outage for web security service Cloudflare knocked out tons of popular sites, including X, ChatGPT, DoorDash, IKEA, Indeed. And sent this error message across the board. So brought us back to sort of the days of the CrowdStrike issues. There's certainly been an AWS issue too recently, but you can see when a major cloud provider is disrupted, you see those ripple effects, and certainly happening today with stock down about 3.5%.
Yeah, and interesting, you know, initially the spokesperson came out and said they noticed a spike in unusual traffic, so it's not setting off alarm bells that they were under any sort of cyber attack here, but whenever we get one of these outages, that's obviously always the concern.
Mm-hmm. Yeah, and so like I said, there was, at least from Bloomberg, no evidence of a cyber attack in the global outage, but as you mentioned, a couple hours before the open, they did see an unusual spike in error messages as well, and a lot of those tied to some of those pretty key parts and sites on the internet, ChatGPT and X, but developing story, and one I'm sure we'll get more details in the coming days.
Yes, Alex, thank you for being with us to break that down after that outage there. I do want to welcome in our next guest, though, talk more broadly about a lot of this downward action that we're seeing right now in the markets, particularly today under some heavy pressure. Joining us now, Michelle Snyder, the Chief Strategist at MarketGauge.com. Michelle, thank you for being with us on this Tuesday morning. You know, I wish we had more green on the board to talk about, but I'd love to get your perspective on this heavy pressure that we're seeing.
Well, first of all, let's start with making people feel a little bit better, and that having 5 to 15% corrections is not unusual, and some would even consider healthy. But we're definitely looking at some deterioration that is a concern, and so I always look really specifically at what we call the inside sectors of the U.S. economy, which would be the small caps, retail, and transportation. And obviously they're all failing here. However, retail being the most important, especially as you mentioned at the top of the show, given the Home Depot earnings disappointment, is holding up above a major moving average. And I like to look at the charts, especially now, because we haven't had many statistics to look at, price rules. At 78, which is really the rock bottom support for XRT, that holds, then maybe we'll start to see a little bit more confidence coming in. But at this point, there's just a lot of jitters and no real hard, solid reasons.
On the weekly, we're at the 200, that's for sure. That's a major support.
I've heard that sentiment echoed, that we're here to see these jitters, or we're seeing this caution or concern, but there isn't a lot of actual practical backing behind it. It's just general uncertainty. With you citing retail and knowing that Home Depot was sort of the first of some big retail names that we're getting this week, do you view that as a potential catalyst if some of these reports do come in stronger, that we could start to see a bit of a turnaround?
Yes, and especially depending on where you look in terms of the retail sector. I mean, obviously Home Depot is very specific to home renovation, and that was really where the big disappointment has been. But if you're looking at some of the other big box stores, it'll be very interesting to see how Walmart and Costco does, because that's really consumer staple oriented. And then even some of the higher end stores as well. You know, for example, last report, Macy's did pretty good. So it's going to be, is the consumer alive and where are they showing up? And right now, we know that the consumer is cautious. However, we're going into a strong seasonal buy period. And if things happen that make the consumer happy, like you say, we could see money coming back into the market.
And another driver of this uncertainty is the Fed and what they're going to do in December. This is a constant discussion. You know, it's now lower than a coin flip at this point. Sentiment not strong that we are, in fact, going to get that rate cut. You know, do you think that that's what's driving some of this pullback as well, that uncertainty tied to the Fed? And also, what's your view on what's going to happen in December?
Well, I'm of the view that they should have lowered it further last time. They should have cut by 0.5%. So let's get that out of the way. So of course I'm pulling for more rate cuts. But what's so interesting, what's happening at the Fed right now, is that it used to be pretty much
rate cuts going to save the day.
Making the ultimate decision, and we're starting to see a pullback with a lot of dissension among the Fed members. So it's really kind of hard to predict. The good news, again, I always like to have a little bit of rose-colored glasses on, is that the assumption that they may not do anything is already in the market at this point. So unless they did something like raise, which I really doubt they would do, anything that they cut from here could be a sigh of relief, and it's needed in so many sectors that have been really suffering because of the high interest rates.
And as we're now starting to see a bit more dissent than normal, and also in the absence of data during the shutdown, I think the markets have been paying much closer attention to some of the Fed speak than we often do. You know, and noticing some of the diversion in their opinions, what do you think is the bigger issue for the Fed in terms of their dual mandate right now? Is it the labor market or is it inflation?
It's both, and that's what makes this so difficult for them. I mean, if you're looking at the inflationary standpoint, you know, even though we haven't seen CPI, it's a very nuanced inflation in that We're seeing still food prices going up. Obviously, if you're looking at gold and silver and you look at the ratio between, silver is starting to look like it might be favorable, which is inflationary. We've seen obviously big stress in inflation because of energy and utility costs and utility costs. But at the same time, we've seen other areas that look more disinflationary. So I think maybe they're more focused on the labor market. And without the statistics, all we really have right now is what jobless claims were up. And we have a whole slew of kids coming into the market from college who may not be able to find jobs. That's not even reflected in the unemployment reports because they haven't never had a job. So I think that that's probably, if I were a Fed member, where I'd be looking at the most. We have to save the economy, if that's even possible, by lowering interest rates.
So with that backdrop, what are you favoring right now? Where are your picks? Where do you see the opportunities in the market?
Well, I'm really into hard assets, right? So obviously, silver right now, maybe even more than gold. Again, watching that ratio, people don't really know about it. But when the gold to silver ratio starts breaking under 78, which means gold is 78 times the price of silver, and that starts to deteriorate, that usually is a big favor to silver, also potentially inflationary. I also like, believe it or not, some of the hard assets across the board, like DBA, which is a real reflection of corn and soybeans and some of the softs like sugar and coffee, etc., is doing relatively well, holding up better than the overall market. So we may see that happen, and that can have its own side effects. But outside of that, I like biotechnology has been doing really well. Healthcare has been doing pretty well. And I'm trying to avoid some of the big growth areas at this point until we see some kind of market bottom. But I also still like emerging markets to a degree. And of course, these big stocks, even though right now may not be the best time to buy them, they still, compared to some of the other sectors of the market, like the retail, have done better. So we could look at Google and Amazon and Apple if things start to stabilize.
Michelle, we appreciate you being with us this morning. That's all we have time for, but such a pleasure speaking to you. That's Michelle Schneider, the Chief Strategist at MarketGauge.com. And we've got plenty more to come on Trading 360. Next, we've got the Big Three. We've got 3 stocks, 3 charts, and 3 trades. Kevin Green will be joining us to take us through the technicals and give us the trades for tomorrow's retail earnings. We'll be taking a look at Target, TJX, and Lowe's. That's next on Trading 360 on Schwab Network.
From the most iconic trading floor in the world, this is Opening Bell.
Oh boy, here we go.
Live on the floor of the New York
still
Stock
hoping.
Exchange, the countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's way. Take a look
Carl's
at
way is the best
Carl's
way.
way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
The
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Kevin Green joining us to take a look at the charts
Better
and
pay
the
attention
trades
to her today.
We're focusing on tomorrow morning's earnings retail reports. Now, Kevin, first let's talk about our first company. Let's talk about Target first. You know, they're expected to report first. We heard from Home Depot already, certainly not the same space, but sort of kicking off our retail. As we're taking a look at Target, you know, what are you noticing in the technicals as we're setting them up for their earnings report?
Well, we have seen Target obviously move to the downside over the last year or so, more on a fundamental basis, lack of operating efficiency compared to some of their competitors in this space. But from a technical standpoint, we continue to see the stock making lower highs as well as lower lows. But we are now starting to see a consolidation pattern taking place. The lower highs are still into effect, but we are making the case that maybe this $85 level is going to be a key area of support for the market. And you are starting to also see that the price range over the last 2 weeks, 3 weeks has been fairly compressed leading up to this earnings announcement. Now, obviously, this could be a very big mover either to the upside or downside. And if we do see a break, the key level to break to the downside is going to be $85 here. But to the upside, we actually have a couple of areas of resistance to really focus on. The first one is going to be the volume point of control. This is where the most volume has been traded for the stock over the last year. And right now, that's sitting at $95.25. So that's going to be your first area of resistance. If you're able to break above that, you're actually looking at this $98.28-ish area for your next area of resistance, and then looking at that $200 level. So this is a stock that has been trying to consolidate for the most part, and if it is able to have a good earnings announcement, you can make the case that it could re-rate a little bit higher here over the next couple of weeks, especially if we do see tariffs coming down, especially for a lot of these consumer staple goods, which is obviously where Target has a lot of exposure. So right now the trend is still lower, but you can make the case that a consolidation break higher could be in the cards for the team.
Yeah, and it's still lower, you know, down 34% year to date. And as far as expectations, you know, analysts kind of looking for soft performance this quarter, but it is already expected. EPS of $1.76, that's about a 5% drop from the year-over-year quarter on $25.3 billion, which would also be a more than 1% decline year-over-year. With that setup and knowing that we've got potentially cautious consumer spending going in, how would you look at trading this ahead of the report?
Yeah, well, if you're looking at this name, it's obviously still trading at a discount compared to its peers in the space. So if you have this rotation trade continuing to take place in the market, Target may see some favorability. So actually looking at a calendar call spread for this name here, looking at buying the December 19th $90 calls, selling the November 21st $90 calls, doing this for a debit of $1.25. So the max loss on this trade is $125. Now, what could actually happen if we see the stock re-rate aggressively higher to the upside, the trade would have to be managed. If you're trying to get a neutral to upside exposure to this name in the event that the earnings are actually okay, but maybe the stock does not move as aggressively, especially when you're at the time of the short call expiration, which once again is going to be November 21st. So the max loss on this trade is $125. You're trying to leverage the implied volatility skew on the near-term options to be able to reduce the debit for the longer-term call that you're buying, which is once again at that $90 level here. So you can see the skew. You are really trying to play an implied volatility play here. Let's see if this actually does pan out, and let's see if the earnings actually do outperform the street's expectations.
Yeah, expectations are low, so there is a possibility here. Very different chart, though, for our next retailer, also slightly different setup. TJX, they're an off-price retail company, but they are performing well. You know, year to date up 20%, in the last 12 months up about 22%. And analysts are looking for a pretty good quarter. Revenue up about 6%, which is inline growth with year-over-year. Earnings expected to come in at $1.22 per share. You know, as you're looking at the setup for this one, you know, what's standing out to you and obviously very different than Target's setup?
A lot different when you're looking at TJX. This stock is still making higher highs and relatively higher lows at this point in time. That just means the uptrend is still intact for this name, even though we are seeing a little bit of a consolidation. This is a stock that actually does consolidate for about 3 to 4 months before either breaking higher or breaking lower, and that's pretty much what we saw this time last year. We had some range-bound action between the $120 level and let's say the $127 level until we actually did see a break to the downside, testing that 200-day moving average, closing below it for several sessions, and then leveraging it as an area of support since then, for the most part. We had this nice re-rating higher in the last earnings announcement. And once again, we've been kind of range bound. We're seeing this price action of around, let's say, $135 is an area of support, $145 to $148 is an area of resistance here. And right now, we're trading at the upper end of that range. You have a good earnings announcement. You can actually see a breakout to the upside of this consolidation channel that's been in place since about August or so. Any type of breakdown, you're looking at the 50-day moving average in yellow as your first area of support, right around $140, $142.50. Next area of support is going to be sitting at around $140 even. And if you have a negative report, you look at 200-day moving average, which is sitting at around $130.50. Also notice that 200-day moving average also matches the primary uptrend if you take the lows over the last year or so here. So this is actually still a bullish chart, even though we are seeing some near-term consolidation. You get a little bit concerned that we have these bearish divergences though, making lower highs as well as lower lows on the RSI, something to be mindful of. MACD also not looking too bullish or bearish at this point in time here, but the trend is still up. Let's see if it's going to be able to report and beat the street's expectations once again, potentially breaking out fairly aggressively here if we get the right tone from this company.
So knowing that
Well,
we're in
we're
that
back up
setup
to
that
resistance
historically
now.
after that 3 months of consolidation and range-bound trade, we are right for some
I'm gonna see
sort
if
of
we can get
larger
break
move
it.
here. And also knowing that they have a history of exceeding expectations. They beat revenue estimates every single time in the past 2 years by more than a percent.
We're definitely here
on
at
average.
resistance.
So with that setup, how would you look
Marley?
to trade TJX?
Marley, I want to thank you for showing cleavage today. You gave me a little bit of hope. We're at the VWAP.
It's $240 with a max gain potential of $260 with a break-even point of $147.40. You would like to see the stock once again move higher, getting above that short strike of 150 in order for this trade to really max out.
I really want to swing the video,
or it stays where it is right now.
but I might wait until the morning, but I think tomorrow will be up a little bit.
Position to offset maybe the IV crush that we might see post.
Don't know what to do.
Risk defined. Still looking for an upside move here. The trend continues to move higher, and you do have a little bit of exposure with this type of trade setup. And also, if the market's available, to be able to readjust this trade in the event.
Oh, Ryan Garcia has a new
Right
post.
now, TJX trading at 146.15 in advance of their earnings tomorrow. Let's move to our next one here. And this one's set up a little bit more interesting in light of Home Depot's earnings that we got this morning. We'll talk about Lowe's here. You know, they're moving downward in sympathy with Home Depot after Home Depot disappointed on earnings, cut its full year outlook. But as far as Lowe's expectations, revenue is expected to grow more than 3%. That's a reversal from the year-ago quarter where they saw a decline of more than 1%. And earnings expected to come in at $297. Same-store sales supposed to grow
Come on,
1%.
baby.
Home Depot was also supposed to grow about 1%.
beg
They
ya.
only grew 2
Break it.
cents. So, you know, with that setup and looking at Lowe's charts, obviously 2 different companies, but very similar companies. You know, what are the charts showing you, Kevin?
Yeah, and Lowe's has more exposure to the consumer itself too, so that could also be a risk here. This is actually probably the better setups of all of the charts that we're talking about here today. Even though the stock is in a downtrend, it has everything that you would look at from a technical setup.
What one does?
Last year. This time last year, we saw a stock consolidating around the 20-day
Low.
moving average. We had
He's
a
liking
shooting
low.
star type of candle that took place, basically a blow off top before we started seeing the stock.
He can count to 3.
Lower highs as well as lower lows. Now the stock did actually consolidate between April and let's say around the middle of August or so before breaking out higher, breaking above that 200-day moving average, trying to retest those recent highs of around $275, but it was unable to sustain that level for too long here. Now here's the reason why I think this is actually very interesting. If you are a believer in the Dow theory or even Elliott wave theory and you believe that the stock's in a 3-wave pattern, we might be in the 3rd wave to the downside and getting closer to an area of support where buyers could step in. We can kind of see that first initial move to the downside. That's where I have the number 1. Coming back, retesting the 20-day moving average, consolidating, moving lower once again. That's the wave 2. Going back, retesting the 200-day as well as the 20-day, and then flushing to the downside for this 3rd wave here. If we are in that 3rd wave and we are not done yet, you're looking at support at $205.91. But if you do like the candle today, it's actually fairly green given the fact that we did have Home Depot earnings which were lackluster to say the least. You are seeing some buyers actually trying to step step in on an intraday basis for this name. RSI making lower lows as well as lower highs, as well as in the oversold territory for RSI. MACD in a bearish formation here, but you can make the case that maybe the stock does try to make a re-rating to the downside fairly quickly, and buyers really do try to step in. So the trend right now is lower, but you can make the case, once again, it's fairly cheap relative to its peers. Maybe some buyers actually find some value here.
So if we start to see these buyers step in and we are perhaps in this third wave, how would you set up a trade here for Lowe's?
So this one's going to be a little bit more longer term here. We're actually looking at the January monthly options for next year, the 240 calls, and just buying this one outright for a debit of $4. So the max loss on this trade is going to be $400.
We're breaking it.
With a break-even point of $244. What you're really trying to focus on here is a longer-term move to the upside. Now, obviously, it's only around 3 months from now, but you would like to see, even if the stock comes down a little bit lower, because you have a little bit more time value, it's not going to erode as much. And in the event that we do get some buyers to really step in, you get yourself a little bit more time for an upside move in the stock. You could also look at selling near-term calls
Almost
in
green.
the event that it does go in your favor. So this is one of those situations where the stock chart does look bad, but it's bad enough that it actually does look good for an upside move. That's really what this trade is trying to capitalize on. So once again, more bullish to the upside here, but giving yourself a little bit more time for this one to follow through to the upside.
Yeah, and since September, we've seen shares fall about 19% for Lowe's. But Kevin, thank you for being with us to walk us through the charts of those retail reports we're going to get tomorrow morning, and for those sample trades there as well. That's Kevin Green. And coming up next, we're going to spotlight the tech sector ahead of NVIDIA's earnings tomorrow and how that might impact the rest of the industry. Stay with us.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
There we go. Come on.
Whether you're an
That's the
experienced
idea here.
investor or just getting started, Charles Schwab offers a webcast that's right for you.
I got.
The platforms
I'm
and
loaded
tools
on these
webcasts
things.
are designed to help you broaden your knowledge of platform
155. I'm gonna sell some of them here. Be green.
You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly
Fuck yeah.
with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
170. Woo!
Morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves
I'm gonna get out 165.
From Fed policy to global growth to inflation prints
170.
and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab.
Let's go.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight big
I gotta get my
tech
cheese
earnings
chip.
ahead of
I sold some at
NVIDIA's
165 and
earnings tomorrow.
170.
Joining us now is Caleb
I
Silver,
still got
Chief
more.
Business Editor at Investopedia. Thank you, Caleb, for being with us. I'd love to just get your thoughts on this weakness that we're seeing led by tech today as our setup going into NVIDIA tomorrow.
Yeah, well, it seems like the reversal, the sector rotation is not over with quite yet. I think there's a lot more selling to be done if you look at all the pressure and all the pessimism that's suddenly built up around these stocks. Global fund managers went from bearish to finally bullish in the fall and then finally turning bearish again. It's funny how quickly sentiment changes. That said, these companies are still putting up good results, but the bar has been raised so high, and now the turnaround to see when all this big spend, especially by the superscalers, turns into margin improvement and more profitability, that's gotten even higher.
It's very interesting, too, to see who's being rewarded for this big spend and who's being punished for it. There doesn't appear to be a great deal of reason, some of it tied to market cap. The trillion-dollar companies seem to be being given more forgiveness here. But what have been some of your takeaways or even surprises that we've seen from reactions in terms of the tech earnings we've already gotten?
Yeah, you got to be a little bit shocked when you see some of the reaction, especially when some of these companies are still putting up more than
I'm out
50%,
completely.
Profit growth, and their margins are still pretty healthy, even though they're promising to spend hundreds of billions of dollars over the next few years. But again, investors want results; they want profit growth now, given all the spend that's already happened and that's been promised. But when you look at some of the companies that have really gotten hit hard here, it's some of the most favored stocks by retail investors and individual investors that we keep piling our money into week after week. I like to look at the top stocks being bought by retail investors outside of our defined contribution plan. Schwab has a good movement index that tracks that as well. These are the biggest stocks out there that have taken some of the biggest hits, but they're also the stocks that retail investors own the most and for the longest period of time, and they tend to hold on.
Now I can eat.
One of those big names that we saw take a massive pummeling in their earnings, and still seeing it being one of the top purchased stocks. But let's focus here on Nvidia. A lot
That
of
was incredible.
expectations going in here. I think everybody looking for it to be a major market catalyst. The question is, in which direction is it going to go? The sentiment I keep hearing is that it will be a good quarter. The question is, how much better than the expectation does it need to be to see a positive reaction in the markets? What are your thoughts there?
Yeah, expectations are sky high. If it's not a complete blowout quarter with great guidance going forward, I don't think investors are going to take that very well. You can already see some of the pressure and some of the selling going on just over the last couple of weeks, really since the end of October in that company. But it's all about that revenue, right? Data center revenue. We got to see a lot of that. We got to see and hear from Jensen Huang about a lot of demand for Blackwell and Rubin. Those are the chips for those.
Get my other cheese chip, and I'm gonna have lunch and take a break.
How aggressive does the spending look going into 2026 and beyond? Because there's been a lot of promises made. There's been a lot of money either spent or pledged to be spent. Is that actually going to be realized by NVIDIA? And if so, where's it coming from and who's actually paying them that money? I think investors are going to dig pretty deep into that and listen to every word he has to say. And then you want to look at gross margins, because they're spending a lot of money. This is one of the best performing gross margin companies in history. That's why it's one of the best stocks in history. And it's got market share now of 90% plus. Is that being eroded by AMD? Would they speak to that if that's actually happening? What is their plan for retaining that deep market share that they have?
And Caleb, you highlighted a lot of the big ticket items that are in focus here: margins, market share, their data center revenue, which is of course very important, and their guidance. Of those four, what do you think has the biggest potential to move them in a negative direction if it's simply in line? I mean, we've seen that quite a few times this quarter already.
It's got to be guidance, because investors are looking way out into the future for this company, which has a very high price to sales ratio and a very high price to earnings CAPE ratio as well. So it's got to say that we're going to continue stacking revenue in the same pace for the next year or so, just given the super spend going on right now by some of the biggest companies in the world. And
I can't tell you how happy it makes me.
On how the competition is, but also on what happens on the global front. What is going to be the relationship with China going forward, especially as it relates to NVIDIA, especially as it relates to semiconductors. They're right in the middle of those conversations, so it's not as if it's just charting its own course. It's impacted by global affairs as well.
Certainly, and you mentioned the super spend and NVIDIA's spending spree that it's been on. A lot of questions there about where the money's going, who's paying for it, where is it coming from. We got another announcement from them this morning. Their tie-in with Anthropic, NVIDIA investing $10 billion into the startup. Jensen Huang saying it's a dream come true for us. That was his quote about their investment there. Also, Microsoft tied into this deal as well. What are your thoughts about this, especially with the timing of it being one day in advance of their earnings report?
Yeah, I think that's fascinating. And when you look at the fact that Anthropic, I believe, was on 60 Minutes this week as well, the timing is very interesting indeed, especially with earnings coming up. But when you also think about maybe the way that NVIDIA and some of these superscalers are thinking about the future of AI and Gen AI and robotic AI, is that going to go through a commercial platform like OpenAI, or is it going to move on to the more advanced AI companies like a Perplexity? So I think they're also spreading their bets. The whole game here is a zero-sum outcome. Either you control AI and the future of it and the data being processed with it, or you're outside of that and you're paying into these companies. And I think for these companies, there is no second or third place. They're going to spend as much as possible and do as many deals as they can to make sure that they have a moat surrounding their AI ecosystem for the next decade.
Yeah, if you're not first, you're last in this race, right? Not to quote Talladega Nights on this day, but there we are. I want to move on to yesterday's big story, though. We saw Alphabet take a major move to the upside on this news. Berkshire Hathaway's having them $5 billion stake there and their 10th largest equity holding, a rare move into tech for them, and also reducing their stake in Apple. You know, as far as what that says, and if there's even any correlation there, what were some of your thoughts when you saw that come across?
What took you so long? You know, Alphabet has definitely been the better performing of the two for a while, but also it is facing the future mostly with software and with AI, whereas Apple is a product company at the end of the day and relies heavily on discretionary spending. We know Berkshire's been trimming its stake in Apple for a long time. It's still
Our cost average
biggest equity holding.
had 48 contracts.
In Apple, so I've got to look at it on a relative basis, but the trend is the trend. And you would have thought, and I
had to throw a little bit of money in that trade,
in the past, that
but I didn't give up.
Amazon a decade ago. Well, maybe they should have bought Alphabet
Well,
a
why?
decade ago, or at least 2 or 3 years ago to take part in.
Why did I hold the trade?
It also shows that,
Can anybody tell me?
These new decisions are being made by Greg Abel and his investment committee. I'm sure Warren weighs in on everything as he always has. And
Why did I hold the trade?
As long as he can weigh in on anything, but still.
So I got
it seems
chicken
like
salad
time and the timing's strange. That
with
said,
carrots,
this happened over the past quarter.
radish,
We don't know exactly when the investment began.
cucumber.
It's an interesting note, and you got to wonder if there's more behind that because Berkshire Hathaway has a ton of
roasted
cash ready to spend.
They certainly
bread,
do.
chips.
And as far as mega caps that you're watching, I know you said that you track very
Feta
carefully
cheese.
what is happening in retail, what's being bought, what's being sold, what some of the top
And cheese
performers
chips
are. As far as what you're watching as we head
with
into
ranch dressing.
2026, you know, what's sticking out to you?
Well, investors, especially
Can anybody tell me why I held the
investors
trade?
like us, become so faithful to the stocks that have taken us this far.
You can
in
say
the
it in
bull
4
market,
letters.
Really beyond, really for the past decade or more. And when you look
Falling
at the
wedge
top
double
holdings
bottom would have been a
individual
good,
investors, we
yeah.
survey our readers every 2 months about this.
Yeah.
It looks like the top of the NASDAQ.
That would have worked.
We've got Nvidia, Meta, Microsoft,
With a double
Apple,
bottom and then that
maybe
fake out.
Palantir and Amazon in there as well. And those are the top stocks we continue to buy, even though they haven't been the best.
But why did I
performing
stay in the
so
trade
far this year?
before
The
that
part about
happened?
being an individual investor picking stocks is that you're going to
What's
miss
tomorrow?
some
Tomorrow-
performance by companies if you're just focused on those mega caps.
Tomorrow
Like so many
evening.
of
What's
us are.
tomorrow
Top
evening?
performing stock so far this year. Obviously, it's been Western Digital. That's a chip company, but Robinhood.
Tomorrow evening?
260
Yes.
plus %, even with the sell-off recently. Palantir, of course, has done very well.
NVIDIA earnings give me hope.
Seagate Technology, got some chip companies in there, and a Warner Brothers Discovery. Just shows you how hard it is to be an individual retail investor trying to pick the right stocks when maybe if you just invested in some of the big ETFs out there, some of the big indexes, you might have been a little bit better off, especially as the market.
Because that could be the point where everybody starts jumping in
Deep into some of these
on
names,
these
you're going
dips.
to feel it. And the fact is, retail investors like us, we are super deep into the biggest stocks in the market. We are in the crowdest trade in the market, as well as the biggest global fund managers out there.
Well, Caleb, we appreciate you taking the time to talk all of these big tech headlines with us, especially in advance of NVIDIA's earnings tomorrow afternoon. That's Caleb Silver, the chief business editor at People Inc. and the editor-in-chief at Investopedia. Thank you again. And coming up next, it's time for the Disruptors. We've got George Gillis joining us to take a look
So I'm gonna
at
eat my
owner
salad.
of TurboTax, that's Intuit, after it announced a multi-year partnership with OpenAI.
And look
We'll
at
break down
Marley's
the news
breast.
And give us an example trade next on Trading 360.
And that paid pretty good too by me holding on and just kept buying and buying and buying. I'm just worried about that one trade. I didn't want to sell it. I mean, I was down a lot. I was down a lot.
connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charts.
Time for a song.
Like trend analysis,
Ringo, we got a new one.
patterns, moving averages,
Got your ears on?
oscillators, and much more. Best of all,
This is a Christmas
you can
song.
ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets.
Woo! Yep. Never had a breakout. I'm gonna scalp it again.
Washboardjim, he kneels to pray for children lost along the way. In Springfield town they have no cheer. This Christmas time no joy is near. He asks for help from above, a gift, a toy, a sign of love. For Springfield's children, one and all, hear Washboardjim's desperate call. The organ swells a solemn sound as Jim's request does resound. He dreams of smiles on every face, a Christmas filled with saving grace. No child should want, no child should weep. Let kindness grow while others sleep. A simple wish, a humble plea for Christmas joy eternally. For Christmas joy eternally.
Merry Christmas. Turtleneck, Nicole. What the heck? You act like you're freezing. What's this show come to? Marley set them all up. Told everybody else to wear turtlenecks while she showed cleavage.
Senior markets correspondent here with today's company, Intuit. The company announced a partnership with OpenAI that will allow ChatGPT to be used in Intuit-powered apps. You know, they own TurboTax, George. So tell us, about this. How is this going to change how people use Intuit's apps?
Yeah, that's a good question. I think if you consider ChatGPT and some of the layering that the technology provides, you're going to see applications run within that ecosystem. So it looks like Intuit now is partnering up with ChatGPT basically to bring Intuit's apps within the ChatGPT ecosystem. And so if you use things like Microsoft Excel, you can actually layer that as well as statistical software like Python through ChatGPT, which again is interesting, and it actually might create some competitive elements to the app ecosystem that Android and even Apple have going forward. So I think this is an important move for Intuit. Of course, being able to layer their application ecosystem within ChatGPT, but nonetheless, if you look at TurboTax, effectively you can make the case that they have sort of a de facto monopoly on the small business and self-employed market for tax accounting software, considering they have about 80% market share. Credit Karma is another one of their businesses, which actually has mobility or movement for Intuit into the personal finance realm. The other thing is I noticed is Intuit, if you look at the stock price action, hit around $818 going back to July, and has been down about 20% since then. And I think it's part and parcel of what's happening in the application software space across the board. Companies like Workday, Adobe, Intuit in that same group haven't performed very well this year. In fact, if you look at Intuit over the last year, it's down about 3%. Still higher by 4%, but they are coming out with earnings as well on Thursday. They're expected to report $3.09 a share, higher by 24%.
If you look into it.
14%.
And it is interesting, too, as they're bringing up how this might be utilized, that you can use it to authorize that Intuit to pull data in ChatGPT and estimate your tax refund, help you find the right credit card, or generate QuickBook insights into real-time business activities. So, potentially game-changing here. We'll see how it actually functions. But with that setup, noting its performance, on the year, down 4%, George, how would you structure an example trade here, especially as we come into an earnings event?
Yeah, so as we're coming into the earnings event, one of the things I noticed is if you look at last quarter to this quarter coming up, the stock is in a trading range. So with that said, I'm going to take that contextually into mind when placing a trade. The other thing is if you look at the market maker move, which is an approximation 1 standard deviation move post earnings, it's around $40. So I'm basically going to sell a neutral iron condor outside of that market maker move slightly. And I'm not going to sell this week's expiration because we don't have a lot of time because of the earnings on Thursday. So I'm going to sell next week's expiration. So we have 10 days to let this manifest. So in essence, I'm going to be selling basically 20 deltas call and put spread on either side, which is right outside that market maker move, by selling the 705, 715 call spread above the current price, and below the current price, I'm going to sell the 605, 595 put spread. So altogether, this is a four-legged structure called an iron condor. You could earn about $4 in credit or $400 a contract. So the whole premise behind the trade is neutrality to stay within the confines of the short strike, 705 high, 605 low. Break even effectively a 709 if it does hit that, or on the downside 601. And you're earning $4, but your risk is $6 because there's a $10 wide spread. And that only manifests if the stock blows out above 715 on the high side and 595 low.
All right, right now Intuit trading at 652.28, up 1% on the news of this deal with OpenAI. George, we appreciate you walking through that with us, and also for that example trade. That's George Tillis. Coming up next, we've got our 360 round. We're taking a look at Home Depot after the retailer reported mixed earnings but lowered its guidance for the year. We'll break it all down next. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
NVIDIA bounced up.
Consumer, we focus on what's driving investors.
Broke that triangle. Now we're above the 200.
And forward-looking market coverage every trading day.
I'm going to move my options up a little bit.
That could certainly be a short to
get closer to the money.
Next Gen Investing, 1 p.m. Eastern.
75, 66, 75s.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at
We got a megaphone
live on
or a Head and Shoulders.
SwabNetwork.com.
Welcome back to Trading 360.
On
I'm
FBX.
Hayden. It's time now for the 360 round.
Marley,
Let's bring in our panel.
you look
discuss
hot
the
today.
earnings we got from Home Depot this morning. Joining us now, Jamie Katz, Senior Equity
You stood all the
Analyst
girls
at
up.
Star, and Nick Rake, CEO of the Earnings Scout. Thank you both for being with us. You know, Jamie, we'll start with you. I'd love to just get your thoughts on this report that we got this morning and some of the disappointing numbers.
Yeah, I think the real disappointment is what it looks like is coming out of the fourth quarter, right? We're going to have some lack of weather that we're lapping. Storm shortfall was a big part of the commentary, and then also the integration of GMS and SRS into the business.
Well, she looks like a stock trader.
Drag on performance and operating performance of the business. So the reduction in operating margin outlook was the biggest issue from our vantage point, and the fact that it looks like we're going to have roughly 150 basis
I bet she's a
points of
robot.
margin compression in the fourth quarter was viewed pretty unfavorably.
And Nick, what were
I am now watching the SPX. We have the 63 here. We have a megaphone pattern. We have the VWAP on the /ES. Jimmy will be starting the position in 66.75. $3.90. Washboardjim. We're at the orb too. We got a Head and Shoulders, mind you, and we got a megaphone, mind you. Whoop, I think I can go down just a little bit. Remove. Washboardjim. Jim, where'd you go to college at? I went to a community college in State Fair in Sedalia, Missouri. There's some history behind that town. I can name 3 components, maybe 4. We'll start off with the Katy Trail. The Katy Trail was a railroad that connected Kansas City and St. Louis. So back in the days of cow herding, they used to bring their cows to Sedalia and ship them off to Kansas City and St. Louis. Sedalia is named after a battleship, which is now called the Missouri. First they called it the Sedalian, Harry Truman. Number 3, Scott Joplin. And I'm going to play one of his songs here in a second after woo! Baby! $3.90 to $4.70. And the fourth and the most important history of Sedalia, Missouri is where I had Picture Frames Plus, which was a picture frame shop that used to be in a bar where Scott Joplin played music. $5.10. Now tell me who's the best. Washboardjim. You dingbat. So this is called a megaphone pattern. This is your pivot point, which would be the head and shoulders. We're still at support, but we bounced off the orb. Do you understand? Someone say yes. Taz, welcome to the room. Anybody ever heard of Scott Joplin? That's true. Blondes are more fun. %90 of the girls I dated were blondes. I'm about done.
A little bit, not frothy, but maybe fully valued at this point.
Okay, great take there. Holly Newman-Crawford, I was talking to Jay of Newburger Berman, had some similar thoughts to you, Tom, especially as it relates to the differences now in these type of companies and, you know, how solid their balance sheets are. So, you know, I don't know, I can't call it right now in terms of this downgrade here. Kevin, what's your take?
Well, Diane, let's talk about analysts. Analysts do things that make me scratch my head. They didn't downgrade Amazon at 258 after earnings. They didn't downgrade Microsoft at 550. They wait till they hit they're down 10, 15, 20%. Then they downgrade them.
Yep.
That's right.
These
are all the same group of individuals that were downgrading stocks in April are downgrading them now. And, you know.
He's 100% right, and I agree with him 100%. These guys like to pump these stocks at all-time highs. And I don't look at a stock like, if I see a stock at all-time high, I'm saying resistance. I want to buy the pullback first. It just tears me apart when I see stuff like that. CNBC is real bad about it.
Skeptics out there, Diane, and this is why I find analysts so frustrating, because they just chase, right? And
exactly.
Microsoft has been correcting. So has Amazon, down from the highs down here, and now they downgraded. It's just, Tom said it's unbelievable. It's not believable what they're doing. It's just hard for me to sit and look at these analyst calls here and acknowledge that's made on good basis, because these companies, Microsoft, they're in everything. And you know what? They're in everything early. Amazon, they are on the forefront of every major business going on in this country right now. It's just a head scratcher, but it doesn't really surprise me, Diane.
Okay, I'm glad you brought up the...
I agree with him. Now look at here, we got megaphone. Prepare ye. Megaphone, $2.95, $3. Washboardjim. How do you do it? Well, I wait for the setups. I don't take these analyst calls. I look at the stock, I'll put it on my watch list, and I'll find the support level. Then I'll wait for it patiently. Do you understand? They can't shut up? Come on, you bitch. Yummy. I decided to pay my property tax while I'm in this trade. I'm going to add 2. That gives me 3. Okay. Which one's the keep this statement for your records. Return this with the payment. Does anybody want to pay my property tax? Randy, would you like to pay my property tax, please? 30 acres. I think it'd be a great idea. It'll show your support, and I'll ship you 1 pound of cannabis. Keep this statement. Why did I put that on there? You fucking idiot. Make sure I sign it. Oh, come on. Need to bounce. Oh, where should I put my property tax? So this is for 2025 real estate. Personal bills. City license. Personal tax. I'm gonna have to get 3 more. Oh. I don't want to, but I will. I should have. Now I'm going to walk out to the mailbox. Property tax. Not again. There's the bottom of the megaphone. If you can count to 4, you might make a little bit more. I hate it when this happens. 190. I'll be right back. Mark it down big.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Investors are bracing themselves for Lowe's latest results after Home Depot's earnings came in weaker than expected. Wall Street is looking for Lowe's to report earnings of $2.97 per share on an adjusted basis, and the expectation for revenue is it's a top $20.8 billion. Today, rival Home Depot warned about a cautious consumer and cited weather, good weather actually, as a factor for its miss. All right, let's throw on the trading glasses now. Welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. Before we get to your example trades, we have to talk about Lowe's, your take, especially in the context of Home Depot's results. Kev, we'll start with you.
Still a very strong, well-run company, but Diane, everything we said yesterday is basically the same for today, except they do a little more do-it-yourself and not as much professional. Now, they're trying to make improvements in professional and trying to up that part of their business. They're a competitor with Home Depot, as you know. Like Folio's data clearly showed that Home Depot is the leader in competition between these two. But remember, they have an ex-Home Depot board member as their CEO now. So they're competing better than they ever have with Home Depot. But like I said, more do-it-yourself, a little bit less pro, but all things considered, the same problems that Home Depot was running into, Diane.
Tom, your take.
Well, you take a look at what's going on in Home Depot right now. That's going to give you a good gauge or barometer for what probably is going to come out of Lowe's with this report. Now, the difference is, as Kevin mentioned, they rely more on the do-it-yourselfers. That's at 75% of their business. And Home Depot talked about the consumer still being constrained. The lack of, storms. Is that going to impact them, or how is that going to impact them? This is all about traffic. This is all about comparable same-store sales. They're supposed to be up a little bit from year-ago levels, but Home Depot's were up a little bit, but not enough. Will they have to cut guidance? Will the impact to their do-it-yourself side of their business impact their results more than Home Depot's? Because remember, Home Depot's, they got 50% of their revenue from the pro side of their business, right? Which
Head and
is still
Shoulders,
impacted, but not as
shoulder
much
line,
as
it got a hold.
Selfers who are still worried about the high interest rate environment that we're in. And then you throw on top of it the materials that they get, Diane. The tariffs still have a negative impact to both Home Depot and Lowe's moving forward. So yeah, I mean, the bar is low here in this company. The stock's down, about 10% so far this year. This is the stock's at its levels that we haven't seen since about April, early May. At the same time, but yeah, I mean, it's the duopoly kind of tells you what we might hear from Lowe's, but yeah, we'll wait and see on that one.
Good point. Yeah, indeed. All right, so let's get into the trade example. Kev, let's start with your example trade.
Now, remember something, and you're going to see this a lot through earnings season. When Home Depot's earnings came out, Lowe's sold off with Home Depot, so some of their move has probably already happened. If they say the exact same thing as Home Depot, are you going to get the same big move, or are you going to get something a little watered down because you've moved slightly today? So you have to think of that into your how do you
that's a good
strategy.
point.
So what I looked at is something very short term.
I never thought about that.
Talking about an $8 expected move. So I went just a little bit inside that, Diane. I sold the 70% probability of finishing out of the money. The 215 put, and then I bought the 210 put. Not taking a big monster trade here, but a $5 put vertical that was trading about $1.20. It's trading about $1.15, somewhere between $1.15 and $1.20 right now. The risk on the trade is the difference between the strikes, $5 minus the credit that you take in. If it's $1.20, your risk is $3.80, and you're about a 70% probability of finishing out of the money, Diane. But there's an event, so that could affect that movement. Tom?
Yep. Yeah, let's break this one down. Really short-term positioning. And Kevin makes a good point here. The stock's down about 1.3% today on the back of Home Depot's earnings. Home Depot is down 4%, though, at the same time. But let's break this one down. November 21st weekly options, just 3 days to expiration. Sell that out of the money 215 put. Buy the 210 strike put, short $5 wide, neutral to bullish. Put vertical here. You're going to collect roughly about $1.20 credit. That means you got $380 in risk per spread, but that's all the way below the 210 level. The option market pricing in about an $8.50 move either way in the stock on that one. So we're about $7 above the 222 level is where the stock's currently trading. That 215 put that you sold in this strategy, about $7. So almost that one standard deviation move.
Second trade I made,
even though on this one,
one of my biggest winners lately.
80 to the downside sets up
what do you got to say about that?
Deviation move. You're risking 380 to make a potential 120 on
but this ain't
trade.
working
But these
out
are those
for sure.
trade-offs that we talk about where, hey, I'm risking more to make less, but at the same time, I've given myself a better probability of success because I've got that probability that that short 215 strike will be out of the money at expiration of about 70%, as Kevin mentioned on this one. So neutral to bullish, where 3 out of 4 scenarios you can profit on this one. The stock higher, stays where it is. You're wrong. It goes lower, but remains above 213.80. You're going to be profitable on this trade. Really short-term positioning there. So there's the neutral to bullish stance on here. So I looked at something a little bit different here, guys. Where it gives me some exposure to the downside, but I can limit my risk on this. Kevin's was a risk-defined trade, and so is this, especially going into earnings. Risk-defined might be the way to go. Looked at a 1 week wide put calendar to the downside, about that one standard deviation move. So 212.5 strike put. You're going to buy that in the November 28th weekly options that expire in 10 days. And then sell that 12.5 strike put in the near term November 21st monthly options that expire in 3 days. You're going to pay roughly about $1 debit for that spread, trading closer to $1.20 because the stock has moved down towards closer to that strike at this point, which is about $10 out of the money to the downside here. But the debit you pay is going to be your risk. So if you pay $1, $100 in risk. If you pay $1.20 or $1.10, $110 in risk per spread. On that. Now, you can see here from the risk profile, you want it to go at or near 212.5, right? That's where you're going to make the most potential profitability. But you've got a range between maybe 205 on the downside and about 220 on the upside where you could potentially remain profitable on this one. And Kevin, this is downside. You're risking about $100 for this thing to expand, but this is all about that lower price input due to those implied volatility levels between the two series, right?
Yeah, here's why this is a good idea if this fits the strategy you're thinking. A downside, a put calendar spread, targeting the 212 strike. If you think that's the way this stock is going to move, this is an inexpensive way to give yourself downside. It gives you, just a couple deltas. It's not very delta centric, but not only do you get exposure via the short delta, but you get exposure being long vega. And on the downside, normally implied volatility were to rise a little bit, so you may get that double winner of a little higher in volatility. It's got about a little over a 5 vega, so that gives you $5 every point in implied volatility that it goes up. So just that's another way to look at it. A downside when you're thinking bearish, a put calendar is a nice way to do it because it is risk defined. All you have at risk is the debit paid, but you do get that double kicker on the downside, the delta and the vega component.
Yeah, you don't want, on that particular position, you don't want the stock to go higher. You don't want it to kind of stay here around 222, or you don't want it to go down maybe 2 or 3 standard deviations. You don't want it to go down $15 because that's where you start to lose some of that profitability below maybe the 205 level. Got some assignment risk on that short option. Also going into expiration over the next 3 days. So Diane, there you go, bull bear debate here in Lowe's going into this report.
All right, there we go. That's the setup. We've got Lowe's coming next after Home Depot. Coming up, we've got cash tags. The team from Lightfolio will be along with new sentiment data on Target. That stock is down more than 30% year to date. Can it get out of the mud? Stay right here on Schwab Network. Fast Market will be back after this break.
Get ready, get ready. I'm going to really triple down on this one here.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
I'm his mommy.
You could have done better. Same goes for where you invest. Level up and invest smarter.
And I'm his mom.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab
You still
Network
living
at
with your mother?
schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis,
I'm his mother.
features, and more. Best of all, you can ask questions.
Okay, I see another
by
support
chatting
level.
directly with an education coach. It's interactive learning at its finest.
Shut up.
Tune in live or watch on demand.
I'm getting ready to triple down on this at 90 cents. Ladies and gentlemen, I'm getting ready to triple down on this at 90 cents. I'm his mother. I'm really too far out of the money again. I wasn't there at the moment. All of a sudden I got a little bit too far out. So I don't know. I don't know if I should just... I had to get 6, and then if I get 9, I'll be tripled down on it at 95 cents, which would really put me at about $1,700 $200 over my limit. And I'm thinking about going into the kitchen. I've never had I had this special kind of coffee. It's brewed, you brew it with it's called stonk. You ever had that cold coffee you buy at a store? There it goes. I need it to break this line. I tried to get 90 cents, but I got 95. Now I got to stay above this line. Hello, I'm his mom. Mom. What the heck? I'm his mother. My mama. Let's go. Come on, baby. I'm green. I'm scaling out. Magnificent, I need an apology, please. Magnificent, may I have an apology, please? Huh? Show a little bit of effort. Magnificent, please. Oh, God. Well, I got out early, but Dashing through the snow in a one-horse open sleigh. Over the fields we go, passing time away. It's just hit 420, Randy's favorite number. Oh, what time it is when you're a winning trade. Oh, a C minus. I've not had a red trade yet. I've not had a bad trade yet. I've not had a bad trade yet. Oh my God. Entry wasn't perfect, schmurfic. Life's not perfect. It's what you want to make it. Dashing to the Head and Shoulders at $4.80. I just left $170 a contract on the table. Yeah. Do you know how much that would have been? That would have been $3,000 trade. $3,500 trade. I've never seen anything like it. You're the luckiest man in the world. It always seems to work out. That's right. Oh, camera not available. What happened here? Camera's not available. Well, we'll just have to fix that. Camera's not available. Camera's not available. What's going on here? I'm having technical difficulties. Camera is available. Now it's working. Now I shut it off. I was having technical difficulties. Didn't give up, not one single bit. Added to my trade. Got in 4 different times. to 4. This might make a little more. 1, 2, 3, 4. Everybody sing. 1, 2, 3, 4. Well, up on at the bottom of the channel, I thought was a pivot point. I added on 4 different times. If you count to 4, you might make a little more. 1, 2, 3, 4. Well, I picked up this old guitar, started to play it at the local bar. Girl came up to me and said, I was watching you on YouTube. You kind of tickled me and turned my head. 1, 2, 3, 4. I made more, a whole lot more. Thank you very much. For I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Jim, if it wasn't for your great singing, I don't think I'd be here today. I was almost ready to commit suicide, and I heard this beautiful voice on YouTube, and I went to go listen to it, and my whole life's changed ever since. Am I a nut? Unbelievable. Jim, you're down over 95%. Have you ever thought about selling? No, I can't.
Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom.
No, I can't. That's You're down 95%. Have you ever considered selling? No, I can't. That's no.
You got false information. You got false information.
You made that airplane so cheap for me, I couldn't help but buy it.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
Hey, what do you think about that, George? Put a smile on your face. Did it. Randy? Unbelievable. that's what you are. Unbelievable, here and far. $9? Are you kidding me? Damn. Okay, it's time for the coffee break.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough? I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
Magnificent can't do it.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
Magnificent YouTube, can you believe that? Magnificent says you got false information on my A+. I said I was going to do it. I'm debating. Oh yeah. So this is the kind of coffee that STOK, I think, or Stonk. Yeah, stock.
Here's how to make cold brew. Use
Hey, honey.
coffee grounds and cold or room temp water into the jar. I like to use 4 tablespoons for every 6 ounces of water. Give it a stir, then cover the jar with a cheesecloth and let it steep for at least 12 hours. When that's done, strain the cold brew through the cheesecloth and into a pitcher. Add 1 part concentrate and 1 part water over ice and enjoy a nice cup of cold brew. Cheers! Here's how to make cold brew using only a jar and some cheesecloth. First, add coarse coffee grounds and cold or room temp water into the jar. I like to use 4 tablespoons for every 6 ounces of water.
God.
Give it a stir, then cover the jar with a cheesecloth and let it steep for at least 12 hours. When that's done, strain the cold brew through the cheesecloth and into a pitcher. Add 1 part concentrate and 1 part water over ice and enjoy a nice cup of cold brew. Cheers! Here's how to make cold brew using only a jar.
Well, that's a lot of coffee.
Progressive Commercial Insurance offers affordable small business protection. You can receive discounts on commercial auto insurance.
Let's go ahead and make some cold brew. I have been loving using this 64-ounce glass mason jar, so one of the least toxic ways to consume coffee, because we have our stainless steel filter as well. And as you can see, you could fit a lot of coffee grounds in there. Too much. You definitely don't have to put that much in there. And then you can see just how
well, it is nice.
Fine this is. So it's not going to let a lot of the grounds get into the coffee. It just makes a very smooth coffee, you guys. So I'm going to put my water in here.
Is it room temperature water, sir?
Let's go ahead and take our coffee. We've already got this grinded up. And I fill this up about halfway.
God.
Makes a pretty potent cold brew.
No shit.
Let's go ahead and drop that in. As you can see, we've got some rubber here, so it fits perfectly.
Man, I want one of those.
On the glass jar. And a nice rubber seal here. This plastic feels pretty durable, but it is just a standard plastic. One thing I would have liked to see out of this mason jar setup was that you could pour this and not have the coffee coming out. But when you do want to use it, you just take out the filter and then screw this on, and you can just pour this like a regular coffee. So this is a cup that I'm going to save for tomorrow. You can see just how dark that roast is there. Well, not really a roast, but so yeah, pretty cool setup. I'll show you guys what this looks like periodically, hour after hour, and then this is going to be ready by tomorrow morning. So I usually do about 16 to 24 hours.
Oh, my.
This is my favorite way to drink coffee, especially in some of these hotter months. Pretty nice product. It's affordable. Go ahead and check it out.
Where do you get it at? Looks like he's putting it in his fridge.
With USAA Safe Pilot, I can save when I drive safely.
With USAA Safe Pilot Miles, I can save.
Okay, we're at resistance. I wonder if I can get one of those things at Amazon. Magnificent doesn't know how. How does he do it? Huh? Not sure how he does it. We're at resistance. Should we get a put here? Yes or no? What if that guy's got that in his description? Oh! Cold brew maker from Amazon. There it is! I'm getting it. I'm going to order this. Let me see. I'll add it to the cart. See if I got any good coffee in here. Buy now. Add to cart. Let's see if it's some Jamaica Blue Mountain coffee. I don't want the blend. So I got a new target of support down here at 664139, 10-4. Ladies and gentlemen, and transsexuals, 664140. If there's any transsexuals out there listening on YouTube, I have nothing against you. Just don't mess with my goats. That's why you follow me? Oh, very nice. Very nice. Can I show that to one of the guys in the room that doesn't want to give me a good grade? You need love over that. That's what you are. Oh. The sneaky snake strategy is the very best strategy out there, and I have tried them all. I'm going to share that too. I'm trying to get an A+ in the room, but I'm just not getting one today. A little bit of work. I think I'll end up getting one by the end of the day. And I'm not paying this person to say this. That's not a capital A. That ain't good enough. I'm going to have some stonk coffee. I'm trying to debate if I want to froth it, but I don't think I will. I'll be right back. Oh, by the way, before I leave, the next resistance on SPX will be yesterday's close at 6672.85. Yesterday's close at 6672.85. Do you understand? I think I want to hear this one more time before I go make my coffee.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
I would give myself an A+.
A little bit more cushion in dollars as the stock's trading at around 492, but less cushion in terms of percentage in the case of Microsoft, just because of the differences in implied volatility, but also getting a little bit bigger credit. It's a little bit more aggressively structured.
Yeah, and Microsoft, of course, we knew they had pretty solid earnings, and I mean, all of these companies posted really staggering growth and staggering capex, and so I think that perhaps seeing more of that cautious tone today isn't necessarily a doom sentence by any means, just one conviction, especially because I did look at Redbird. They do typically have more of their coverage in the neutral camp, so this just to me then fits more of their conviction on the broader tech landscape, frankly. But we will leave it there for Chartmaster today. Now coming up next, we'll talk another name in tech, but with a bit of a different story today. That's Cloudflare, which is down now about 1.6% after its outage impacted thousands of internet users this morning.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight
Marley.
from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
I'd have to say Marley has the biggest boobs of them all.
Markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad.
Dad.
Question for you.
Sure.
When did Granddad first...
How come Grandpa doesn't sleep with me anymore?
With Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me.
Darling,
and my
Grandpa's dead.
She was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Now it's my turn.
Welcome back to Next Gen Investing.
That family-
More FOMO, baby.
That family is disgusting.
But, I mean, I will say 1.5% move to the downside. Not too bad of a session here considering this massive outage. So joining us is Marley Caden, of course, host for the Schwab Network. So this is fascinating. I had no idea there was an internet outage this morning. I think it was primarily right now based on tracking data of the East Coast, but interesting though that Cloudflare does operate 19 to 20%.
Sounds like a monopoly.
Internet databases. So this did have some sweeping implications, at least this morning.
Yeah, it certainly did. You know, there were a lot of popular internet services that saw their websites, their apps down, giving service errors this morning after Cloudflare saying now that it was a bug that led to those broad problems that it saw on its network. And this
A bug?
outage. We saw sites like
Cockroach?
Shopify, Indeed, Anthropic's Chat, Claudebot, True Social, X. Those were just some of the companies that were impacted by the outage this morning. And Down Detector, which is a site that also could not be accessed, but also tracks to see what is impacting some of these outages that we see.
That's a
Okay. As I take a deep breath and we approach the 63 EMA, today's coffee is called Stonk. It's a coffee that's brewed in a period of time, fermented in an average temperature, approximately 12 hours. Overnight is a good time to prepare your Stonk coffee. So I'm going to order me a kit today. And hopefully I'll get it, because I like that guy's thing and he had it on his thing, so I'm going to get it. I like his cold coffee. I haven't really drunk cold coffee that much. But with the right kind of creamer, this shit is good. I like it a lot. I like it better than hot chocolate. In fact, I might go back for seconds. I'm gonna get me a Sunk coffee maker. I'm gonna order it right now. It should be added to my cart. Huh. There it is. #1 bestseller. Delivery tomorrow. I can get this thing tomorrow if I order it now. I'm going to get it. Proceed to check out. Place the order. And I got it. Black Friday starts the 20th. So this is what I just ordered, humans. On YouTube. Cold brew coffee maker, 64 ounce mason jar pitcher, stainless steel filter, pour spout handle lid, heavy duty glass, airtight with no leak proof for iced coffee. Tea and lemonade. Oh, I get this cleaner too. I'm actually getting a buzz on that one. I don't think I'd need another one. It's funny when I get a buzz off coffee.
Put vertical into the weakness in Cloudflare. And for this example too, like again, tying in what happened with CrowdStrike, and there was a rapid repricing to the downside, but ultimately that stock stabilized and was better off in the future as a result. So neutral to bullish, risk defined, short put vertical here, 185, 180 is the strikes going out to that December monthly. Stock ticker, NET, Cloudflare here, $1.40 credit. So in between what we collected for Amazon and Microsoft in the last segment, with that 140 credit on the $5 wide spread, you'd collect 140 max profit potential on 360 in risk, break even 183.60, guys, looking for stabilization, and maybe we've seen that with the stock already quite a bit off its lows.
I know, kind of impressive here how these companies are able to shake off what I would imagine would be a pretty major catalyst of the downside, but I guess price is king right now, and so we're only down about 1 3/4%, but appreciate it to Marley Caden, of course, host for the Schwab Network, for breaking down that story for us. We'll continue to watch as
SPX just hit the 63.
Seems like that has been put to rest, at least for the time being. But coming up next, we'll discuss the broader weakness we've seen in the crypto space, which has not been felt just today. It's been now months long, as we did erase a lot of our 2025 gains just over the last several weeks. So we'll dive into individual names as well as Bitcoin as a whole coming up next.
La 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 la.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
From Washboardjim.
Morning Movers brings
Morning
the
Movers.
biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Next Gen Investing, it's now time to talk the world of crypto, and starting things off here with Strategy, formerly known as, of course, MicroStrategy, which is seeing a pretty nice recovery today after seeing this recent pullback in the entire asset class. So joining us now is Zane King Hall, the host of Morning Movers. So Strategy is it's basically a proxy to Bitcoin right now.
$300.
Massive holdings, but we'll see the latest here because hey, it's not a bad session for Strategy.
No, it's not, and it's apparently the
How does he do it?
Bulls are back at it today.
I've never seen anything like it in my life.
A set of days recently, you saw Bitcoin originally drop below 90,000. Since then, it has climbed and
Sorry, honey, but I'm talking. I'll tell you when it's your turn. Woo! Yippee-yay! Yippee-yi-yo. Yippee-yi-yi. Yippee-yi-yo. Ghost riders in the sky. This is 3 black crows with a hammer off the 63 with a hammer, and 3 white soldiers with a. And basically, do you see this? I'm going to walk this through. This is a very educational here. Just like clockwork. Just like clockwork. Okay, so Jimmy waited for the 63 EMA. What we got with the 63 EMA is an inverted hammer. We have a long leg doji, which is a reversal signal. When you see something like this at the top, that's a reversal signal. Then it came in with 3 black crows with a hammer off the 63. And then the hammer leading it up was another hammer with 3 white soldiers with another doji signal. See that? See that? So when you see something like that, you could be one of the first ones out of the trade before other people think about it. And knowing that you're coming up with 3 white soldiers, you know to get out of that trade. And just while it's in heat, and it's not hard to get out of it, you just push that sell button, you're one of the first ones out of the trade at the highest point of the trade. Who knows, it could still run up, but if you're scalping, I mean, in 3 minutes, that's $400 on one contract. In 3 minutes. If you can recognize patterns like that, the tweezer bottom with a tweezer top, 3 white soldiers, bam, out of the trade, pulls back. 3 black crows in the trade, boom. You know to get out of it because of that their doji star. Evening star. I'm not sure if it's called an evening star. Let's see. Evening star pattern. So you had 3 black crows, boom, then an evening star. 3 white soldiers, out of the trade. Evening star pattern. Do you understand? Do 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 do. La 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 la. You see this right here? 6672.85. You know what that is? You're right. That's yesterday's close. Good guess. It's now 12:53. Oh, this ought to be a good one.
Here it is, the final form of porch pirate audacity. A thief covered in paint, calling the cops to complain about it?
Sir, are you the one who called us? Yeah, I called. Look at me. I'm covered in paint. I'm here to file a complaint. All right. How'd the paint get on you? From the box. It blew up on me. And where was the box? Right there, on that porch. So you took a package that wasn't yours? That doesn't matter. They can't paint me like this. It's illegal.
Here it is, the final form of porch pirate
Whatever you do, don't steal boxes off people's porches. It's illegal. You can't be doing that. Well, thank you there, Belly. That's a good one. It's a good chart pattern. You could almost see one right in here, but it's not really detailed. And then there's definitely one right there as it come down. Then you got one right there. And you got just the opposite from the upside, head and shoulders. We're back at the 63 again. I think we're going to go down to the 200 this time. You know why? If you can count to 5, you just might take a nosedive. Unum, 2 bits, 3 bits, 4 bits, and Phoebe. In dog talk. If you can count to 5, you might take a nosedive. If you can get 4, you might make a little bit more. Prepare ye as we come to the 200 EMA. Do Okay, we're getting close. As we approach the 200 EMA, the crowd goes silent. The 66.75s are now at $3.50. 3.30. I would love to see one more red candle. I'm going to show you a crossfire here. Does anybody see the megaphone? Question. Does anybody see the new megaphone? $3.40. Does anybody see the new megaphone? Right to the 200. Oh my God. What in the heck? It could be that. Boom. Or it could be this. Do you understand? $3.40, and now we're at $5.20. Unbelievable. Magnificent. I think I deserve a really good A triple plus today. You know what I'm saying? What you want? I should have got out of that. That was at $6 and something. Mm. Mm. Mama. It's a megaphone day. It's a megaphone day. I'll take that. We are forming a flag. If this thing don't break out soon, I'm going to get out of the trade. Because this could be a downhill. This could be a reversal to the bear side. If we don't break out soon, I'm getting out. Period. I had a chance to sell it, and I did. I've got too much yakking going on. Come on. We'll know any minute. There we go. Breakout. Now it turned into an ascending triangle. Thank God. Now stay there and move to another candle. We're at $4.70. Jim, have you ever thought about selling? Yes, I have. Have you ever thought about selling? $4.50. Thank you very much. For I'm Washboardjim. Thinking strategy. Figaro. The megaphone. I'm yours. Oh man. They just hit 550. So as we approach 2:17 Eastern Time, you got to ask that question. Am I too far out of the money? Is it the time for the correction to pull back and hit the 200 EMA or the bottom of the megaphone? That's the question that needs to be asked. For I, William Shakespeare, the founder of the Washboardjim Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Boom a chicka, boom a chicka, boom chick chick. The truth behind the release of the files of the Epstein files stop making cold brew like this. What? I just
Stop
bought
making cold brew like this. I've seen a lot of people making
what?
the brew. This one is from a trade cold brew kit, and it comes with literally everything you need to make great cold brew, including really cool cups. On that note though, more important than the vessel that you use is the coffee. You want to look for coffee that has a roast on day as opposed to a Best Buy day. And I know a lot of people tell me it's hard to find coffee like this if you don't live next to a roaster, but you can always order it from a company like Trade, because they work with some of the best roasters all across the United States and ship coffee to you fresh, like right after it's roasted. But why shouldn't you put your cold brew in the fridge? Well, it's okay to put your cold brew in the fridge after it's brewed, but it's better to brew it at room temperature. I recommend letting it steep for at least 12 hours at room temperature. This will give you much better tasting cold brew than if you let it
Finally got the
If
answer.
you grab some free cold brew gear and some great coffee, check out Trade at the link in my bio. Stop making cold brew like this. I've seen a lot of people making cold brew but then sticking it in the fridge while it brews. But this could be ruining the flavor of your cold brew. Here's how I recommend doing it instead. For starters, you're gonna need a good vessel to brew it. This one is from a Trade cold brew kit, and it comes with literally everything you need to make great cold brew, including really cool cups. On that note though, more important than the vessel that you use is the coffee. You want to look for coffee that has a roast on day as opposed to a Best Buy day. And I know a lot of people tell me it's hard to find coffee like this if you don't live next to a roaster, but you can always order it from a company like Trade, because they work with some of the best roasters all across the United States and ship coffee to you fresh, like right after it's roasted. But why shouldn't you put your cold brew in?
It's a good point. I was wanting to know that answer, now I got it. Oh my God, look at there. It's back at the pivot point.
cash secured puts like this trader did with the expectation that at least the stock's going to stabilize, maybe go higher, or they're willing to buy the shares at that lower break-even point. In this case, that break-even of 173.30 to the downside is where they'd be buying the shares if the stock did continue to move below 180.
Which was interesting is that the last 4 times NVIDIA reported, the market reaction was somewhat lukewarm, and I saw that after the earnings, it dropped 4 of the next 5 days on the second quarter earnings. Even afterwards, that we saw.
What's the deal with all the turtlenecks, baby?
I saw at one point it had a 6% likelihood of volatility for tomorrow. I don't know if there's an update on that, but so people can expect that it could go one way or the other, but a lot of folks are still really positive on the name. Let's talk about Cisco, near 25-year highs. Let's talk about that after the earnings.
Yeah, down a little bit today, but still up about 30% so far this year. And that AI infrastructure build-out that we continue to talk about, well, Cisco's right in the mix of it, making all the networking for all these data centers, and that's really helped this legacy tech maker get back to those 25-year highs over the last week. Now, they reported earnings recently. They beat on EPS by a couple pennies. They beat on revenue. And I think the key was they guided for full fiscal year earnings to be better than expected, revenue better than expected also. They raised fiscal year 26 adjusted EPS value to $4.08 to $4.14. That was up from about $4.03, the consensus average on that, and raised revenue to $60.2 to $61 billion, and that was higher than the 59 to 60 billion that the street was anticipating. So not only beating earnings that were elevated, right? They expected, pretty high bar in there, but they beat on those expectations and raised guidance. That's why you're seeing the stock at those 25-year highs. Gross margins improved to above 68%. So a lot of things going right for this company. It's picks and shovels of this AI build out that we've seen across the board, the data centers. But same type of strategy used here as far as unusual option activity that I saw in here. But this was all the way out in the February monthly options. So about 94 days to expiration, Nicole. Traders sold over 10,000 of the
10,000
2.5 strike puts, collected an average credit of about $2.20. So the break even for this trader where they start to lose money is below $70.30.
I think I need to go and
that's about 9% below the current share price in there. So they've got that
charging my
to
phone.
the downside on this one. They also did roll out of a position that they were short already in the January 65 strike puts. They bought those back 10,000 times, sold these further duration puts to maybe collect a little bit more option premium. But the same setup here, Nicole, a lot of people taking advantage of the pullback, the higher implied volatility, and selling cash secured puts like these 3 traders did today in these names.
And look, I mean, as we break the 50-day moving average on the S&P, I know we closed there below there after 138 days in the conversation, and the Dow and Palantir. So, I mean, it's been an unusual market within Bitcoin trade below 90,000, but it doesn't necessarily mean that the bullish trade is over inherently, but it does have people watching really closely, especially for NVIDIA tomorrow. Tom, thank you.
That's right, baby.
Tom White. Every day here on the watch list with Options Corner. Appreciate looking at Oracle, NVIDIA, and also Cisco Systems. Coming up, a closer look at some of the weakness that we've seen across the asset classes. Also, the 30-year mortgage rate ticks back above the 6% mark.
Oh, God.
We want to talk about the housing market. We'll be right back.
Look at her walk backwards. Now she's walking sideways.
Kick off the morning
In high heels.
and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitics.
I'm going to ask people to
Fast and always live.
pay attention here.
Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced trader or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Penalidis. We're live on the floor of the New York Stock Exchange. The Dow's down 338, up off the lows of the day. I have a few movers for you in the market right now. Watching Cloudflare. It's moving lower after the company experienced an outage this morning, taking down multiple websites across the internet. ChatGPT, DoorDash, IKEA, also Twitter, X, right? All of these things were impacted. The outage echoes problems experienced by Amazon Web Services last month. So far, it's been on a smaller scale. Home Depot falling in Tuesday's trading after the big box retailer reported weaker than expected third quarter earnings. The CEO pointing to consumer uncertainty and continued housing market pressure having a negative impact on the home improvement demand going forward. Shares are down more than 10% this year. We welcome in our next guest. Chris Whalen's with us, Chairman, Whalen Global Advisors, to talk a little bit about the markets and what's been going on here. In the meantime, markets aren't too far off the record highs. At the same time, we're down a few days in a row, 4 days in a row to be precise, and the VIX is here at 23.5. Some of your thoughts.
Well, we track financials, banks, non-banks, and mortgage firms. All of them are down off the October highs. I was just writing a note about some of the non-bank players. I think there's a couple of things going on here, Nicole. First and foremost, the Fed has been shrinking their balance sheet, so you've had a couple of episodes in the money market.
We're at the 200 EMA.
Has started to become a concern. Sure.
We don't need your negativity, sir.
The other factor that a lot of people don't really think about, but they have to start to factor into their analysis, is the Treasury. The Treasury raised over $1 trillion in the last 3 years. What this means is that the Treasury is sucking cash out of the markets,
Exactly.
out of the banks, and putting it in the Fed. The Treasury General Account is isolated from the
That's
rest
not
of the
good for the
market.
economy.
So what that does is the ebb and flow of cash, when they raise cash and then when they make payments, they have to catch up, obviously, with a lot of people who weren't paid during the government shutdown. So the Treasury's bias has been to raise more cash, and I think the combination of a shrinking Fed balance sheet and just the sheer size of the Treasury's funding operations has...
We're coming to the 200, sir. I'm speaking, not you. As we approach the 200 SMA, I have to ask myself, will we bounce off the EMA or will we reach on down and touch the SMA? And I'm inclined to believe that we will touch the SMA because I have more confirmations at the SMA than I do at the EMA. Although we do have a triple bottom at the EMA, I could start a position here, but I'm going to wait for the SMA. Do you understand? And I'm going to move my calls up. And I'm going to go to the 6660. Why? Because I want to beat the devil up. You know what I mean, man? Actually, I want to be closer to the money. See what I'm saying? The 6660 at $4.20, 410, and we're going to wait for the 200 SMA and not yield to the 200 EMA. For it is the SMA that I want to see. We are bearish as long as we're under the EMA, and we are bullish as long as we're above the SMA. And the closer to the SMA we are, the farther apart we are from the EMA. Here, I need a little WD-40. It's unbelievable. Unbelievable. That's what you are. 34 minutes ago, I get to watch my Views and Queens. See if I'm not going to be the first like, probably. Nope, number 47. I'll watch that when I get done here. Because I'm waiting for the SMA. It's now 1:35, 2:35 Eastern Time, and I think I've messed up. I should have took the EMA, but I was stubborn and wanted to wait for the SMA. Oh, what a knife in the heart. Oh, ouch. Oh, no. No, they're up $200. Up 100. Oh, it's up $200. Jesus. 420 to 620, just like that, in a matter of a minute. Is that disgusting? Yes, it is. That's what you are. Damn, 870. God. Oh, that hurts. That's 100% trade right there. I get an F for that one. Look how beautiful that is. Do you see the falling wedge? I just now noticed it. I think I would have changed my mind if I saw that. Show us the falling wedge, please. I'm going to show you a rising wedge, and I'm going to show you a fallen wedge. There's the rising wedge. And here's the falling wedge. The rising wedge to the top of the orb to the falling wedge off the 200 EMA. Now, if I would have noticed that falling wedge, I would have took that trade for sure. Right to the rising wedge. Oh, look at that. $4.20 to $11.20. $700 in 1 of them, 2 of them, 3 of them, 4 of them, 5 of them, 6 minutes. That's $100 a minute. Oh. And 2 of them would have been $200 a minute. 3 of them would have been $300 a minute. 4 of them would have been $400 a minute. And 5 would have been $500 a minute. Oh no. I'm going to have a heart attack. I'm going to have a heart attack. Nancy? May I have a Valium, please? My heart's beating a little fast here. No. No. No, 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 no. Let's see if I get my coffee maker tomorrow. What are the odds that I do? Let me see if it's been shipped out yet. Buy it again. Arriving tomorrow. Track the package. It's been ordered. $13. $13. $13. $13. No. Something's not right. It's all right. Doo-doo. Come on.
Reassert this trend, of course, but a little bit of weakness here. Those 2-3 days beneath the 50-day might not be sufficient to kick a lot of traders out. Obviously, we're going to be hearing from a pretty important company after the bell tomorrow. It's probably going to have a little bit of impact on how the S&P finishes this week, would be my guess.
The important company, NVIDIA, we'll talk about that. I'll ask you at the end a quick thought. How about Microsoft? I mean, today we saw a couple of downgrades. We saw Redburn putting a neutral on Amazon and Microsoft today. So you did have a couple downgrades there. What are your thoughts on the Microsoft chart?
Well, today's move is a bit concerning for traders. I think that's the takeaway from what we've had here. Now, Microsoft had been kind of range-bound, but the significant move came following that earnings announcement, and what we built was a pretty healthy retreat that took us down below both the 20 and the 50-day moving averages, neither of which are great from a trend analysis standpoint. So we broke that confluence, and we spent 2 weeks rallying back. That's that channel that I drew in white. That's rallied into the 50-day, 20-day confluence there, right around 515 or so. And then today's gap move lower took us through the neckline of what looks like a double top formation. The reason that this is concerning is that a breakdown like that can be a reason for bulls to start covering positions of their own on the long side. They might be lightening up those positions based on this type of a breakdown today. So if this is a legitimate breakdown from a double top, then it does put into play the 200-day moving average beneath us, right around 465, and a measured move bearish target in the neighborhood of 445, 446, equal to those prior highs we saw previously. So there's an area of concern here for the bulls, it's true, and if this does not reassert itself, get back into the trend or the channel that we fell through here immediately, like quickly, tomorrow, the rest of this week, for example, this could play out relatively bearishly for the short run. So it gives the traders in the bearish camp an area to
wonder I didn't do that right there, and you went with that.
Resistance zone, as does that.
So I would have went with that one there.
There's a lot of work on this.
And I would have raised it up.
Microsoft to do over the
brought it all the way across.
Weeks to repair this, perhaps.
All right. Oh, thank you for that, because that's a big one. When you think about the Mag 7 names, everybody wants to hear about that. And then Best Buy, you have the earnings next Tuesday. We have a lot of earnings this week, and Best Buy will hear from next Tuesday. Tell me about your thoughts on this chart.
Well, this one's all tied to the short-term move. It's had a rough year. We're down about 13% on a year-to-date basis. But going back to April lows, stock is up 30%. The reason that this one kind of comes to play today, twofold. Obviously, we're entering into the holiday season, and Best Buy can see a little bit of exuberance from time to time as we get into the Thanksgiving and Christmas window. But the thing that called out to me is that trend line you're witnessing off the lows. We've had 2 prior successful tests of that trend line. This current test is coincident with the 200-day moving average, which can give traders at least the belief that, hey, what's been working for 6 months may very well continue to work. It might not, obviously, but if they're wrong, those bullish traders, Nicole, would move on quickly on a close below that trend line, or maybe taking out on a closing basis the 200-day moving average as well. So there's reasons for bulls to move on quickly if this were to break down, meaning that their risk is fairly limited. They'll know rather quickly if they are wrong about the potential for the trend continuing. And if they're right, well, then they might just target the prior high we had just fallen from about 3 weeks ago. That'd be about a 15% upside from here. So risk reward does favor the bulls at this point unless things show some weakness and we break that 200-day, break that uptrend line that's been working for about 6 months or so. So that's where we stand on Best Buy. We'll have to see if this level maintains.
And a quick thought on NVIDIA and how it could affect the larger market.
I think it's going to have a pretty good impact, obviously. The interesting thing on my viewpoint is going to be guidance. What do we hear in that way? What companies, what areas of the market can we start paying attention to again? You know, we've certainly seen semiconductors broadly in a bit of a pullback, obviously. I would look at some of those areas that can offer opportunity once more. I mean, a lot of them have been beaten back by 20 or 30% or more on this recent drawdown. So the question to me is, can guidance from NVIDIA continue to tell the same story it's been telling for quite a while here, which is we're continuing to expand, continuing to build, continuing to add CapEx spending. That's a huge, huge aspect of it. If there's anything in the reporting that says otherwise, that's where we're going to start to maybe see some of that play out in other areas and components of the market. Now that's what I'm paying attention to. So yes, big risk associated with the overall broad market, but the opportunity is certainly there for potential guidance from NVIDIA to kind of lead us back and some strength once more here after a bit of a pullback recently here.
All right, well, we'll have to wait and see. Only 2 sectors are lower right now, and that is information technology and consumer discretionary. Kevin Horner, Senior Manager of Trading Services at Charles Schwab, thank you so very much. Good luck there at those names, and of course, preview of NVIDIA tomorrow, how it can affect the big picture. Now, coming up, the very latest earnings from some of the Chinese companies, tech companies, and why they have some down arrows. Are there opportunities there? The watch list. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, product support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
technical difficulties.
Carl.
Schwab.
Ugh. Hello. Well, let's start this. Oh, virtual camera. Hello, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
Especially the mini exemption being taken away. So a lot of these small packages that businesses like CBU and PVD are pushing out into the U.S. Are struggling a little bit. We're starting to see some pressure also coming from Europe. So to the earlier point, I think that what we're seeing is also a shift to more targeted, hyper-personalized AI-native marketing services, which both Baidu and PDD are investing in. And we're also seeing, if you really look at their balance sheets and their earnings, you're starting to see that even though their retail revenue isn't as strong as it has been in the past, and we're seeing
coming back down here. I'm Washboardjim with a sneaky snake trade strategy where I talk about chart patterns, moving averages, and being. I'm Washboardjim with a sneaky snake trade strategy where I talk about chart patterns, moving averages, and being in the now. Okay, we're coming back to the 200 here. Are we going to hold? That's the question. I'm Washboardjim with a sneaky snake trade strategy where I talk about chart patterns, moving averages, and being in the now.
I would give myself, look, I hate to do it, but I will do it. I would give myself an A+. Is that enough?
Woo! $6.40. Oh, 4 more minutes to power hour. I think I'll wait. People are probably buying into NVIDIA right now. Dang it. Not again. Shoot. I'm just going to take a break. I'm wore out, I think. Yeah, I think I am.
Bell to the closing bell. We've got you covered.
Doo-doo.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change.
It's 2 I've missed now.
It's not the same rate of change.
3.
Follow the biggest headlines.
Let's pay attention to 2 of them.
Breaking news and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So
Never right back.
Further downside areas to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Dadgummit.
On Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bidas, coming to you live from the floor of the New York Stock Exchange. So let's take a look at what is coming up on today's show. We'll discuss the best performing group of the day, and that's the small caps and how you can use them as a hedge to large cap stock risk. Later, we'll discuss China's crackdown on rare earth exports and how it's impacting various industries. And in Options Corner, we'll get you set up for retail earnings tomorrow with a breakdown of Target. Molly, take us through what you're watching today.
Yes, Sam, Cloud shares stock is sliding today after a major outage from Cloudflare this morning disrupted websites like X, ChatGPT, Shopify, and others. The company did resolve the issue in about 3 hours, saying that it was caused by a bug and not a cyber attack. Microsoft and Amazon also under pressure today following a downgrade from Redburn. The analyst says that hyperscalers should be viewed with caution and that the bull case for AI is murky. We'll talk about
I forgot my water.
And Home Depot stock also tumbling today following disappointing earnings and a cut to its full year guidance. We'll go through the full report and talk through what it could mean for Lowe's earnings tomorrow. But first, let's take a look at where the market stands as we near the end of the trading day. Right now, the S&P 500 down about 0.1%, significantly better than it was this morning at 66,6438. The Nasdaq trading down about 1/3% right now, 24,697. The Dow we're down about 0.5%. 46,342. But the Russell 2000 is up in positive territory, up about 0.8 right now, trading at 2359.85. Taking a look at some of our futures products, the dollar just mostly unchanged on the day at 99.45. Gold up 0.2 at 4,082.50 a troy ounce. Crude oil back up above that $60 a barrel mark at 60.74. That's up 1.5% today. And Bitcoin is up almost 1.5% as well at 93,270 after dipping below the $90,000 level earlier. Now I do want to send it back over to New York and find out what some of the top stories that caught Sam's attention were today. Sam?
That's exactly where I want to start, Marley. Bitcoin recovering after falling below $90,000 earlier this morning. Digital assets actually and related names like Strategy have been outperforming the markets today, but the recent pullback
has been catching a lot of attention, to say the least. Bitcoin is still down over 25% from its October record of above $126,000. The cryptocurrency has been coming off ever since then as investors continue to see their leverage positions get liquidated. According to CoinDesk this morning, over $1 billion in leveraged crypto futures positions were wiped out in just 24 hours. Now, Michael Saylor recently telling me he sees Bitcoin going to 150,000 by year end. So the recent weakness is raising a lot of questions about whether this is a temporary reset or a canary in a coal mine. Now, shares in Chinese e-commerce giant Pinduoduo PDD sliding after a mixed quarter. The company reporting an earnings beat with revenue coming in more or less in line with expectations, depending on where they were. But the part that makes market appears to be focused on right now is the report in the deceleration in revenue growth, which has slowed to about 9%. Now, we have seen aggressive discounting and promotions which have been good for sales, but these aren't the kind of double-digit revenue growth numbers that the street is used to from PDD, and management also expressed some cautions on the earnings call. Now, we also got the latest jobs from the ADP, that data out this morning, which showed companies are cutting an average 2,500 jobs a week in the 4 weeks ending November the 1st. Now, while this continues to point to a loss of momentum, the rate of job losses actually slowed down into November. Now, this is a newer data set that markets have had to work with in the absence of the official numbers. We'll get the September jobs report on Thursday, and while backwards looking, it will help confirm the trend. I'll send things back over to Marley, who's with Jenny Horn in Chicago for now for some of the today's top movers.
Thanks so much, Sam. Yes, lots to cover today, lots of movers. First, I want to start with one from earlier this morning. We're, of course, talking about Cloudflare, the outage that they were alerted, a little before 7 a.m. Eastern time, affecting a lot of major websites and apps.
Yeah, I mean, definitely affecting a swath of these internet, of course, companies, and we're seeing the East Coast was reporting the heaviest impact, but this also was global. There was some European users as well as South American users that also felt some of the outage, but users visiting sites like X, ChatGPT, DoorDash, IKEA, and New York City's Metropolitan Transportation Authority were met with an error message relating to Cloudflare. A spokesperson said the unusual rise in traffic was really related to one of their specific service updates at around 6:20 a.m., which caused then traffic passing through their network to experience these errors. So it doesn't seem like there was any malintent, at least that's what they're initially claiming on the back of course, this just occurring this morning. But the bug was resolved by
another chance?
Eastern time. Now, many of these tracking websites have said the outage lasted roughly about 4 hours, so it does seem to be fully resolved as it stands right now. But the outage does echo. I think that right now the broader ecosystem is so heavily tied to of these very few companies. Like AWS had an outage last month, of course. CrowdStrike is more notoriously the one that sort of unraveled a lot of different areas of the economy. But we do know Cloudflare's chief technology officer was apologizing profusely across X and said that the impact it caused and the time resolution is unacceptable. And they're already right now at least trying to right-size some of their steps on the back end to make sure it does not happen again. But scale of the impact is important. Cloudflare powers roughly 19 to 20% of all websites globally. And so when it went down, a huge portion of the internet was, of course, then affected. But relatively short-term outage as far as, again, some of the more wide-felt, longer-lasting outages we've experienced over the last several years.
It is interesting, though, when these things happen. This one particularly short. Still seeing a downside move, but the market's down on the day. But interesting to see how much we don't appreciate how bare 20% of the internet. I mean, it's just a wild figure to think about that you don't even realize until you're dealing with some sort of outage. And a lot of the time people think it's a user error and not a widespread outage, especially when they're short like this. But a better recovery, and we did see the dip off when they announced the outage itself. Recovering some down only about 1.5% right now for Cloudflare on the heels of that outage, which again they were saying was not a cyber attack. The company saying it was a bug issue. Home Depot, though, still under some major pressure. Shares down close to 5% last I checked, following their earnings miss and cutting their full-year guidance. Not the report they were hoping for.
No, and I think signaling that this turnaround effort is not turning around quite as fast as the street is desiring here. I mean, revenue did rise nearly 3% year over year. That beat expectations, but adjusted earnings missed, also marked a decrease from last year's levels. Operating margin also dropped year over year. One bright spot was revenue from their GMS acquisition. That did contribute roughly $900 million in sales in their third quarter. Everything else, though, is less than positive. I mean, you have weakened housing market, consumer uncertainty, a lack of storm-related demand, which weighed on their seasonal categories, and volume pressure. Comparable transactions fell about 1.6%. That was helped to be offset by average tickets actually rising almost 2%. And these pro customers, which has been an area of their business, Home Depot as well as Lowe's has really tried to rely on because it's more consistent, and it's also, I mean, just right now, it's a good source of cash for these companies that are frankly straining their profitability. Like margin compression, we're seeing SG&A expenses rising faster than their sales. That's a problem here. So
it's a problem here.
The quarter didn't look strong. I think that also when you give comps now that are expected to be only slightly positive, prior forecasts have called for about 1%. And you have obviously all of your expectations reset for the remainder of this year. You also have management coming out and saying, hey, we're seeing consumers not wanting to make big ticket purchases. That is everything at Home Depot. As anyone that frequents Home Depot, as I do, knows, you're not going there to spend a small amount of money. At least never in my experience. You're tending to update your home or some of these largely costly renovations. And they're just seeing right now still that deferral mindset, really reminiscent of what they reported just 3 months ago in their last quarter, which is, I'm sure, what's driving the tone of caution today based on price.
Yeah, you know, and down 4.75% right now. The very interesting timing as they report ahead of Lowe's, who their primary competitor, I mean, they stack up side by side. But interestingly, some of the things that they're citing, you know, that the storm season wasn't as bad as anticipated. So they didn't see the level of roof repairs and siding repairs that they normally see. Something like that, in theory, should also impact a Lowe's.
It's because Trump's president now.
Lowe's
no storms.
Comp sales expected to also be up 1%. We know Home Depot missed their
weather sucked. We had dark winters under Biden.
What that looks like for them if they're seeing the same pressures and the same spending habits from their customer.
I could not agree more.
I'll never forget Biden coming out and say, we're going to have some dark winters, when he was president. I'm going, what? What kind of president's going to say that shit?
Oh, it's a big problem.
And we will know tomorrow morning. We will have more details on that when Lowe's reports tomorrow morning. But I want to move on to this downgrade, sort of a more broad AI downgrade that's particularly affecting
But I have some dark winters.
From Redburn. I know you have feelings about this, so walk us through the report first, and then we'll talk through some of the pieces here.
I do have a lot of feelings about this. This one particular note, which is, I will say, overwhelmingly neutral. So that's really where the conviction was downgraded to. We saw them downgrade Amazon to neutral from buy. We also did see that downgrade, of course, of Microsoft, again, to neutral from buy. So we're not saying sell the shares by any means to their credit, but they did say that it is time to take a more cautious stance on these hyperscalers. Their analysis shows the underlying economics are far weaker than assumed, and the GPU deployment require roughly 6 times more capital to generate the same Cloud 1.0 value, with risks now skewing to the downside. So Cloud 1.0 is, I mean, not as commonly, I think, referred to as what it really is. It's basically the first generation of cloud computing. So it's like the foundational, really, stage of cloud adoption. We're basically now in Cloud 3.0, just for some context. But they are more cautious than a lot of other firms, because I was just curious, like, the way their conviction lies. Across roughly 2,000 ratings, they do have almost 40% of those ratings in the hold camp, which then to me says you do have some pretty strong conviction on neutrality, at least right now, which is, again, something to consider. But also, I do think the GPU economics are still fairly misunderstood. I mean, this does assume that all of these AI workloads will deliver very similar economic legacy to like these legacy cloud services, even though revenue streams, I mean, many are anticipating for these capabilities that AI is frankly expected to be capable of are far beyond that. And like right now, Cloud 1.0 compute, we know that these workloads right now have really seen more consistent recurring revenue. So I understand that they're basically making the case of like GPUs right now are going to require a lot additional capacity. And I think that that's been well echoed, but it's also considering that Cloud 1.0 is the same as Cloud 3.0. We are not in that same environment. And I guess where my criticism really lies is the fact that you have names like Amazon and Microsoft that were criticized 15, 20 years ago for some of the build of this, and now look at that. I mean, it's been the most lucrative aspect of their entire business.
And their behavior.
Oh, this is volatile as
The
heck.
majority is always right, but I did find it interesting that more than 90% of the analysts who cover both of these stocks have a buy equivalent recommendation on them.
Right.
There is not a single sell rating on either one.
I don't even think either of them have really very many underperforms even. I mean, we're just like as optimistic as can get, which is why I appreciate taking on a contrarian stance. But to me, it's like the GPU economics are not maybe fully understood, and there's a good chance we learn as we go. So that's how, naturally these builds and these massive technology upheavals tend to go.
Certainly. All right, let's move to one in positive territory to close out. Warner Brothers Discovery up more than 4% on a report that the bidding war is intensifying, although the report itself is now even in question, or parts of the accuracy of the report.
Yes, so this has all happened this afternoon where we saw reports from Variety that Paramount was working with wealth funds on roughly a $71 billion bid for Warner Brothers. And so they have formed this investment consortium with sovereign wealth funds of Saudi Arabia, Qatar, as well as Abu Dhabi to submit that bid for Warner Brothers Discovery. And so that was reported at around 1 p.m. Eastern time today. And so according to these sources, each of the funds would put up roughly $7 billion for a total of $21 billion. Paramount Skydance would front roughly $50 billion, thus totaling $71 billion. Then Paramount Skydance issued a statement clarifying the latest report, saying that the information Variety published is categorically inaccurate. This is a confidential process, which we respect, and as such will not be commenting until the process is over. Okay, I tend to read that there's a process happening. I mean, not to say that one report is true or is not true, we will find out eventually. But they did mention confidentiality, which is interesting because they did also hint at there is some process underway right now.
Words matter. It says categorically inaccurate, not untrue. So
categorically inaccurate.
We shall see. Those bids, the initial bids are due on Thursday. November 20th is their deadline, so we will know shortly who the bidders are and likely what their bids are as well. They're hoping to have this process wrapped up by Christmas. Jenny Horn, co-host of Next Gen Investing, thank you for breaking those top stories down for us. I do want to send it back to Sam, though, in New York and find out what we have coming up in this show. Sam?
Well, Molly, we will dive into the world of small cap stocks, which is the best performing group of the day. Market on Close. We'll be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just get you a quick market update right now because suffice to say we are off the session's lows right now. We actually have seen a little bit of a comeback rally there for the small caps. We'll get to that in a little second, but 0.7% higher for the Russell 2000. For the S&P 500, that's managed to recoup that 6.6 there, 0.3% lower today, and Nasdaq is down about 0.6%. Obviously, it's been a tough day for some of the tech names once again as we continue to see the air coming out of some of these mega cap names like Nvidia, etc. And then, of course, the AI valuation concerns continue to weigh on the minds of investors, given some of the conversations in the market right now. But it's been a day of rotation. So if we look at some of the sectors, we certainly have seen a bit of a rotation into more of a defensive type value play as well. The US dollar right now is 99, so it's sitting pretty stable at the moment. Technology is lower by 1.1, consumer discretionary 1.3% lower. So these are, of course, as we have seen the likes of Amazon, Nvidia coming off today. Clearly, we've had some concerns around the downgrades from Rothschild around Amazon and also Microsoft as well. So there seems to be some concern around a more cautious stance on some of these hyperscalers, but the rest are holding up. As I mentioned, a rotation into more value, defensive type trade today. Communication services up 1%, staples are up 0.6, financials are up 0.2. And if we flip the boards and take a look at what else is on the move right now, we've got utilities, which is lower, so taking a bit of a breather after the outperformance we saw yesterday. Industrials online, but the rest are holding up, as we can see here. Energy higher by 1%, materials 0.6, and real estate also 0.4% higher. So it's not all that bad, a bit mixed when you look under the surface. But let's bring back Marley into the conversation. Welcome in our next guest. That is Talia Leger, Chief Market Strategist.
We're at the 200 now.
Consulting Group. Thanks so much for joining us today, Talia. So we're actually seeing a little bit of a comeback here for the small cap trade. Talk us through what you're seeing as far as the performance in the markets today off the lows.
Well, how about that, gals? I wouldn't refer to or think of small caps as a defensive play, but the way we are thinking about this market segment as a means or way of diversifying away from some of these growing concentration risks in mega cap tech. And the setup is really compelling. Valuations are unusually attractive. That's not enough. You need a catalyst, but we've identified 5. So if we're right about this inflection point, we could have a powerful earnings recovery supporting small caps alongside softening interest rates, as well as pretty well-behaved corporate bond spreads, volatility that's relatively calm, and finally a technical backdrop, an entry point that is historically compelling right here.
And so you just say we're at an inflection point for the small caps here and that they're poised to surge. What's driving the earnings recovery, do you think?
So I think part of it could be this notion, just to touch on the technical aspect of the conversation, the relative performance of the Russell 2000 versus the 1000 has been showing nascent signs of bottoming around a similar level to where it bottomed in turn right around the, I would say, the late 1998, early 1999 timeline. And so similar to then, we actually had a stealth rotation into small caps that I think was underappreciated at the time, and it occurred well before the ultimate bursting of the tech mania 1.0.
Does the prospect of the Fed potentially sitting on its hands come December threaten the small cap trade, or at least some of the outperformance we're seeing?
That would, I think, hit the pause button on the trade potentially, but I am strongly in the camp that given the softening and weakening trends in the labor market, that there's a good argument here for the Fed to continue its rate cutting campaign. And I think the bond market is really the tail that's wagging the dog here, doing the Fed's job forward. If you consider the dynamics of the yield curve, it's really the short end of that yield curve that is coming down and telling the Fed that it really needs to keep going with its campaign.
And in this volatile landscape that we're in, with some of this uncertainty around the Fed and AI tech trade, small cap earnings are generally more volatile than some of the larger cap earnings. So how would you tell investors to think about, the risk-reward trade-off in the setup we have right now?
So it's a great point, and to your point, small caps are not known for the stability and consistency of their earnings, and that is entirely the case that we're making. Off the lows, it's this low base effect that could produce this expected powerful earnings recovery, and around these points in time, that is usually the way things unfold, and you see quite a nice rebound or snap back in the profitability in favor of small caps.
Can you point to any particular sectors that you think some should have on their radar? Because, some of these companies that we've been looking at have really been part of the more sort of speculative trade that we've been tracking lately, particularly when you look across nuclear, particularly when you look across some of the other sort of quantum computing type trades as well. A lot of these companies obviously pre-revenue, but a huge amount of capital that's been pumped into this on the thinking that
Boom, the knife. I about fell asleep there. I'm going to take a short nap here when I get done. Long night tonight. Okay, I'm going to add to this. We're at support. $6,625 right here. Do-do-do-do. Take it inside. That's a pretty tricky piñata peeling. Do-do-do. What's 6625 here?
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
We got the bottom of the orb coming up. Oh, gosh.
Third of a percent. Meta Platforms down about 1/3%. Amazon, the major.
Marley looks hot today.
3% down.
Yum yum.
Also on the heels of this downgrade from Redburn, but another AI deal in advance of NVIDIA's earnings tomorrow. Now I do want to shift gears here, bring Sam back into the conversation and welcome in our next guest. Joining us now, Jonathan Roundtree, the CEO of Niron Magnetics, to talk through some of these significantly tightened export controls that we're seeing out of China as they relate to rare earths. But Jonathan, before we get into that, would you mind just telling our viewers a little bit about Niron Magnetics and what it is that your company does?
Yeah, happy to. Thanks for having me on the show today. I'm CEO here at Niron, and we've developed the world's most powerful magnet technology completely free of rare earths and critical minerals. And so we're excited to be commercializing and scaling that in Minnesota. And about 6 weeks ago, we broke ground on our first manufacturing plant that will come online in early to mid 2027.
Okay, could you sort of give us, Jonathan, a bit of an update on what you're hearing as far as progress between the US and China on where they're up to with the export controls? Because it seemed like the Trump-Xi summit had yielded some good results, at least hitting a pause button on some of those restrictions. But even with that, it seems like we haven't exactly seen the flow of everything as some people may have liked to since then.
Yeah, happy to. So in April 4th, there were controls that were put in place, and then there was some proposed increased controls in early October. And those were closing some of the loopholes around getting licenses or obtaining licenses for rare earth exports out of China. What we've seen with the Trump-Xi discussions is there's a proposal to delay the October 9th announcements and controls by about 12 months. But we've not really seen any details around that. In the meantime, companies, and I talk to customers quite often, they are still required to obtain licenses. And so that process takes quite a while. Takes up to 45 days to apply for a license, and they only last for about 6 months. And so that's causing a lot of supply chain challenges with the supply of magnets into many different applications and customers. And so we'll see what happens over the coming weeks. But I think what's clear is that the licensing system that's being put in place is probably not going to go away. It's going to be here to stay.
And Jonathan, how has China's latest move changed the conversation around alternative opportunities and alternative materials like Niron's rare earth-free magnets?
Yeah, we've seen a step change back in April and another step change again in interest from both customers and investors. We developed our technology over the last decade. The genesis of Niron was a Department of Energy research grant here at the University of Minnesota, and that was a genesis of Niron. Over that time, we've really developed and perfected the science around our iron nitride technology, and we're now in the right time, the right place to scale that technology and bring that to market and do our part here to solve the magnet crisis that we're in the US and the West.
Yeah, I mean, obviously it's great to see something like this as to what you're doing. I'm just wondering, broadly speaking, when we look across the US and the industry as a whole, what are you seeing as far as progress on, just the wake-up call that the US has had to try to look at this more sort of strategically to try to secure their own supply chains to really take on the hegemony that we've seen by China over the decades? Where do you see the US up to right now with all this talk of equity stakes, etc., as to sort of how far along the US is and how much work there needs to still be done here?
Yeah, we're going to need all the solutions, right? So we've seen the government taking equity stakes and investing in rare earth companies and critical mineral supply chain companies here in the US. And we're going to see that continue. We need all of the above solutions. The amount of magnets in the world needs to triple in the next 10 years. There was only ever enough rare earths being actively mined for it to double. And so this is always going to be a supply-demand imbalance. And so at Niron, we offer, the solution here where we don't just reduce our reliance on China, we eliminate it. We use iron and nitrogen as our raw material feedstocks, and we completely domestically source those. And so we can eliminate the reliance on China. And so we're going to need all of these solutions to solve the crisis that we're in right now. We need a reliable, stable supply of magnets because the world really runs.
Price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
You do good job, Kevin Green.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Retail earnings will be in focus tomorrow morning with a lot of eyes on Target. The big box retailer is expected adjusted EPS of $1.76 on revenue of $25.36 billion. There has not been a lot of good news around Target over the last year, as multiple analysts, including Telsey and Bank of America, expect another quarter of slowing sales. Shares have fallen more than 30% so far on the year. And of course, in advance of their earnings, Target is our focus for Options Corner today. Joining us in studio, Alex Coffey, co-host of Next Gen Investing, to help walk us through Target ahead of their earnings and some of the notable action we're seeing. You know, like I mentioned, the setup for their earnings, not particularly positive. They've missed consensus EPS estimates 3 of the last 4 quarterly reports. So, you know, the setup not strong going in.
Yeah, and you start looking at some of the really kind of critical metrics like, you know, what's a 2-year stack same-store sales? Like trying to even be more favorable and the number's still negative. You look at same-store sales estimated at a -2%, brick and mortar at 3.3%, and then that 2-year stack at just under a 2% decline. And you start looking at the recent quarters, reports and how they fared. We're on a little bit of a year-over-year revenue decline streak. If it were to hit this number that's expected, it would be the 4th straight quarter of year-over-year revenue declines. It starts to explain the stock price performance.
Yeah, it certainly does. You know, and the expectation for the number that is being expected by the street would mark a 1.3% decline on revenue, almost a 5% decline on EPS. So, you know, it is a soft performance is what's expected here. But, you know, we have seen companies where the bar has been low and they have moved to the upside.
Yeah, no doubt about that. And you start looking then, if you kind of compare this then, okay, how do we merge the fundamental analysis with the technical analysis to try to draw, you know, a picture of what could happen? Well, you start thinking about the performance around earnings. Well, this stock's been down 4 quarters in a row post-earnings. It's been down 5 of the last 6 times around earnings, but we are near the recent lows in trading. So if you were to look at the first chart that I brought, kind of painting the picture, a lot of this shouldn't be a surprise. Some of the trend information that I look at is like a 1-week EMA or 5-day versus the 1-month 21-day. And you have the 5-day below the 21-day. You have current price below both. Usually indication of more of a negative trend. Well, that ties into the fundamental analysis. And then for those who have seen me on the network over the years, I like to use visual references that we're familiar with. So I have a support line, a resistance line, and kind of a middle ground line. And it's using the stoplight colors, so red, yellow, green, to give us an idea there visually of what you might be looking for. Buyers may step in near those lows for the year around 86. The sort of middle ground lines around 91, and then up to the upside around 96 gets us back into some of that more trading activity where this stock has tried to make a run at a couple times. Again, this is only over the last 3 months though, so the stock's been a little bit more sideways to range bound, at least
17 more minutes.
Earnings last quarter. RSI kind of middle of the road, not to be surprised by. It's typical going into earnings as momentum typically slows down.
Yeah, and like you said, you've been a bit more range bound, but still year to date down more than 34%. We are barely trading off the lows, only $3 higher than the lows right now in the last 52 weeks. As we look at how it stacks up against some of its competitors, we've had this conversation a lot. What does Home Depot's earnings mean for Lowe's tomorrow? What does some of the other retailers reporting, some of the restaurants indicate about the consumer? We can't say that
Gina's ain't around no more.
But you look at this performance, and the question you were hoping you get the answer to is, hey, is this just maybe a sector-wide disappointing run? And the answer you get is not necessarily the case. The S&P over the last 3 months is up about 3%. The consumer discretionary sector of the S&P is down and really has turned lower over the last several trading sessions, over the last week and a half, 2 weeks. But it's down 1.5%. You look at Target then, which is represented by this kind of lime green line that we have there, 15% decline, and this is just over the last quarter. Yes, I know a lot of that is tied to the move the next day after earnings last time, but that was only a 6.2% decline, so it went lower after earnings, and it's continued that downwards trajectory ever since.
Yeah, still 9% on top of that. So, a significant move to the downside there. As far as the options activity that we're seeing in Target ahead of the earnings tomorrow, what are we seeing? Is it elevated in any way, or is just sort of generally soft performance not enough to move the needle here?
Yeah, definitely elevated in terms of volume. I know something that you and Rick talk about is the Sizzle Index, which is a 5-day average volume versus today, and it's 2.3 today, so it does say that there's elevated volume. Interestingly enough, though, almost a 1-to-1 slight tilt to puts, so a little bit more maybe hedging or bearish feeling around this particular stock going into earnings. It's 54,000 and some change calls traded versus 60,000 puts, so around 115,000 in total options traded on the session. But if we look at this chart I have on the screen, this will set us sort of where the market's expectations are for movement. And it basically sets us up for just over a 9% implied move based off of this week's expiration. And if you were to use that number, around 8.25 for a dollar figure, with the 88.75 current price, targets around 97 to the upside, and a 80.5. We can even round down to $80 to the downside for kind of a loose 1 standard deviation range. This is by no means a limit. It's just telling you where the option reasonably think that this is a range of outcomes that could happen. As far as this week's trading expiration, about 60% of those options I talked about 115,000 of them, actually were traded in this week's expiration, which is again not uncommon, especially in 2025, where there's this favorable for the short-term options durations and expirations. But it's always fun how it kind of lines up with what the market expectations are. By far the highest put strike that's trading is the 80 strike, although the highest put open interest coming into the day is still down at 70. The max pain line is at 90, so not unlike typical going into earnings. A relatively unchanged move is typically the most painful one to option holders, so 90 is the spot where the most options would expire worthless. Calls trading at 95, calls trading at 100, so there are still some bulls looking for a move around that expectation up towards 97 or so.
Yeah, that it's interesting you highlight.
We got a triple bottom here.
If we do move to the downside, that would be a new all-time low for Target. We would go into new low territory. Right now, their all-time low 85.36. Alex, thanks for being with us for Options Corner today. That's Alex Coffey, our senior equities contributor here on Schwab Network. And I do want to send it back to Sam in New York to find out who we'll be talking about for overlooked stocks today.
Thanks, Marley. Well, George Tillis has his eye on AIMA Sports. At
George.
Close. He'll break down the news and what you need to know about that coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start
Okay, here we
learning
go.
today.
I'm Jenny Horn. We go beyond
I'm Jenny Horny.
tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
6635s.
How's it going? First day, so. Sometimes, Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
God darn it.
Welcome back to Market on Close. I'm Sam Barnes, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. We're watching shares of Armour Sports rally today off the back of an earnings beat and raised guidance. So for that, I'm joined by George Tillis, as always, senior markets correspondent, to get us across this one. So what did the report card say, and what do you make of the action in the stock as far as the reaction is concerned, George?
Well, I think obviously the reaction in the stock is quite positive, and I think if you look at Amerisports, which actually has 3 different divisions, they have technical apparel, which includes Solomon brand, as well as their outdoor performance brand, Arc'teryx. But also, if you play tennis or racquetball, the Wilson brand is actually part of Amerisports in terms of their ball and racket sports divisions as well. But the stock, I looked at it, which IPO'd back in January of 2024. So it's been, almost a couple of years in terms of publicly traded. It's actually performed quite well if you consider some of the challenges that are going on in the apparel space, like Lululemon. That stock has been really underperforming in the last year. As well. Been another sort of serial underperformer, not just in the last year, but in the last 3 years. So there are some stocks out there and companies that are in the technical and sports apparel wear markets that are doing well, and this certainly is one of them. If you look at the report, there's a catalyst.
There it is right there.
They
Shoot.
did post an adjusted
Patience
profit of
would have waited on
33
that.
cents, which bested the estimates, which were around 25 cents. Compared to last year, that was actually 130% higher, approximately.
Well,
14 cents they published last year for the same quarter.
Oh
And
my
sales
God.
were, beating the estimates by 30 million, 1.76 billion, up also 30%.
I didn't have time to
Not
add.
necessarily their sports, performance brands like Wilson.
480.
It was actually their apparel brands. If you look at their outdoor performance brands, which include Solomon, up 36%. Their technical apparel brand, Arc'teryx, was up 31%. And with that said, the company also increased their guidance for the fiscal year. Meaningfully enough, they actually increased their EPS guidance from the midpoint from around 79.5 cents to 90 cents, as well as sales estimated to be in the high single to low double-digit teens % change for the fiscal year.
530.
Obviously a strong performance over in China, particularly across Asia Pacific, but the Chinese market being a real bright spot for them, which is interesting because you mentioned some of these other names like Lululemon and Nike, where they've also seen a strong performance in this key market that has managed to offset some of the weakness actually that we've seen here domestically in the US.
680.
I also noticed that Emir is actually owned by Anta, which is a Chinese company, I do believe, and this has sort of been, from my understanding, a bit of a beneficiary of a bit of a pullback in some of the US brands in China. So I'm just wondering, when you look across the space at some of the athleisure wear and some of the other brands as to what they've been doing here, I mean, how does it compare?
Well, I think first off, when it comes down to footwear, I think the footwear markets have been relatively competitive, particularly if you look at things like running and casual apparel. Nike seems to have lost its way, at least right now. If you look at On Holdings and Deckers, which has the Hoka brand, those brands have actually taken off. And I think if you look at Amerisports, Solomon is, of course, their footwear brand, their primary one, but they're not just a footwear company, where Nike generates most of their sales in footwear. I think in the apparel space, Nike has, really lagged, particularly in the women's apparel space. But if you look at Lululemon, they're facing a lot of competition from other brands out there in the athletic leisure space. So I think the recipe here is for Amerisports really comes down to right brands, right markets, and right marketing. If you look at the performance brands out there, there's a lot, but this company seems to be performing exceptionally well, generating estimated to be gross margin improvement. This is what the company denoted, 58% of sales above the 55.5% by at least a couple hundred basis points, or about 250 basis points. They're also expecting operating improvements, margin-wise expansion between 30 and 70 basis points, and that's important considering the company's net income margin is only about 3.5% of sales as of last year. So here we actually see just a slight improvement in operating margins create a gearing effect or a magnified effect in the underlying stock. So I think it comes down to the right marketing, right brands, and then of course tapping into the right markets. So Amerisports, for what it's worth, seems to be doing the right things to generate sales and of course becoming more profitable.
Yeah, it certainly is. And I mean, that chart that we just had up really tells us everything, doesn't it? I mean, that divergence between the performance here with this name compared to the Lulus and the Nikes of the world very much paints that picture. George, thank you so much for joining us today and breaking down that key name. I'll send things back over to Marley in Chicago.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Carl's Way is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab.
Schwab, a modern approach to wealth management.
We're back here on Market on Close. I'm Sam Vardas here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So there's just a few minutes left to go now in the session. So let's welcome in Kevin Green, as always, senior markets correspondent, to close out the session for the day. KG, we're off the
4 more minutes.
What levels are you looking at on the S&P 500?
Yeah, we were able to recover some of the losses from today, and actually we almost went from red to green for the S&P 500, but we have pulled back ever since. This is really the Mag 7 that's really pulling us down, and actually it's the semiconductor space as a whole. You can actually pinpoint it to that, with 60% of the stocks in the S&P 500 so far actually in the green, but we are looking at around the 66.
It's 6660.
The balance between that high and low is 38.2% Fibonacci retracement, so technically speaking, this would be a decent level for us to be able to close at this point in time. What you do not want to see is any type of reversal moving further and further towards that 6600-ish area, and then to the upside 6660. We kind of highlighted that earlier this morning here. So a little bit of an interesting development. If we actually look at a little bit of a longer time frame here, if you're looking at a 4-hour chart, we actually did see a pretty decent hammer candle taking place today. That's the first time that we've seen a decent hammer candle that would be, for the most part, actually bullish throughout this whole particular downturn. So maybe that's a bright spot for the bulls. We have NVIDIA earnings coming out.
Interesting, a hammer candle.
Volatility for NVIDIA options are relatively elevated. Volatility for the VIX is also elevated. We did cross that 25 level today. We rarely get above that and stay above that. So hopefully we do see a volatility crush after the earnings tomorrow, and then also maybe a little bit of a volatility crush after the open for the S&P 500 or for the markets tomorrow as well, as we do have VIX expiration. A lot of VIX options trading today in preparation of that, and as we see that type of rotation or this repositioning, especially for institutions, volatility is a little bit elevated here. They may be over hedging themselves because of the elevated volatility, and once we start seeing that actually crush to the downside, that could be conducive for equities moving higher here. So unfortunately, we still have this technical setup of a lower high, but I don't think all is lost as of yet. We got fairly close to a really key area of support. We were only about maybe 20 points away from it today. I think we're getting closer to the lows, and when you're looking at the S&P, hopefully we're able to kind of bounce back over the next couple of days.
Under the 63 though.
Over the next couple of days, it seems more favorable for a push higher than a push lower.
So KG, we're in this technical setup where we're setting these higher lows here, and now for a fourth straight losing session, which we're looking like we're going to have it based on where we are right now. That'll be our longest slide we've seen since August. As far as the setup and some of the other charts that you're usually keeping an eye on the day-to-day basis, what else is sticking out to you today?
Yeah, well, I think the dynamic is a little bit different, right? If we're looking at the price action, yes, it doesn't look that great. Obviously, it's because of more concentration risk for the S&P 500. But today, under the hood here, we have 52% of the stocks now in the S&P 500 in the green. You have the Russell actually in the green here today as well. And if you look at some of those risk-on trades, those high speculative, high beta trades, the Nebius of stocks and things of that nature, they're actually in the green. Oklo caught a bid today as well. That's usually not something that you would see in a continued downturn. I think you are seeing some buyers really trying to step in here. Unfortunately, we do have this dark cloud of NVIDIA earnings. It used to be a bright spot, but now it's kind of a dark cloud when it comes to earnings for NVIDIA. But I think that will pass. We'll focus on other things moving forward. But it's just a little bit odd that you are seeing market breadth expanding and a lot of those high risk, high beta names catching bids today. MP Materials also in the green, and us not being closer to a low in the S&P. I think that's kind of the
voice clean? Johnny, you got this? Yeah. Well, I am going to get out of here. And had a good day. We got a hammer here. I was kind of listening to Green talk there. We're under the 63s, the only thing that's bearish. It's the only thing that's really got me bearish right now. And we closed down here, so we got to break to 63 tomorrow before we come bullish. The top of that candle. And we got NVIDIA earnings coming out tomorrow, and everybody's counting on NVIDIA. So we pulled back this is 5 days now. 5 red days. We had one consolidated day, and we were holding to 63. Now we're under it. So I'm still going to play the way I'm playing, very defensive. But got to get a hold of a good watch list. Fat cats are getting their way, that's for sure, and I think the retail traders are following them right now. So I'm going to get out of here, and I'll catch you later. And I'm exhausted. I'm going to go get my little tan going and come back and just relax. So again, thanks a lot. Did anybody learn anything today? I did. Remind myself to look at that daily candle at the end of the day. Kind of get into the habit of that. Premiums are juiced up. Yeah, I'm going to start looking more at the end of the day candle and see and get some kind of memory of how they're bouncing. I think that was a good idea. Also had to cost average down, but I had a real good payday today by not giving up. Because it's just hard for me to give up. I've given up so many times and lost and lost and lost and lost and have like 10 or 12 losses a week. Now I only have 1 or 2. And today's were minimal. So it depends on time of day too, that momentum. It changes around. And again, thanks again.